That's what Trump really needs. You can't get it anywhere else. Soya they can get from anywhere else they want. But I suppose
you have alternate sources of protein as well.
And
nothing's going to happen if you stop soya.
And for China. And yeah, so that's the long and short of it. That's the big one this morning. Wait and watch as far as India is concerned. And yeah, I suppose that is the top global story. Trump has extended the tariff pause on China for another 90 days. Everything else remains the same. And an executive order was signed to this effect. U.S. markets, though, didn't respond much to that tariff pause with China. I think U.S. markets are now looking at a whole different set of indicators, if at all. So all key indices in the red overnight. Treasury yields have stayed steady ahead of key inflation data. The 10-year was at 4.38%. All eyes now on the June inflation report, which will come out later. CPI expected to increase 0.2% for the month, 2.8% for the year. Brent, meanwhile, is staying under the $67 level as all eyes on the Trump-Russia talks. So the next few days, it's a truncated week for us here in India, but it's going to be power-packed in that sense. The Alaska talks between Trump and Putin are going to be taking place on the 15th of August. Asian markets, meanwhile, have opened mixed. Nikkei hit an all-time high. Remember, the market was closed for trade, has come in and opened 2.5% up. Meanwhile, India implied still quite middling, muted, and that's the name of the game, right? Just about 30 points down. So we saw a very nice recovery yesterday, I must say. The closing recovery was heartening, came in well, and I think mutual fund data is the other big thing. And I know you're going to start with the trade recap, Alex, but the mutual fund data is telling us time and again that this core that we have built of a large investing population has changed the game in the way markets are moving.
Oh, you said it. 28,000 crore, more than that, of a systematic investment fund flow or plan flow. And the active equity category, yes, there were new fund offers to the extent of about 8,000, 9,000 crore rupees. But if you remove that, 32,000 plus crore rupees flowing into across the board, flexi cap, multi cap, mid cap, small cap, mid cap and small cap, over 11,000 crore rupees in 1 month. So therefore, it's across the board inflows into this. So it's good. You have a base that forms, right?
Just some small reminiscing. Back in 2017 was when the legendary investor Rakesh Jhunjhunwala predicted that in the next 5-10 years, you will see the course of Indian markets change because of the domestic investors. At that point of time, the SIP flows, MF flows were not the talk of town at all. He saw it way back then and predicted that this will happen, and it's what's happening right now.
Gross flows of 28,000 crores. So even if you say that 50% of that is going to be net, it's still 14,000 crore rupees.
When the Nifty is not given any returns for the last 12 months.
100%. And July was a horrible month. July was a horrible month.
We still have a few months to go. Let's see if the calendar year ends well. Having said that, I think COVID was also one big factor which made that paradigm shift. 100%. Nevertheless, yesterday was a good close.
It was a good close. Let's talk about the flows data. Domestic institutions once again buying to the extent of close to 6,000 crore rupees, and that number bears out in the kind of inflows that mutual funds have received in the month of July as well. Those remain strong. Bull staged a comeback in the best session for the Nifty 50 since June 26th. It's been a bit of a rough patch for the Nifty 50 and for the Indian equity market, so we're celebrating a 0.9% gain for the benchmark. It recouped Monday's losses, ended just shy of the 25,600 mark, and nearly all Nifty 50 stocks gained, led by Adani Enterprises, which gained close to 5%, Tata Motors, Eternal, all of them gained ground. You had HDFC Bank, Reliance Industries, SPI, L&T, and Eternal. These counters contributed nearly half of the gains of the benchmark Nifty 50. The broader markets underperformed but gained ground. You had the mid-cap index that was up about 0.7%, and the small-cap index less than 0.5%, but it was still positive. Most sectors gained, with the beaten down sectors in the recent past bouncing back. You had PSU banks that gained 2.2%, realty ended 1.9% higher, defense, auto, pharma, bank, all of them gained to close to 1% or more in trade yesterday. And that market breadth actually shifted during the course of the session and ended in favor of the advances, or more or less even Steven. So 9 advances for every 8 that declined. That's how it ended towards the end of the session. So I wonder if that is going to be the tone and tenor at the start today. It might have a muted opening though.
Yeah, I mean, and very difficult to call, right?
Yeah.
I mean, these days so difficult to call. I mean, we've been talking about how the factors are skewed for a bounce back, that long-short ratio from FIs or short-long, as you may want to call it these days, 92 to 8 or otherwise quant indicators saying, but nobody anticipated that up move yesterday. And therefore, whether it dies down today or no, I mean, who quite knows really? But and that's why I just thought I saw an interesting note from BofA, and that's why today, instead of trying to talk much about individual levels, because to an extent it will become pointless in such a market, I thought what they've written kind of resonated with how I would think, or a lot of people would think. So therefore, I'm actually presenting that instead of the trade setup today, because they say that they expect muted returns, and they advise investors to be nimble and rotate sectors for alpha, and this is so true. Usually you buy into mega trends and stay. This time around it might be difficult or different because a lot of sectors are getting hit because of tariffs or otherwise. The risk rewards though are skewed towards the downside. They see downside risk if higher tariffs at 25% to 50% sustain. And you know, if viewers, it takes you back to the conversation that we were having with Pranjul Bhandari yesterday, that if it's actually staying at the levels that it is, then the GDP growth might be sub 6%, but for both FY26 and FY27, and that might not give a fillip to earnings growth for sure. They say the risk reward for FIs is still unfavorable. Do not see revival of FI flows. And here, viewers, what you are doing, which is putting in money in the markets, actually steadies the market and sets the stage for good returns over a period of time, right? You actually want to buy as much as you can while the markets are low. That is the beauty of an SIP. And the other piece that they say, which is very interesting, I thought, that one, of course, that the small caps and mid caps are overvalued, but they see some pockets of opportunities. That is one. And this is the second large brokerage which has moved the IT sector from underweight to overweight. I mean, somebody's moved it to a buy from a sell. Their rating is underweight, overweight. So they have moved IT sector from underweight to overweight and utilities from underweight to neutral. But IT is that big change in that portfolio. Should be interesting to see what happens, not because of the BofA note, but to IT over a period of time in the next 2 months. And they see pockets of opportunities now within building materials, auto components, and travel tourism. So well, if you like the BofA strategy and BofA thinking, then maybe look at some of these sectors as well.
And I think BofA doesn't unnecessarily tend to be optimistic as well. They are
quite skewed to the downside.
Yeah, they're quite cautious. So I would just add that one layer if you want to look at this. They're fairly conservative in saying that things are turning around. Goldman Sachs also is looking at a revival. So I think just to add to that good news outlook, at least today, they say that a mass consumption revival is underway. They're seeing first signs of mass consumption. Consumption revival likely to build up over FY26-27. They say we prefer companies with bottom-up drivers. They see a steady recovery in private consumption. Peak growth drag from credit tightening is in the past. A sustained rural and lower income recovery is being seen. Rural and lower income urban recovery to have more legs. Urban consumption demand will be mixed. Gradual improvement on easier financial conditions. So this revival, of course, they say is after a long hiatus and will drive revenue growth acceleration for many companies. So I think that's some reprieve coming in. But when it comes to today and what markets are looking like today, it's been a sustained period of losses. The Nifty, though, showed a remarkable reversal of sentiment on Monday afternoon. The benchmark rallied strongly, recovering all of Friday's losses. Strong performance has come in after 6 consecutive weeks of decline, which shows a potential bottom reversal and a short-term positive trend. But confirmation is needed through sustained buying. Markets will likely remain in a consolidation phase with a bullish bias unless the index can decisively break and sustain above crucial resistance zones of 24,800 to 24,850. Resistance immediate hurdle at 24,650. Support immediate one at 24,330. Below that, the 200-day EMA at 24,200 acts as a strong support level. For the Bank Nifty, resistance main levels at 55,590, 55,750, 55,995. Support at 55,090, 54,940, 54,690. 100-day EMA around the 55,000 level is a crucial support to watch. So look out for some of those levels. Meanwhile, let's go across to Puneet and see what the setup is for the derivative space.
Well, thank you for that. So definitely a very stellar recovery in the Nifty yesterday. We touched 24,600 and then saw some selling, but still very close at 24,585, and that does bode well for the market, at least in the short term. If we can continue to see that level, and essentially we will need a break point from this level to cross 24,600 for a sustained breakout going forward. But definitely a key positive on the Nifty 50. When you look at the Nifty Bank as well, here again we've seen that we have seen essentially a lack of a key pivot for the Bank Nifty to go across these levels. It has been at the lower end of the 2,000 point range that we've been maintaining, and any kind of decisive move seems distant as of now. There seems to be a trigger missing essentially, and that'll have to come in at least either from the RBI or amongst other factors. But currently it is missing post the earnings season as well. In terms of fund flow pictures, FIs have continued to put pressure on the markets with maintaining a largely short positions. Because of that, the index long right now, it was hovering around 8% and still there again, because so it does indicate the sustained pressure in the markets because of foreign investors maintaining a short position. 9 out of 10 positions still are short. The net OI PCR because of that is slightly above the one range, but largely neutral, at least for the foreign investors. For the market, it continues to be around 0.7 to 0.8 times. When you finally look at the open interest distribution, the calls have been sustained at 25,000, and that's a key level that we've been watching out for. 24,500 has seen sustained pressure on the put side, while 24,400 is the other ones for the puts where they've seen an increased open interest. Finally, in terms of stocks, open interest gainers and losers. First, in terms of OI change, PG Electroplast down 30% over the last 2 days post its quarterly earnings. The OI change is 84%. It's going to be interesting to watch what happens with the stock today. The other ones are somewhere like Amber Enterprises are likely impacted because of PG Electroplast, seeing some short build up as well. And finally, open interest losers to end the list. We've seen short coverings across a bunch of stocks. SBI post earnings, Dani Total, Keynes Tech as well, seeing some short covering in this particular time frame. So definitely for the Nifty, a key one to watch out for today. We can close about 24,600 and sustain the level in this week. That'll be one of the key positives.
Okay, you're moving towards a flattish opening as far as implied is concerned as well. I wonder if you'll see a turnaround in PG Electroplast because high delivery coming in and 2 days, 2 sessions of complete battering. So we'll watch out for that.
14% yesterday, oh my God.
Before that, Friday, I think another 20%.
20%.
So I wonder if
No, we
there is a
spoke to the
bottom there.
management yesterday, Tamanna, Neeraj, and I actually asked him, will the promoters step in at this point? Because usually when there is such a big crack, and he said, look, we've been in the business for 25 plus years, and if required, we will step in, and we're confident about the growth going forward. He didn't really talk about an improvement, but he said we're hoping for a second summer, which I think is interesting, right?
Wow. But if your business is hinging its hopes on global warming and climate change, I don't know.
No, I mean, the multiples had gone
The world is really hot, though, I must say. Japan is 41 degrees, Europe is hot, Russia is on outwards of 20.
I have a feeling you've been looking up holiday destinations.
No.
Temperature.
Holidays for 2025 are over and behind me.
Okay.
I'm right here on this anchoring table.
Oh, superb. This is where the party is. Let's get the stocks on for this morning. Talking about Hindalco, their results, of course, are going to come, but Novelis, which is a big chunk of their revenues, has reported. So for Novelis, revenues were up about 2.83% at $4,717 million. So a slight uptick there. EBITDA was down 30% at 361 million. Margins down about 7.5-8%, and profits down 67%. Now, analysts expect as a result Hindalco's Q1 to also decline due to the impact of US tariffs on Novelis. So 2 things playing out for Novelis. The US tariffs definitely playing out. They also had a huge flooding in their San Francisco facility. That has been a pain point. You're seeing the revenues go up because aluminum prices had also spiked. So you might see some pain for Hindalco as well. Here's what Investec is saying. They've maintained a hold. They've cut the target price to 705 rupees. I'm talking about Hindalco now. So think of this as Novelis' impact on Hindalco. It accounts for 60% of their revenue. So you have Macquarie, Investec coming in with a 705 rupee target price. They say tariff headwinds are here. Novelis Q1 FY26 spreads disappointed. expect more of the same. Management highlights the Q1 absolute EBITDA to have bottomed out. That means it could get better from here. Multiple headwinds and no concessions under MCA as yet make it an unfavorable mix. So they have trimmed the spreads they expect for Novelis. Citi has maintained a buy on Hindalco Novelis with a target price of 800 rupees. They say the Q1 was hurt by tariffs. Mix mitigation efforts are ongoing. Q1 EBITDA could be close to the bottom. Management does not expect Q2 to be much worse. So you have to look at the stock if you want to have a long-term view. And if you're buying into what the management is saying, that this is the worst, then this is something you could look at, but you could see some pressure today. Tilak Nagar Industries is the other one on my list, and this is a clear thumbs up. Revenue has risen 30.6% to 409 crores. EBIT is also up 88%. Margins are looking robust. The company will expand its Prague distillery as well from 6 lakh to 36 lakh cases per year with a capital expenditure of 25 crores. So this is another strong one. For KNR Construction, you have revenue which has declined for the third straight quarter. So that's a thumbs down coming in. This is despite margin expansion. There are higher finance costs weighing in on profitability. Net working capital has increased to 169 days versus 93 days last quarter. Order book at 8,305 crores. Book to bill ratio at 1.74 times. So a tough quarter for KNR. So I have 2 thumbs down and 1 thumbs up. Tilak Nagar is the only one. So this is one space, and I think Som Distilleries also was pretty decent. I haven't taken that stock, but this is one space which relatively seems okay. So cheers to that.
Yeah, cheers to that. Unfortunately, I have to start with a bit of a downer. And if you thought Praj Industries in the fourth quarter was a bit of a disappointment, some charitable arguments could have been made at that point that there was a high base of the year ago period. But there's no way that you can sugarcoat these numbers. And take a look at my takeaways, and we'll discuss the numbers as well. Top line declined to the lowest in over 3 financial years. The order book has grown, but only by about 4% on a sequential basis, 10% year on year, 4,448 crore rupees. The order inflow during the quarter stood at 795 crore rupees, but execution seems to be the issue. There's a sharp margin and profit contraction that was seen. The bioenergy revenue, which is their primary business, has fallen by as much as 24% on a year-on-year basis. What have they said? And this is what they've said in their investor presentation. They saw a drop in volume in domestic ethanol business, and that drop is on account of delayed execution cycles and liquidity crunch at the customer's end. They've also seen delayed execution of high-value engineering orders at Kandla. And that Kandla delay has led to higher labor and infra expenses. Beyond this, they also spoke about their Gen X business, in which they're not seeing revenues, but there are overheads. All of that has pointed to the fact that the top line is down 8.4% on a consolidated basis, and the net profit has actually halved or close to halved. No, actually significantly more than that, actually. It's down to 5.3 crore rupees from 84 crore rupees. The EBITDA is down 59%. The margin is just about 5.5% compared with 12.4%. So expect there to be a reaction on this one. It could well be the accident of the day. Office Space Solutions looks good based on the numbers, and further improvement in the margins that have come in. The margin improvement is seen consistently since the fourth quarter of FY24. Every quarter they've posted a better margin. The employee cost as a percentage of sales has actually dropped from 15.2% to 8.85%. Of course, beyond the EBITDA, there is an increase in the interest cost that has had a bearing on the PAT number, which is still grown quite considerably to 9.9 crore rupees from 2.7 crore rupees. So all told, good numbers. Actually, Glasscoat, another small cap in the heat transfer and the glass space for the pharmaceutical industry. They've seen a decent top line growth, 25%. Margin improvement, significant margin improvement on a year-on-year basis. Order book has stood at nearly 740 crore rupees. And the only thing that you will say about this, and I'll get to the numbers in just a bit, is that the operational performance may be in the price because the stock is up over 50% in the last 3 months. Revenue increase of 25%, PAT increase quite considerably to 14.8 crore rupees from 3.4 crore rupees. All told, good set of numbers. Margins improving to 13.3 from 9.6.
Yeah, actually, there are fair degree of good numbers at the broader end of the spectrum today. So it was actually a good thing to go through that entire list of names. So I actually have two positives and one negative. So I'll start off with the good one. And decent numbers from Goldium. Revenues were up 38%. Margins slipped a bit, about 40 basis points at 17.9 versus 18.3. But the bottom line numbers looked solid too at about 53%. And then I was going through what they've said in the call and the presentation. So the lab-grown diamond jewelry comprised about 88% of their overall sales in Q1 FY26. They are really going lock, stock, barrel behind that piece. And in fact, for the margins as well in the con call, they've said that due to the recent US import tariffs, Q1 and potentially Q2 could see margins softer by 2 to 3 percentage points, but they expect normalization from Q3 as costs are passed on to customers. Now, this, viewers, I think remains to be seen, because I think if there is 50%, then difficult to pass on those costs. So I think what happens on the tariff discussion could well hold the sway for how do this or any other jewelry company's margins behave. So be mindful of that. But the numbers look okay. The only thing that I would say is for textile and jewelry companies, some textile companies are also reporting good numbers. Just be mindful of reacting heavily on the Q1 numbers, because Q2 or Q3, depending on how the tariff talks go between India and the US, could be materially different too. So be mindful of that. Travel food services, actually not bad from a operational perspective. So revenues were down about 8.5%. You would question that, but the margin performance looked rock solid, 39% versus 24.9%. That's stellar expansion of margins, and net profit up 66% at 91 crores versus 55 crores. So remember, passenger traffic grew just 4.5%. It was not showing in the hotel companies, but it's showing in this one for sure. It did show in GMR Airports numbers as well, that passenger traffic did get impacted because of the May lull, if you will. But they are working on some 70 new outlets under design and construction, including the Navi Mumbai and Noida airports. They are the largest airport QSR company, if you will. So could be interesting. Lastly, Astral. Now, you would reckon that there are two ways to look at these numbers. Well, actually, the numbers are bad. So there's only one way to look at the numbers. Revenues were down 1.6%, margins corrected, net profit down 33%. And all of this happened because average PVC prices dropped 14% in Q1, and these companies effectively, as we discussed the other day on the show, PVC prices determine what happens to these companies' fortunes, not actually the fundamental performance in a lot of ways. But they have gone ahead and said, and this is why I said it's difficult to kind of call this, because the piping division volume growth in July was 30%. Adhesives division in India showed about a 30% value growth as well in July. So July has actually started off well, but the quarterly numbers were bad. So difficult to call how this one might do. So interesting set of names in today's session.
Yeah, a lot of action on the primary market front as well.
Big listing today, yeah?
Yeah, so listings today, and you have a new issue opening as well. So Highways is not the biggest listing, I would say.
Just the number of, I think it got subscribed some 300
several times, yeah,
right?
so smaller size
130
as well.
Crores, yeah.
But yeah, so that's one to watch out. But you have Regal Resources that opens today. The issue opens today, price band at 96 to 102 rupees. It's for a size of 306 crores, out of which 210 crores is a fresh issue. The rest is an offer for sale. Anchor investors have already put in about 92 crores. JSW closed on August 11th. Total subscription was a little shy of 8 times. Institutional was 15.8, non-institutional 10.97. Retail participation was a little dismal for JSW Cement, and all the grey market price chatter seems to say that there's a bit of a concern, maybe because of losses on the books that have been seen. I mean, the pedigree and all of that is there, but I'm not so sure if JSW Cement is going to make the splash that was initially thought. All-time plastics also closed on August 11th. Total subscription 8.34 times, institutional about 10 times, non-institutional 13.47 times, retail 5 times odd. Highway infrastructure lists today. So that's an issue price of 70. IPO size 130 crores. And that was the one you were talking about, Neeraj. 316 times was the total subscription for it. So that's what you need to watch out for. Plus institutional at 432 times. So having said that, the IPO size is not the biggest at 130 crores in this market, but even retail participants came in at 164 times. So I thought that was interesting to see.
You know, the other thing, just so soon after the monetary policy review and the pause by the Reserve Bank of India that we look forward to is the data release on CPI. And the fact that it's likely to dip to a multi-month low. It was already a 77-month low in June at 2.1%. It's going to decline further. The poll suggests that it will come in at 1.4% in the month of July. In fact, if in line with forecast, the inflation is set to fall to a series low in July. Series low, forget a multi-month low, lowest ever. It's expected to decline despite that sequential uptick in vegetable prices. Core CPI, by the way, expected to remain range-bound. This is something that the RBI governor had already spoken about in the monetary policy review last week, where he said that inflation is likely to trend upwards to the end of the year. So this is par for the course. This is expected. And let's see when the numbers come out this evening. We have to slip into a very quick break. There's more on the other side. We'll talk about stocks that you should watch out for and keep on your radar beyond what we've spoken about so far. So do stay tuned.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर जय जवान जय हिंद जय हिंद
हेलो बोलिए मैडम डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको हम और आप तो जन्म भी नहीं हुआ था हमारा
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ कौन सा गलत काम कर रहा हूँ मैं
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about
Welcome back. You're watching India Market Open. The realty space is one to watch because there is a little bit of a divergent trend that is coming through. A recent report by JLL Research points towards a dip in residential sales, and this is despite new entrants like DLF in Mumbai and reports of luxury sales going through the roof, prices as well going through the roof in certain circles. What's happening and what are some of the key concerns? Anushi joining in with all of those details. Anushi?
Well, thanks for that, Alex. So, as you pointed out, we are just doing a reality check of realty, and this is on the basis of this increasing price realizations that we are looking at over the course of these years, which has also led to a decline in terms of how the volumes are fared out. In fact, if you look at the first half across the top 7 cities, what we are seeing is a dip in sales volume, and this is in double digits that we are seeing. Bengaluru, Delhi, NCR leading the charts, so we are seeing a 15% of a dip. In fact, even in MMR, that's a key region that we are watching out for, has also seen about a 15% of a downtick in terms of how the sales volume have been. Kolkata also seeing a 29% of a dip. So this is a culmination of various factors that we are looking at, and what has led to this sales volume dip is something that we should be watching out for. Firstly, rising prices are affecting the demand, particularly what we have seen in the NCR and the Bangalore regions. Other than that, we are also looking at higher construction costs across the industry, which is also squeezing the margins in terms of how the launches are also accelerating going forward. Now, there have been fewer launches also, as well as considered by the big developers that we are looking at, and this is also due to some of that inventory build-up concerns on basis of these higher price realizations that we are looking at. So in fact, if we see just the ticket sizes, 2 to 5 crore of ticket sizes have seen about increase in 52% of unsold inventories, and this is as of the first half of 2025 that we are looking at. So these are some of the key concerns emerging. But other than that, let's also take a check of the pricing growth. Now, as we emphasized earlier, that pricing growth is somewhat a concern going forward. In fact, in NCR and Bangalore, we have seen about a 14% of increase in terms of how pricing has been, because of which even the unsold inventories in these particular regions have increased. In fact, if we look at Mumbai also, we are seeing at an 8% of an uptick, Hyderabad 11%. So now the overall industry believes that these double-digit growth in terms of how pricing has been will narrow down to a single digit of growth that we are looking at. So with this pricing growth, we should also look at how unsold inventories are in contact with this. So if you look at high ticket segments in H1 of FY25, we have seen a significant uptick in terms of unsold inventories. While in the earlier quarters, we did point out that unsold inventory levels have remained at quarters low. In the first half, that is not a scenario that we should be watching out for. In fact, if you look at 2 to 5 crore of ticket sizes, 52% of an uptick. Even in the luxury segments, 20 to 50 crore, we are looking at a 37% of a rise in terms of how the unsold inventories are seeing. So what does these unsold inventories increasing indicate? Firstly, it shows that supply levels are now increasing compared to the sales velocity which is there. This also points out that market may be at cusp of a correction going forward in terms of how launches would be, and even the buyer sentiment, if you look at, will continue to remain conservative on basis of this. Quickly walking through how real estate companies' volume have fared out, we are seeing a decrease in terms of south-based players as well. In fact, even in the NCR regions and MMR regions that we are looking at. So this is the overall picture that we are building out for how the first quarter results have also fared out for the companies.
All right, thank you for that comprehensive piece, Anushi. Gulam Zia joining us this morning, Senior Executive Director at Knight Frank, to speak more about it. Also joined by Ronald Sioni, Research Analyst at ICICI Securities. Welcome to both of you, and thank you so much for coming in. Now, Gulam, this is setting up, and very good morning to you. This is setting up to be a bit of an undesirable combination of higher unsold inventory, increasing supply, and prices also increasing while houses are not going at the same rate.
Good morning, Tamanna. Thank you so much for calling me. Always a pleasure to talk to you, Tamanna. The point here is, while the inventories are slightly, going higher, and the sales numbers are not very satisfactory, but we have to also look at the velocity of sales. That's one factor which not many of them have been talking about. The velocities have been pretty much steady. When we are looking at it, the amount, the time required to sell for the selling of the entire inventory in the market, even today, is not more than 2.5 years, which gives a comfort that bad times are not yet around the corner. So when we are talking these numbers, we have to look at also how quick are these inventories going off the shelf. And that number, of course, it varies from city to city. Like up north, perhaps in NCR, it is actually some worrisome situation arising out of NCR. Even Bengaluru is going a little shaky. However, the other markets are nothing to worry about. And that's where net Mumbai also, while we are talking about the transactions slowing down, but the IGR, which is the registration data month on month, is perhaps going absolutely neck to neck YOY. Even in the month of July, when we're looking at the transactions that we've recorded, it's actually upwards of 12,000 recorded transactions in Mumbai, which was very similar to what it was in July of 2024. So my only point here, Tamanna, is that while numbers are looking a little slowing down, however, we have to look at a couple of more quarters before convincingly saying that the slowdown is here to stay. Otherwise, it could still be just one more blip in the data that we have been observing. Over to you, Tamanna.
Okay, so that's an interesting perspective. Ghulam, morning to you. Ronald, I'll come to you on this one. Do you have a slightly different interpretation of the data that you've seen so far? Do you anticipate that the pricing increase that we've seen in the very recent past in certain micro markets has gone a little too far, and perhaps that's going to curtail demand in the near term? Or do you think that festive season demand will once again push things forward?
Yeah, good morning and thank you for having me on the show. So first of all, the listed space, had already conveyed the message that this year, is not going to be like a couple of years past. We have seen a phenomenal growth in pre-sales number. This year, as a high base effect comes up, so it would be around 10 to 15% of the larger players growth in pre-sales. So they have been, looking at the data and they see that, pricing environment, the prices have increased over the last couple of years and significantly in some regions like NCR. And hence, the pricing outlook is not very, very positive. A single to, lower double digit kind of pricing outlook is there, while the play would be on volumes. And this companies, companies like DLF, Oberoi, or say Godrej Properties have learned over the past cycle. They have have selected good pockets in a particular regions, and they are getting phenomenal response in even in Q1 of FY26. So we have seen DLF clocking more than 11,000 crore sales in Privana North. We have seen DLF's Mumbai launch, West Park at Andheri doing phenomenally well. Hence, the overall market, still on the new launches, they have seen a very, very good absorption and at a very quick pace. However, sustenance sales, the projects which were launched much earlier, they are seeing a slower traction, we can say. But these companies, have upcoming launches more towards the H2 of FY26. And hence, we should expect good traction in H2 FY26.
But Ronald, Ronald, very quick question. One is to look at FY26 alone, and one is to look at over a 2-year period. Could this actually slow down volume plus value growth combined over a 2-year period, also considering the fact that the base is high, and will the market discount it earlier?
So market, I think, has already discounted it, and I think this is the 4th or 5th year of the upcycle, and hence, the base would catch up, and it is going to catch up. There is no doubt about it. But here, one thing is to be noticed is that even despite the base getting catch up, such a high pre-sales trajectory, if they are able to maintain for a longer period of time, say 2 to 3 years, it is much more positive, compared to the last reality cycle. And if you see the RERA cash, which would be available for these companies over the next 4 to 5 years, considering the strong launches and pre-sales booking they have been doing over the past 2 to 3 years, that, provides a lot of growth avenues, stronger balance sheet for these companies. And hence, I think they shouldn't be worried about, if somewhere down the line, if sales in the residential starts, tapering off. Because they have also started to invest in commercial assets.
Which are the companies that are most shock-proof right now if there is a downtrend? Ghulam Zia said bad times are not around the corner yet, but there seems to be, smoke signals that you can see. Who is the most resilient? What is the stock-specific play right now in this space?
So, we are looking at much stronger companies with having a quality balance sheets like DLF, Oberoi Realty, then, Max Estates in smaller mid-cap space. Then we have Aditya Birla Real Estate. So this all Arvind Smart Spaces. So these all companies, have much more sturdier balance sheet and can ride through the tough times, even if it's 2 to 3 years down the line. And they have future proofing their, earnings with, improving their commercial assets. They are investing in commercial assets. Where we are seeing, a lot of interest from GCC countries. So they are, providing they are looking at getting a continuous annuity stream or income from these commercial assets, which should ride during the tough times. So they have become a lot smarter, compared to the previous cycle which we have seen.
Okay, so even if it's 2-3 years down the line, I don't know if it's 2-3 years down the line, but stick with the ones with a steady balance sheet. Thank you so much, Ghulam and Ronald, for speaking with us this morning. Let's get in Chandan Taparia of MOFSL, Sunny Agarwal of SBI Cap Securities for our fundamental and technical view on the markets. Very good morning to both of you. Chandan, let me begin with you. What a smart recovery as we closed markets yesterday. Do you see that sustaining?
Good morning, Tamanna. Thanks for having me. So I think after a long time, bulls are back and they managed to hold the market at higher zone of the trading band. However, the index is still making lower top, lower bottom on the weekly chart. But so many data setup are indicating for short-term bottom in the market. However, that will depend on the Trump tantrum. But as of the technical, the way market is formed a bullish candle with buying interest in many heavyweights counter, I believe some recovery could be there. However, follow-ups required because in last almost 25-30 days, multiple times market formed a bullish candle, but follow-up was missing. But there are high chances that today follow-up may happen, and I believe follow-up could drive the market to next leg of rally. So as of now, 24,442 is an important support. And we have noticed that in last three trading session, market has been holding well above key support of 24,350. But 24,442 is an important level which used to work as a key level in last 2-3 months. So I believe if market manages to hold above the same, then index can recover towards 24,750 to 24,800. In that scenario, it will negate the lower top, lower bottom and might see some recovery. The good part is that put call ratio of Nifty has seen a massive surge to 1.05, which clearly indicates that put writing is visible. So that's why expecting some recovery in the market. Similarly, in the bank Nifty, it managed to recover by 500 points, now needs to hold above 55,250 for a short covering trigger towards 56,000 to 56,350 marks.
That's the view on the benchmark, and you've also spoken about the bank. But I do want to ask you, Chandan, what specifically would you buy today? And good morning to you, and good morning to Sunny as well.
So, Alex, positive on the PSU bank. I believe PSU banks have bottomed out. And in fact, if someone is looking for slightly bigger or longer time frame, or let's say 1 month to 3 months kind of horizon, can go with the ETF of the PSU banks, because expecting 10 to 15% kind of runoff in most of the banking name. So we have positive stance in counter like State Bank of India, even Indian Bank and Bank of Baroda, Canara Bank. I believe upcoming RBI policy or MPC policy might be a major trigger. But as of now, I'm recommending to buy on Indian Bank. One of the strongest PSU counter, which has given a breakout on the daily and the weekly chart with surge in the open interest and the trading volume activity. Technically, it formed a bullish pole and flag pattern, which has the potential for further 5 to 8% rally. So recommending to buy on Indian Bank with a stop loss of 663, and this stock can head towards 700 kind of level. Apart from PSU Bank, second sector will be on radar like news and business. So positive view on the counter like Paytm, Eternal, or like Policy Bazaar. So most of these stocks are forming higher top, higher bottom. Even at the time of market decline, most of the counter were holding and resilience, which clearly indicates the outperformance nature of these stocks. So Paytm could be one preferred name. A fantastic price pattern with significant surge in the trading and the delivery volume indicate the momentum could be seen here. And I believe re-rating is clearly seen in the counter with fresh leg of rally in the stock. So one can buy with support of 1096, and Paytm Karo can head to us 1165 marks.
Okay, interesting. And Paytm, you recollect, viewers, it was at this 1080, 1100 level when the results came out, and the results were a departure from the normal. So it's kind of held its own despite all of this turmoil. Sunny Agarwal of SBI Cap Securities with us as well. Sunny, no one can predict the market these days. I wouldn't want you to do that. So let's talk about some of the telltale names, right? We've discussed about cement a long time. We were just this morning looking at the results of some of the alcohol beverage companies. And there too, there seems to be some traction there. Allied Blenders was good. Tilak Nagar was good. Have you looked at the results of that bucket this quarter? Are you enthused by those results? What do you like there, if so?
Yeah, definitely. Good morning, Neeraj, first of all, and thanks for having me on the show. I think the alcohol and alcoholic beverages space, in terms of numbers, are doing pretty well. So Tilaknagar yesterday reported a very strong set of numbers. Even X of subsidies, which the Tilaknagar has received, we have seen 17%, 18% kind of jump in EBITDA. And one clear trend which is visible amongst all the alcoholic beverage companies, the shift in product mix towards a premium portfolio, and that is aiding a margin expansion for all these companies. And at the same time, for a few companies like Allied Blender, the IPO issue, the fund mobilized through IPO is helping them to deleverage the balance sheet. That is aiding the profit growth. So I think again the entire industry is in sweet spot. Delivering healthy volume growth backed by shift in product mix towards a premium portfolio, and that is aiding in earning as well as margin expansion. So again, we continue to remain constructive on the alcoholic beverage space. As discussed earlier, I think again the two names which we are discussing currently, Tilaknagar and Allied Blender, continue to remain our top pick amongst the alcoholic beverage space. One company which we like is United Breweries Limited, although it's a signal business, but and trading at an expensive valuation. But we believe that the kind of growth potential which the company have still we believe can command a relatively expensive valuation. So United Breweries is one stock which we are recommending to our client only.
Okay. All right. So UBL to watch out for as well. But let's get to that part of the morning where we tell you what the dealing room buzz is, all of the chatter coming in and everything that we have heard on the streets. Amit Sarkar joining for that.
Multiple stocks that remain in. Good morning, Alex. Multiple stocks remain in focus. Firstly, it's NTPC and Power Grid, and dealers are indicating that there are buy flows on institutional desk in trade today. Both foreign and DI institutions have been buying this counter because valuations are cheap, and they believe that both these counters offer a safe and a stable income bet amid the current market volatility that we are seeing. When it comes to Asian Energy, dealers are indicating buy flows on large HNI desk on anticipation of a new order win announcement that could come in. For Ashapura Minechem, that stock had hit an upper circuit of 5% yesterday in trade, and dealers are indicating that a large prominent investor was a buyer in trade yesterday. For Engineers India and Titagar, HNIs were buying Engineers India on expectation of strong Q1 numbers, and Titagar they were selling. And yes, Titagar has come out with a very poor set of numbers. In fact, it has missed analyst estimates by around 20-25% on the EBITDA and the revenue front. So keep an eye out for Titagar raid. For Tata Motors, dealers were indicating that there were buy flows on institutional desk and they believe that the worst is over, or worst is priced in for Tata Motors currently. And when it comes to PG Electroplast, dealers were indicating that the sell flows were most likely done yesterday, so we could see a bounce back in this counter. This counter has been under pressure. In fact, it has been under immense pressure for the last couple of trading sessions, so keep an eye out for PG Electroplast as well. Also, the stock is now in FNO ban, PG Electroplast, and MediAssist block is there today. So I guess the floor price is around 507, but what dealers are indicating that the deal might get done at a higher price, around 510, 515 is what dealers are indicating, and multiple mutual funds have shown interest. To name few, Kotak, ICICI Pru, HDFC, Edelweiss, Birla, all have shown interest when it comes to this block that has come in from the promoter side, and deal most likely will get done at a higher price.
You know, this is interesting simply because 15.67% of the equity being absorbed and done at a higher price is quite something. Yeah. Because it's not, I mean, it may be a small company, but the size of the equity offering is very high. And therefore, that is very interesting.
You know what has also happened is, this was something that Nirav Sheth was telling us today, the rise of the family offices and PMS, where these large blocks get absorbed like a sponge.
And FIs are not getting a chance to participate because उनको हवा ही नहीं है.
हाँ, उनके पता चलने के पहले it's
and
done.
Mutual funds also have so much ammo now to just absorb.
But they're not showing in the cash markets though. The implied has moved into the green. Thank you, Sumit, so much for that. Implied has moved into the green at this point, but let's take a look at some of the other stocks that are in focus. And Sunny, I want to come to you on Hindalco. Numbers are set to come. We saw a sneak peek of what's happened with Novelis. Clearly, tariff hits are already showing on Novelis. How would you look at a Hindalco this morning?
Yeah, I think, yes, Novelis has disappointed on the numbers. So we have seen a 17% YOY dip as far as EBITDA per ton is concerned. And again, that was predominantly led a bit due to the increase in change in product mix and increase in prices of scrap, and to some extent impact of tariff which the Novelis has alluded to. But one has to keep in mind that the aluminum prices continue to remain at a pretty steady level, close to $2,600 to the ton, and that's I think is a positive sign as far as the entire aluminum industry is concerned. Today, definitely we can have some knee-jerk minor negative reaction because of this Novelis number, but I think the outlook continue to remain decent, wherein they have went on record to say that close to $100 million is something which they will try to cut the cost because of improvement in operating efficiency, and that should help a company to recoup the loss in earnings during the quarter one. So again, hopeful that full year FY26 number should be far better as compared to the 1Q number, which we are seeing deep as far as Novelis is concerned. So I think today again muted set of number from Hindalco, but one should not read much negative into the today's number. Any deep is a buying opportunity, I feel, in the Hindalco and as well as Nalco.
Okay, all right. Now, let's turn to another interesting story. India is ramping up its export ambitions by expanding target markets from 20 to 50 countries, aiming to offset the impact of US tariffs with a diversification push that is led by the Commerce Ministry. We've got Rishabh joining in for more on this. Rishabh, take it away.
Right. In fact, what we've picked up from the government is the fact that they are pulling out all stops to cushion this impact of these heightened US tariffs that are coming in. What we've seen is that from the current about 20 countries of focus in terms of exports, that is being expanded to 50 countries. So about 30 countries being added to that list. A lot of new countries coming in from African regions as well as the Latin American regions. Both of these geographies are areas where Chinese presence is much heavier than Indian, so there will be that sort of competition coming in. But this is clearly in terms of diversification away from the US, also in terms of exports for Indian products. What we've seen is that the government strategy is now focused on about 3 or 4 key pillars. One being export competitiveness, one being export diversification, another being import substitution, as well as a fourth one being a key correctly utilizing the current already signed free trade agreements. That is something that has been an issue in terms of India's trade deals with other countries, is the fact that we don't see a lot of uptick in terms of exports with the countries that we've already signed FTAs with. So the government is also addressing that bit. What we're also seeing is that currently in the works is a line-by-line, product-by-product strategy in the works for India's key exports in terms of pharma, in terms of engineering goods, gems and jewelry. All of them are being addressed product by product, and a strategy is being chalked out for a bunch of these products in terms of boosting their exports to current as well as newer markets. So that is what we're picking up. We're also seeing is that the government's concern also lies in terms of export competitiveness. So they are looking to ease out the policy and regulatory bottlenecks in terms of the inverted duty structure with regards to products, logistics cost, distribution costs, as well as the market access cost in terms of newer geographies. So that is what we're picking up in terms of the latest coming in from the Commerce Ministry.
Okay. Thank you for that, Rishabh. Chandra, let me come to you on what could be some of the recovery candidates today. After the way you've seen a knock in a PG Electroplast, an Amber, a Voltas, that whole, lot of AC makers and allied companies, do you see maybe a bit of a rebound there today?
So, Tamanna, I'll focus more on news and business and PSU banks. However, the couple of names which you mentioned have seen a sharp selling pressure, but I can look at Amber. However, we need to understand that immediate structure is negative, and yesterday when Nifty rallied by more than 200 points, the stock failed to recover. But still, if manages to hold the support of 6750, then I believe recovery can be seen towards 7100 kind of level. But yes, conditional trade setup will be there. And apart from other name, I think let them settle down. Then the next leg of call can be taken here.
Okay. All right, we'll take a very short break, but we're coming back with pre-open rates. We'll talk about more stocks that are buzzing, some in the pharma pack. Watch out for a Dr. Reddy's. They might be in for a bit of trouble today with a competitive product here. Indian Hotels has made announcements yesterday on more acquisitions that they're looking at. All of that when we come back after the break.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय हिंद, जय हिंद।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that is
All right, back with India Market Open right here on NDTV Profit in conversation with Chandan Taparia and Sunny Agarwal. And before we let Chandan go, Chandan, in the last about 7 days, there are a couple of brokerage houses which have upgraded IT service stock businesses. I wonder if the charts or the derivative positions in any fashion show any optimism on any of those names. It could be large cap IT, it could be non-Nifty IT as well.
So if I look at the Nifty IT, however, we have not seen any sort of recovery. However, the good part is after the upgrades, some sort of stability is clearly visible at lower levels. So we have noticed that Nifty IT has been consolidating from last 4 days. When market was falling down, the sector is finding some support. But as of now, I'm not expecting a major recovery. The Coforge, which used to be strongest name, fell to surpass 1750, drifted lower. Even the Hayward's name like TCS and Infield fell to continue the momentum. So I'll pick now persistent system, which has positive price pattern. If it manages to hold 5200, I believe short covering could be seen towards 5400 mark. So persistent system will be one name in this.
Chandan, thanks so much for joining us today. Pleasure speaking with you as always. Okay, we were talking about the pharmaceutical space and specifically about Dr. Reddy's Laboratories. This is now a stock that you should watch out for because it's probably going to react on the back of a new launch by its competitor Viatris. The company has launched its first generic version of a key anemia drug, which Dr. Reddy's Laboratories was also working on. Varsha is joining to talk about the impact for Dr. Reddy's. Varsha, how much will investors pay attention to this?
Yeah, so thank you for that. You know, it's a negative when it comes to Dr. Reddy's because the drug which Viatris, which is a global pharmaceutical company, has launched, the drug has $515 million of annual sales in the US. And Viatris, so the interesting point here is the Viatris will get 180-day exclusive wherein they will be the only generic company who will launch this product. And analysts expect revenue of $8 million in FY26, but $38 million when it comes to FY27 for this product. Now, how this is going to impact Dr. Reddy's, because Dr. Reddy's is also working on the same product. However, they are behind Viatris and the launch has been delayed. So, the expected launch now will be after 180 days because of the exclusivity that Viatris has received. Because now, why they are delayed? Because Dr. Reddy's received complete response letter from FDA for their version. That means, in a simple words, that their applications had some issues and need to be reworked. Now, because of the delayed launch, the Dr. Reddy's will miss out on the significant launch during the initial period. And once Dr. Reddy's launch this product, they will have to compete for the market share that Viatris will already be, ahead of this. And so in a nutshell, because of the huge growth that this product or that this drug has, and analysts are expecting, almost $38 million when it comes to FY27. We may see pressure when it comes to Dr. Reddy's today.
Got it. Okay, so we've got Nilesh Jain, Head AVP Technical and Derivatives Research at Centrum Broking, joining in as well. But before we come to you, Nilesh, let me go across to Sunny very quickly on Dr. Reddy's Laboratories. How much of an impact do you think that this will have, what we just spoke about? And what's your call on Dr. Reddy's Laboratories? Would this be the stock that you would pick in the pharma space, or would you buy something else?
Yeah, Alex, I think it seems a clear advantage to Viatris in terms of the drug launch, and that can definitely have some impact on Dr. Reddy's earning. But even if you look at 1Q numbers, they were kind of missed, at least on a PAT front. So revenue and EBITDA were in line, and there was some miss on a PAT. So I think at current market price, we believe the fair value of the business is close to 1,300 rupees. So I think definitely there can be some negative reaction. And compared to Dr. Reddy, we are more bullish on other pharma names like Blue Jet Healthcare, or for that matter, Lupin, which has reported a very strong set of numbers during the quarter.
Okay, all right. First, rates are going to begin to hit, and of course, as we wait for them to settle, a few stocks that you should keep on your radar today as per your earnings. Bata, definitely one of them. The woes don't end for Bata. Astral, we talked about. I'm not talking about the poor earnings right now. Astral will also see some pain. Titagarh Rail, Hindalco, Praj Industries, all of these were not a great set of numbers, and they're opening as expected with some pain. Signature Global, AB Real Estate, I mean, interesting, we spoke about real estate today and some of the stocks that could withstand falling sales, and AB Real Estate is one we talked about. Signature Global, we talked to the management yesterday as well, seeming decent and good set of numbers. PG Electro, we talked about this in the pre-open session. Will you see a rebound in PG Electro after the kind of battering? Maybe. It's beginning to show some of those signs. Sai Life Sciences continues to be on an up move, so is Torrent Pharma. So some of these stocks that you need to look out for today in trade. Just as Sai Life Sciences, if you're tracking, Nilesh, and PG Electro is something that we spoke to Chandan also about. Let's get your view in on the charts.
Morning, Tamanna. See, PG Electroplast, we have seen a kind of a carnage in last 3-4 consecutive sessions. So there could be possibility of a dead cat bounce because this particular counter has gone into extremely oversold territory. So after such sharp downtick, there could be possibility of some bit of retracement, which may take this particular counter towards 540, 550, or quite possible that we may see pull back towards 600 as well. But it's not a buy. Better if somebody is already holding the long position, should think of exiting the long position on pullbacks. It's kind of a sell on right structure as of now. Till time it doesn't reclaim 660 levels on the upside, see overall structure looks slightly on a negative side.
Nilesh, what would you be buying today? Let's talk about your picks for the day.
Right, so I have two buy recommendation. First of all, Indian Hotel, this particular stock. We have seen a gradual decline in last few trading sessions. But yesterday, in fact, in last 3 sessions, we have seen this particular counter taking support at somewhere around 735, 730 in that particular range. Yesterday, it has formed a strong reversal candle. So we are expecting a pullback move in this particular counter towards the levels of 760, 765 on the upside. So that's the target, 765, and the stop loss should be placed at 735. Now, another stock that has given a good breakout yesterday, that's Eternal. The stock has been in a very strong uptrend. Recently, we have seen a gap up opening as well, and it has also made an attempt to fill that particular gap. But overall structure looks strong on the chart. Buy and decline should be the strategy, and we are expecting immediate target of 325, but positional targets come somewhere around 350. Stop loss should be placed at 301.
Okay, Sunny, if you saw Praj Industries numbers, the performance in the fourth quarter was a little bit suspect, and then the first quarter has just fallen off a cliff. They've talked about delays at customer end that explain their biofuel business revenue decline, which seems to be the main concern. But there's more going on. What would you say about the stock?
Yeah, definitely last 2 quarters has been slightly wobbly as far as Praj on execution front is concerned, and as you rightly pointed out, there is a delay either from the customer end or on a revenue booking front, and that is leading to a negative reaction in stock. I think I would like to wait for a management commentary. How will the next 9 months pan out in terms of the growth. Anyway, they are sitting on a decent order book. So I think order book is not a concern at a current juncture. The only concern right now is then execution and whether there can be some delay on existing execution of an order book which is in hand. So would like to hear management commentary before taking any call. Would like to avoid at a current juncture Praj Industry.
Okay. What is the call on the charts though, Nilesh, on Praj? If it's opening gap down very clearly, but then would you sell at this point?
See, Alex, if you just pull out last 8 months chart for this particular counter, we have seen a constant downtrend. The stock is constantly forming a lower top and lower bottom formation. In fact, it is on the verge of a major breakout, multi-month, or I would say a multi-year breakout can be seen if stock breaks below 440 levels. So looking at the pre-opening session, looks like it is likely to open below that important support of 440. So looking at the overall structure, we are expecting a follow-up on the lower side towards 420, 400 on immediate basis, and positional target comes somewhere around 380 to 370 on the lower side. So it's a kind of a sell on rise structure. Avoid taking any contraband at present.
Yep, but down 5% for Praj for sure. And looking wobbly. Astral might be reacting a bit to those numbers as well, because those haven't looked good. So keep in mind for that one, 10% lower. Now let's see if that's quite a reaction. Yeah, I mean, this could be interesting, even despite the fact that they said that July has looked okay for them, but this is not looking good at all. And travel and food services is the other one, which could be interesting, 3.5% higher. Not surprising that Tilak Nagar is the fourth one. Just want to point that one out and see whether the street is reacting to those numbers. 4.49% higher, most certainly. Okay, before we take a view on some of these names, and we will take a view on some of these high movers, let's get in the big brokerage call for the day. Goldman has initiated coverage on Hyundai with the buy rating. Harsh is here with more on that. This is what or rather Somit is here if I'm not wrong. And this is what Somit, the fourth or the fifth note in the last 2-3 months, which has turned constructive on Hyundai.
Well, yes, multiple brokerages have actually initiated coverage on the company, and all of them are quite constructive on the stock, not only because the valuations are cheap, but the growth outlook is quite optimistic. When it comes to Goldman Sachs, they have initiated coverage with a buy rating and a target price of 2,600, which suggests a return potential of nearly 21%. Now, they believe that the company is well positioned to outgrow the India car industry, driven by the new SUV launches, which will also triggered by the greenfield capacity expansion that the company has announced. Apart from that, they're also saying that the India car market growth is poised to reverse into an inflection phase over the next 12 months, and currently the market is quite positioned or quite focused on the modest volume growth that we are expecting for FY26, but they are not focusing on the fact that Hyundai will outperform the industry over FY27 and FY28 as well. They are expecting the new SUV launches to help Hyundai gain over 120 basis points of market share over FY25 to FY28, and over the same time period they're expecting Hyundai's volume growth to be around 8% CAGR as against the 5% growth that they're expecting for the domestic car industry. They also believe that the cost increase will be offset by the improving product mix, that is more SUV car sales, which will lead to higher margins. So any higher cost will be offset by this positive factor, and couple of other points on which they are quite bullish and which will aid Hyundai Motors going forward is the fact that there's a tax stimulus that will kick in FY26, and also the 8th pay commission, and both these factors will also aid Hyundai Motors going forward as per the brokerage.
Okay. Thank you for that. Hyundai looking good. Sunny, any views there on Hyundai? As they say, let's add it Tata Motors as well. Tata Motors maybe is off to a bit of a shaky start after the pre-open session. But in the four-wheeler space, anything that you'd pick right now? We were having a conversation yesterday with the view that maybe when you see a consumption upturn, autos will be back in favor. Is that something that you're subscribing to?
Yeah, definitely. I think selective pockets of auto is doing pretty well. So among the four-wheeler space, again, Mahindra and Mahindra continue to remain our top pick. So for them, both these segments, whether it is an SUV, passenger vehicle, or farm equipment segment, both the segments are doing pretty well. So M&M is a top pick among the passenger vehicle space, and we continue to remain bullish on auto and name, which are kind of transitioning from ICE to EV portfolio. portfolio and at the same time moving towards the premiumization. Case in point, Lumax Auto continue to remain our favorite pick. Gabriel India, we have seen a recent merger of three entities into the Gabriel. Again, outlook for next 3 to 5 years continue to very robust. SGS Enterprises, which is kind of into aesthetic and decorative product, they have onboarded Hero recently, and that is aiding a growth for them.
Okay. Some other movers in the pre-open session worth pointing out, and Nilesh, I'll come to you on this. Let's look at what's happening with a Pfizer. Let's look at what's happening with an AstraZeneca. Akums Drugs also has some pretty decent views on it from brokerages today. And you may see pharma pop simply because if there is a pause on tariffs on China, is the whole tariff piece moving down the road? This could be one angle to look at today. Any views on any of the pharma names, Nilesh? And let me add a Sai Life Sciences, which has been buzzing for the last couple of sessions.
Right, Tamana. So Sai Life, in fact, this particular stock is a recent listing. We have limited data, but whatever data is available is clearly indicating this momentum should continue from a short-term perspective. And on the upside, 920, 940 kind of levels quite possible on immediate basis, but not advisable to chase this particular counter at the high levels because it was already up close to 8% yesterday. So buy and decline should be the strategy. Stop loss should be placed somewhere around 820. And coming to Pharma Pack as a whole, we are witnessing some bit of consolidation in this particular space where a couple of stocks are witnessing a bit of a selling pressure at the high levels, and a couple of stocks are showing signs of reversal. So counters like a couple of stocks that are in fact looking positive purely from a pullback perspective. So Dr. Reddy will be the first particular counter where we have seen a bit of a rebound in last 3 consecutive sessions. So there could be possibility of a follow-up move on the upside towards 1240, 1250, and with a stop loss below 1190, it's a buy. Apart from that, a couple of stocks. First of all, index heavyweight Sun Pharma, this particular stock, in fact, it is also showing signs of a pullback because it has gone into slightly oversold territory. There could be possibility of a pullback move towards 1640, 1660 on the upside. Stop loss should be placed at 1585.
All right, so that's a view on the pharmaceutical space. Sunny, stock that caught my attention on the earnings was Office Space Solutions, and seemingly their margins have been on upward trajectory, and I was looking at least 4 quarters, if not more. Every quarter they've posted a better margin performance, but the concern maybe would be below that line, which is on higher finance cost and maybe depreciation also heading higher, as a result of which the PAT didn't grow as much as it might have otherwise. What's the call on Office Space though?
Yeah, I think within this entire office leading space, office AWFIs continue to remain a favorite pick. So we have seen a recent 2 listing. There we feel that path to profitability is still far away compared to an office, and we continue to remain bullish. Office, we have seen a kind of occupancy that is inching up very well, and that was the case in this quarter also. So overall occupancy is close to 74% level at a current juncture, and we believe the way we are seeing a demand from GCC, office can be one of the key beneficiary of that. So if somebody want to bet money within this office leading space, AWFIs continue to remain the top pick. Although, as you rightly pointed out, there is an increase in component of interest and depreciation. That is predominantly because of increase in rental expense, which is now captured below the EBITDA line as per the Ind AS 116 accounting standard, and that is the reason we are seeing that number be blotted. But we believe as occupancy increases, we will see an operating leverage playing out for the office, and that should aid a healthy earning growth going forward.
Nilesh, your top pick as the pre-open session has wrapped up, and any view on Office?
See, Office, this particular counter, in fact, has been in a downtrend, and today, although it is witnessing a strong up move, and looking at the overall setup, I would rather wait for a breakout above 650 to get a confirmation of a short-term trend reversal. But as of now, it looks like merely a dead cat bounce, and if it unable to surpass 640 levels on the upside, there could be possibility of some bit of selling pressure going forward. So since it is trading at a multi-month lowest level, the support is placed at 550. So ideally, that should be the stop loss for the long position. And if somebody is already holding the long position, then one can stay put.
It's a pretty high bounce for the cat. Nilesh, what is your top pick though, based on the pre-open session, everything you've seen so far?
Trend is something that is looking positive to me, given the kind of base formation we are witnessing in this particular stock. The stock has witnessed a good consolidation, and good accumulation is also happening at the lower level. So we are expecting momentum in this particular stock.
Nilesh, are you talking about trend?
Right,
Yeah,
trend.
Yeah, okay.
So 5,550, 5,600 kind of levels we can expect in trend. Stop loss should be placed at 5340, and trend is a buy.
Okay. Stay on, gentlemen. The market's about to kickstart trade, and you'll probably see a muted start. The question only is, will we build on from there the way we did yesterday? Let's wait and watch. But muted start. In fact, banks are a bit lower, 1/3% lower. Very interesting here. That banks are starting off weak, while IT, presumably on that BOFA upgrade, and of course had a good move yesterday too, doing okay. Mid caps and small caps, flattish. No big gyrations there. Let's get the heat map up on the screen. Show you what's moving and what's not. So let's start with the winners. Tata Steel 0.68%, Sun Pharma 0.5%, Wipro, well, 0.5%, and Jio Financial Indocin. It's a smattering of stocks, no particular sector which is really standing out, but a decent enough quota of green in a market which is flat to marginally lower. You don't really have a standout mover there on the upside. On the downside, Reddy starts off lower. ICICI Bank, yesterday recouped all of its losses, starting off in the red today. Hindalco, courtesy Novelis numbers, is down. HDFC Bank, Kotak Bank. So the four private banks, top four private banks are all starting off in the red. Marginally so, about 1% or just about 1%, but still in the red. And I think that's probably the takeaway. Probably a lot more movers at the broader end of the spectrum, Tamanna. But on the large cap space, it's a flat start, even Stevens on the breadth.
I think the minimum balance business is going to play out for a few days, and maybe that's what you're seeing with ICICI Bank and some of the other private banks as well. Hindalco is something that we talked about. Let's just recap what's happening with the broader markets very quickly and whether there's movement in the first minute or so of trade. Not too bad. Nifty mid-cap 150, about 0.25% up, has started absolutely flat. The small cap 250 also showing some signs of strength. Very, very narrow range. I mean, the pause in tariffs is for China, but Indian markets also in kind of a pause before all of this mess gets cleared out, one supposes. Let's look at the sectoral indices and what that heat map is looking like this morning, this Tuesday morning. You have Nifty Media up, IT stocks looking okay, but nothing major really. Look at it, between 0.25% to 1% up on all of the key indices, and that too, that one's not that populated. Nifty Finance and Banks seeing a bit of a hit. Remember, banks were leading the recovery yesterday at close, and that seems to have reversed. So do realty stocks. So interest rate sensitives are not looking that great this morning, and banks is something that you need to look at more closely. Having said that, more green than red on the screen, if for what that's worth. Let's pull up the India VIX very quickly before I get to specific stocks this morning, and that's seen a slight uptick and over the 12 mark, but nevertheless mostly and broadly steady. Specific stocks, let's come to those this morning as we look at the ones that we are tracking. Hindalco, I just want to pull up Hindalco once again. So Novelis accounts for a chunk of its revenue. Novelis is showing a bit of a headwind, especially from tariffs. Having said that, it's pared out quite a bit, 1% down. A lot of brokerages also estimating that the worst is over in Q1, and the management is indicating improvement from the second quarter. Other results that you should look at: Bata, Astral, Titagarh, just pointing out some of them. Bata has seen no reprieve from the last several quarters. I think there was one statistic we pulled out, 15 quarters of low sales, which has been plaguing Bata. Astral also not a good set of numbers at all. Titagarh actually seemed worse than what the stock is indicating right now. So Titagarh about 4% up. Let's look at Praj. Praj also very poor set of numbers, 8% down. Tilak Nagar, very strong quarter, and that is reflecting in how the stock is reacting. Som Distilleries was broadly okay, but obviously not as strong as a Tilaknagar that we saw. Office is the other one that we're talking about this morning. It's a place to bet in if you want to ride the GCC boom. Numbers also look decent, about 8% up. Man Industries, KNR, other companies that have reported and not that great. So more poor result reactions than good ones, I would say. Other buzzing stocks, let's look at what's happening to PG, Electroplast, and even in Amber. If we can pull up the losers from yesterday, PG Electroplast, so showing a, I mean, whether you call it a dead cat bounce or not, but after losing over 30-40% in its market price in the last two trading sessions, seems to be showing some kind of a response. Amber, let's look at whether Amber has improved as well. Yes, well, at least mildly up in the green. Hyundai is the other one that we're looking at. Goldman Sachs has initiated a buy to 2.5% up there. Block deal on Medi Assist is something that we need to see. There was a huge block deal, but makes no difference. And if you tuned in this morning to listen to Sumit Sarkar on Heard on the Street, you would have heard that the block is getting absorbed at a premium. 4.5% up on Medi Assist this morning that we're seeing after a substantial block. That's a pretty good story going on there. Dollar Industries, let's look at it, and Apex Food again on results coming in. Dollar was a good set of numbers. Their income or their sales from online segment has grown substantially. That's about 4.5-5% up. Apex Frozen has been battered because of tariffs, but numbers were decent. Maybe tariff fears will be easing after the pause that has been declared on China's tariffs. Yatra, let's look at Yatra and see if that rally is continuing. Yes, it absolutely is. 16% up, second day in a row. So quite a bit of action that we're seeing.
Absolutely. I would add another stock reacting to numbers that we had pointed out at the start. Actually, Glasscore is up 7.4% at this point, and those numbers look pretty good, in fact. VST Tiller is also up about 7.3%. You have Nelco that's doing reasonably well, and a few more from the broader markets as I pull them up are doing quite well. Dreamfolks, by the way, is up 5%. I wonder if there's some reaction to the other company in the space that reported numbers and whether that's giving them heart. Titagarh Rail is perhaps one of the surprises of the morning. It's reacting positively and gaining nearly 4.5-5%, despite what some would have said is a weak set of numbers. Apex Frozen, Sunny, is this a case of some ground being clawed back on the back of numbers? Certainly, but the problems that will plague this company if tariff fears prove true, they're in the times to come. It wouldn't have reflected in the first quarter. Would you agree?
Yeah, definitely. I think for most of the companies which has gotten exposure to basically US and Europe businesses, there we have seen a kind of overhang or delay in execution because of this tariff-led uncertainty. I think that can be one of the reasons where we are seeing a kind of a muted set of numbers from a company having exposure to US. Yeah.
Let's talk about some of these stocks on the charts then, and from the broader markets. I do want to focus on those because really from the benchmark constituents, there aren't many that are reacting very sharply, and the Nifty 50 absolutely flat at this point. Let's talk about Astral, for example, which is down about 5% or so. Action Construction, which is losing also about 3.3%. Nilesh, how would you trade these?
Well, Alex, structure-wise, is that Action Construction is looking extremely weak. It has given a structural breakdown as well. So we are likely to see follow-up more on the lower side towards 950, 930 going forward. And the next major support for this particular stock is placed somewhere around 910. So that is the major support going forward. But structure looks weak, kind of a sell-on-rise structure. And 1080 is the immediate resistance for this particular counter. Now coming to Astral, we have seen a continuation of a lower top and lower top formation in this particular counter as well, and it has witnessed a huge buildup on the short side today. Structure wise looks weak, but there could be possibility of some pullback towards 1350, 1380. I would suggest use this pullback to sell. It's a kind of a sell on rise structure in Astral as well. The support is at 1265. I think it is likely to test 1280, 1300 from here.
Okay, Titagarh Rail I thought was interesting. Because the numbers
were not great.
Were not great at all. I don't know what's happening with Titagarh Rail. Sunny, is this something that you would buy into?
Yeah, definitely. I think this quarter there was an peculiar issue of supply of wheel set by one of the government company, and that has led to a lower execution in terms of order. But company has went on record to say that FY26 they will able to recoup the losses during the first quarter in terms of order execution, and for FY26 they are on track to execute the entire order book in hand, and that will lead to a decent earning growth. And at the same time. There is one development of demerging of their shipping business into a separate subsidiary, which we believe in a long term can be another growth driver for a company. So there has been a concern that once this order pent up demand for a metro or railway Vande Bharat coaches is over the period of next 3 years, then what is the growth outlook for a company? So they have created a new vertical of shipping, which we believe can start contributing after the span of 3 to 4 years in a very healthy manner. So that can lead to an continuity in terms of earning growth. So we would like to buy the dip in Titagarh Rail.
Okay, you'll buy the dip. There's no dip today. It's about 5% up. But Nilesh, is Titagarh a buy?
Today, after a fall of 2 consecutive sessions, we are witnessing a strong pullback. And I believe this pullback may extend towards 840, 850 on the upside. But again, the risk and reward is not favorable after a jump of 5% at present. So better wait for a dip towards 797, 775. That can be a good entry range for this particular stock. And support is at 765. That should be the stop loss. But if somebody is already holding, I think one should stay put, keeping a trailing stop loss below 800. We are likely to see a pullback towards 840, 850.
Okay, I want you to give a view, if you can, on some of these which are really hurting today, a Praj, an Astral, a KNR, and of course because of results. But Nilesh, on the charts, do you see some kind of an up move there that we can look at?
Counters like ACE, we have already mentioned, Astral, both the stocks are looking slightly weak. In fact, further downtick is something that we are expecting. Even similar is the case with Praj. Before market opened, we did mention about Praj Industries giving a breakdown from its multi-year support line that's placed somewhere around 440. So the stock has given a breakaway gap down today, and we are likely to see a follow-up move to continue on the lower side towards 390, 370 from here. So it's not advisable to chase any long position at present. Better use any pullback if you get to exit from the long position. The structure is looking extremely weak. KNR Construction, I think this particular stock may witness some bit of a pullback. It has taken a good support today at 198, so that should be the stop loss, and we may see a follow-up move on the upside on the back of a pullback towards 210, 215.
So on the technicals, we did see PSU banks in focus, and I think if I'm not mistaken, Chandan had pointed out, I don't know what you think about the PSU banks, Nilesh, I'll come to you in a bit, but Sunny, we've seen quite a few of these results play out, and State Bank of India, I know a lot of people will argue that the treasury income is what pushed them above. Oh, you can't speak about State Bank of India, I completely forgot. Let me ask you about the rest of the PSU banks. Is there anything else that you would buy? I saw your smile and I realized, and then I saw the tag behind you. What would you buy in the PSU banking space?
Again, I think within PSU banking space, I think even technically the chart is looking very good. Indian Bank, we believe, has reported a decent set of number, and outlook continue to remain pretty strong. So Indian Bank is the one stock which we are recommending to our client. Apart from that, I think Punjab National Bank again continue to report a slightly better number compared to its peers. So PNB is the one stock which we are recommending to our client among the PSU basket.
All right. So that's the PSU banking pack. Gentlemen, thanks so much for joining us today. Absolute pleasure having you on the program. Now let's turn attention to BSE. It is in focus after delivering a strong Q1 performance. Lower expenses have significantly bolstered margins, and the management remains upbeat about the prospects and a robust IPO pipeline going forward as well. Before we listen to what the management has to say, let's bring in Harsh to talk about how the numbers stood up. And the question marks about derivative volume. Harsh, there was a lot that was talked about leading up to these earnings, but they actually came in reasonably good.
Well, really solid beat, actually, Alex, in terms of the numbers. So surely give them that credit in terms of the way BSE has handled this. But of course, is the regulatory overhang completely over? Well, maybe not. There's that change of day which will likely continue to impact the numbers going forward, and we've explored that in the conversation I've had with the CEO and Managing Director of the BSE. Now, in terms of, let's listen straight in and let's hear what he had to say about all of this. The oldest exchange of India, to speak to us about Q1 numbers and what the expectations are going forward. So it's a very, very strong set of numbers with regard to Q1. I want to first ask you a more generic question, sir. Are these kind of numbers sustainable going forward as well? Is that what your investors can expect?
First of all, namaskar from my side.
Sir,
and since we are on August 12th, I would like to, in advance, wish your listeners Happy Independence Day.
Happy Independence Day.
Thanks for congratulating me on the good performance of the last quarter. Thank you so much. The last quarter numbers, yes indeed, they were very, very good. They were the first of its kind in the last 150 years of BSE. As far as its sustainability, the effort from all of our side will be to make it sustainable and continue the same way in the years to come. I feel when we look at the nation's growth and development, it looks possible. Under the able guidance of our Prime Minister, we are marching towards Viksit Bharat. By 2047, we want to be a developed nation. If our economy is going to be 30-35 trillion, the market cap is going to be 50-55 trillion US dollars. That means there are more corporates to come, more listings to happen, more mutual funds to come, more stability to be provided, more inflow of capital. Therefore, why not? Why it should not be sustainable?
No, sir. Sir, completely buy into that argument. It's the logical way forward. But sir, talk to us about the last maybe 3 to 4 quarters have been marred by some amount of regulatory headwind. Do you believe that all of that is now behind us and BSE is now well placed, and there is of course a change which is due in August? What would the impact of that change be? But otherwise, other than that, BSE is well placed to drive growth and investor value?
You call it as regulatory headwind. I call it as regulatory evolution, which is a continuous process. In India, if you look at it, regulations are co-created in a consultative process with the same objective as everybody else in the country, protection of investor interest. And your question has the answer. In this period, when there has been a regulatory evolution, quarter on quarter BSE has been doing well, and it will continue to do well, because whatever is happening from the regulatory side is absolutely in the interest of investor, in the interest of the market. We as market infrastructure intermediaries here are to further the nation's cause and ensure protection of investors.
Sir, how do you expect, and this is a slightly more direct question, sir, how do you expect the change in terms of the day from Tuesday to Thursday to impact your option volumes and therefore your top line? Do you expect absolutely any impact of that?
This question, if you would recall, I have answered multiple times. I would like to repeat once more. We had no choice but Friday when we started, because it was the only available day. When there was some effort to have one another contract expiring on that day, a joint press release was made. When one exchange, one contract was made as a requirement, choice was given. Since Thursday was taken by NSE, we took Tuesday. It's not that Tuesday was our first choice at that time. Since we wanted to give respect to the earlier exchange, we waited for them to take Thursday and we took Tuesday. Subsequently, there were market noise about Monday, single expiry and all, which necessitated a consultation paper which stated Tuesday and Thursday. Strictly, the same status quo should have then remained. But since it was a requirement for Tuesday, and this was an opportunity for us to recalibrate, we went to the marketplace again. Market felt Thursday is a better day, and since it is being offered on platter, and since somebody wants Tuesday, why not achieve the twin objective of giving what other want and take what you want? Beware, this entire country had Thursday as the expiry day for a very long time, and in that process derivatives market in India has developed. If that is being offered to us, that's a wonderful choice, why not take it? That's how we have taken, and as always it is based on voice of customer.
Excellent, sir. That's a great response. So sir, talk to us. You know, the margins have inched up very, very steadily. In fact, they've zoomed up if I exclude the one-time expenses or costs that you've had to bear. Are these margins now normalized? This just about sub 70% kind of margin number. Is that something one can expect going forward from you as well? Is it a sustainable number?
World over, if you look at it, exchanges are fixed cost game. So you incur a stringently large amount of fixed cost, and once your top line starts growing beyond threshold, its trace goes into the bottom line and stays there. India is no exception. In fact, in India we have exchange which has 80% plus margin. So it depends on the product mix and how you take care of that. For us, what we are striving hard is not looking at protecting the margin, but in having a proper product mix. It should be well diversified. It should not be significant portion coming from a single area of our operation. We should have good amount of cash equity business, good mutual fund, good enhanced data dissemination, good amount of index business, good amount of money coming from our data centers. That's the way we would like to diversify it, and that's what we are working upon.
Excellent, sir. Sir, give us a perspective on what you're doing to bring in institutional investors to your platform. That's one thing which may require some bit of work. So what's happening there, sir?
It's a good question that you are asking. In India, there was no level playing field in respect of institutional investors in the recent past post interoperability. Clients do not like to receive multiple contract notes. They want best price execution, institutional investors. Best price execution was not happening in India. The regulatory stumbling block was the starting point for it. If two exchanges, two contract notes with two VWAP, an institution which places a single order for multiple schemes will have a problem. So typically no institutional volumes were flowing into BSE. Notwithstanding the fact there were price difference between the same stock in two different exchanges, which is not good for the nation, which is not as per the mandate given by the clients to the FPIs or to any other institution. Therefore, we wanted to rectify it. All our actions all along has been in the interest of providing level playing field and thus reduce concentration risk. So we had been working with the regulator. The regulator saw the point in it, and common contract note has been now introduced from June 30th. But that is not the end of it. That is the starting point of another long marathon. Most of the brokers today are not providing best price execution for the institutional investor, notwithstanding a common contract note has come in. They have to either tweak their software to provide best price execution, or at the least they should have a SOR, smart order routing. If they even have a smart order routing, that should be properly calibrated to consider both the exchange volumes, both the exchange prices, both the exchange number of trades, etc. If they just take one exchange volumes, one exchange trade, one exchange prices and try to create a SOR, it's not going to be anywhere mimicking the best price execution. So we are in the process of educating institutional investors as why it is important for them that they should ask for best price execution and to start with SOR. And we are also helping the brokers and software vendor how to ensure software smart order routing. It's not about one exchange over the other. It is about the client getting the best price across multiple venues. This is nothing new. This is how the global markets operate. We are trying to benchmark ourselves with a global best practice so as to ensure the investor who is trading in India is not having a different type of an execution paradigm compared to what he has globally.
How is it being accepted, sir? What's the current, give us the feelers of what you are hearing. So that's the first point. The second point is, what are the other levers that you are using to grow your top line? Agri, commodities, you're getting into some of those areas as well. And how much of an impact will all of these measures make to your top line, say 2-3 years from now? What's the growth looking like?
The first point, how about the acceptance level? Honestly, it was not just the exchange which was pushing for it.
Yes.
There has been a very strong feedback from the institutional investors to the regulator that the common contract note should be put in place, and there is a strong demand from the institutional investors to the custodians. The custodians have been extremely supportive. That's how it has seen the light of the day. Otherwise, just one exchange asking, it's a big juggernaut to make it move would not happen, isn't it? So there is a great amount of acceptance. Will it immediately get into some results of level playing field? May not be. It will take some time. Rome was not built in a day, but certainly the first good steps have been taken, and we are very, very confident the market, realizing its importance, will take it forward. As far as growing the top line, we as market infrastructure intermediary, our goal, the primary goal, is to serve the nation in capital creation. It is not just growing the top line. Under Dr. Patil, we all grew up from IDBI and we came to NSE and set it up at the time. The answer is very simple. We are here for making profit, but not for just only making profit. We have a responsibility of building nation. We will introduce such products. We will work for such products and functionalities which helps in it. Agri and commodity are very, very important part of our ecosystem. As and when the right time comes for us to make a meaningful existence there, we will come in. There is no point in being me too, isn't it? We have to make a significant contribution. We have a long way to catch up. In this 150-year history, the last 3 years has just started making BSE a bit vibrant and making its existence more meaningful than in the past. We have a long way to go. We are committed to nation building, so we will not leave any efforts in making that happen.
Okay, so that was the management MD and CEO of Bombay Stock Exchange talking about the quarter gone by. Good set of numbers, and the stock reacted positively on that day, seeing a bit of a pullback right now. But markets staying steady largely. I'm going to pull up the Nifty IT and the intraday of the Nifty IT, because IT is what is in focus. We told you this morning about a rotation into IT that some funds are talking about, and Nifty IT is where the action seems to be at. Let's pull up the internals of the Nifty IT as well, the components of that entire index. We're talking about the Nifty IT, and then of course we'll get to the BSE 500 in just a bit from that. But that is where all the action seems to be this morning. So IT stocks doing okay, banking stocks not so much. Banking stocks seeing a bit of a hit, led by private banks, one supposes. So there is some pain as well. But let's look at what's moving on the broader markets. You're seeing a lot of solar energy plays. SJVN doing pretty decent today. You have PG Electro, we've been talking about. That has been one company which has shown a rebound after being hit quite a bit over the last few sessions. Vardhaman Textile also making a rebound. I wonder if there is a taco trade which is now coming into play. So that's something that you need to watch out for. But meanwhile, more stock-specific focus, and let's talk a bit about Muthoot. Muthoot Microfinance numbers are out, and hasn't been a very good quarter in this part of the business? Harsh joining in for more details.
Yes, microfinance continues to be under pressure, and it's in fact reeling under pressure overall. So provisioning continues to remain elevated. That's the first key negative there. The other piece is growth hasn't rebounded at all. We're seeing flattish kind of growth on a YOY basis. QOQ, the book has declined very, very marginally, and therefore those headwinds also continue. Also, you're seeing NIM compression, as would be the case typically in a difficult environment, but this is also due to the increase in cost of funds that we've seen. Now, they had guided for around a 12.5% lower band margin for FY26 full year at the lowest band. The margins have actually come in sub 12%. So that's also a bit of a miss. Can those rebound will really be the question, but at least at the moment the numbers looking very, very unenthusing. Of course, the loss has reversed now completely. The Q4 FY25 loss completely reversing in Q1 FY26. But that being said, it's a very, very difficult set of numbers. I'll just read out that provisioning number for you. It's up 77% YOY. At 125 crore versus the 71 crore number same time last year. So not looking good overall. The ROA is also near zero.
Yeah. Oh, wow. That's going to be a pain point for Muthoot Microfinance today. 4% down on the stock. All right, another company that is in the spotlight for its earnings is Enviro Infra. They've delivered a pretty decent, I would say, quite a robust Q1 performance, and you've seen that stock about 2% up right now. Net profit surging over 36%, driven by a strong order book execution as well. Before we speak to the management, Anushi joining in to set up that conversation.
Thanks for that, Tamanna. So, I just spoke about the order book execution, which led to that revenue growth of 17% is something that we should be watching out for. Other than that, even the EBITDA margins have expanded. This is on account of lower material cost as well as other expenses going down this quarter. However, if you look at the finance cost and other income, that has also been better in this quarter, which has led to a profitability growth as well. Now, considering the order book position, if you are looking at, they have about 2,051 crore in execution, while 945 crore of order book is in operation and maintenance. The company this quarter has made a couple of forays. First of all, they've forayed into the renewable sector, and this is with acquisition of 69 megawatt of solar power projects. This includes acquisition of Vento Power Infra Private Limited along with Soltrix Energy Solution as well. The company has marked order wins in key regions like Maharashtra as well, and this was an order worth 400 crore that we are looking at, and this is with the foray in the ZLD space, that's zero liquid discharge as well. In terms of how the performance has been for the company, we've seen about a 46% growth in FY25. The management saying that they expect this revenue CAGR of 35 to 40% to continue, while margins for the renewable margins will be in the 18 to 20% of range. So core business margins would be in 20 to 24% of range that we are looking at. So this is the overall outlook that we are seeing for Enviro Infra Engineers.
Okay, and pretty strong outlook at that one. Thank you for that, Anushi. Manish Jain joining in now. He's Managing Director of Enviro Infra Engineers. Mr. Jain, a very good morning to you. Your guidance was at a 22 to 24% margin range. You have come up beyond that and above that. Tell us what has worked this quarter, and are you going to be looking at revising your guidance going forward? Is this the margin range that you see?
Good morning, and thank you for having me on the show. First of all, regarding the revenue guidance, the revenue growth in the company has been to the tune of 17%. The profitability in terms of EBITDA, that has increased to 25%. It is more of that product mix and then the COGS, the cost of goods. So that has driven a better EBITDA margins in the company, and then a higher PAT margin of 17% is there. And if we see the growth in the PAT margin, so it is 42% growth Y on Y. So we can maintain on the revenue front, we can maintain a growth rate of 35 to 40% for the current financial year. At the start of this current financial year, we were having an order book of 1185 crores. So in the last 4 months which have gone by, there has been an increase in the order book to the tune of around 1180 odd crores. So with a combine this order book and the design for the new projects which is going on, so Q3 and Q4 numbers will be still better. So we can maintain the guidance on the revenue front, and definitely for the profitability, we'll maintain our guidance to be in the range of 22 to 24%, but look forward to having still much better margins, which we are generating right now.
Having said that, some material costs and employee expenses and the reduction there have also, contributed to these margins to some extent. Does that start now reversing, or can you just give us some more insight into why that happened?
If you see the growth of the employee cost and the number of employees in the company when we had been into the IPO, so that employee strength in the company was around 900. At present, that employee strength stands at somewhere around 1350 or plus. So that is the level of growth in the number of employees being there in the company. Still, if we see as a percentage of sales, so that is coming down. So same will be the employee cost as a percentage of sales, that is coming down, and at the same time the finance cost, that is also getting reduced substantially. So these two factors in itself will keep on driving a better margin, apart from the growth in the revenue, and then better the product mix that we have. In the last 2 financial years, we had the projects from JJM which we were executing. So the percentage of revenues from JJM were quite higher. If you see our current revenue, so this wastewater treatment, which is sewage treatment plant and common effluent treatment plant, this constitutes almost 70% of the revenue. So with this shift, the revenue growth, the profitability is also expected to improve further.
Got it. Mr. Jain, firstly, interesting to see that the key managerial personnel have decided to forego their remuneration until this fraud piece is recovered. So good on the management's part. Just wondering, one of the notes suggested that the order inflow expected to support a growth rate of 35 to 40% in FY26 and beyond. Now, would love to know, is this 35 to 40% now a near guarantee for FY26? And when people say beyond FY26 as well, you believe 35 to 40% growth can happen in FY27 as well?
The level of order wins that we have currently in the current financial year, which is to the tune of somewhere around 1200 crores, and still the projects for which we have submitted our bids and the projects which are upcoming for which we are submitting our bids. So it gives a clear reflection that the order book that will strengthen, and then based on the current order book, the visibility for FY26 that gets confirmed that we will continue to grow at a rate of around 35 to 40%. And based on this order visibility, the win ratio that we will have in the current financial year further, we foresee that FY27 can be a big one. It can be still better than that 35-40%.
The other question, Mr. Jain, is you've had some recent ventures, the renewable energy sector. I believe no major operational revenues recorded in that segment as yet. What's the outlook thereof? When do the revenues start coming in? And is there some guidance or some color around what numbers could look like over the next 2 years in that segment?
Basically, renewable was a new venture for us. We started this company in the current financial year. Then we have taken up 2 projects. One is Vento Power Solutions, which we have purchased from PTC. So it is a partially completed project. It is a 40 megawatt solar power project in which 24 megawatt is already installed and the generation is already happening. So we are required to upgrade this plant to 40 megawatt. There are some threshold requirements which we have to achieve. So based on that, we'll generate revenues in the current financial year in terms of execution of this project. And then the power which is getting generated, so revenue will definitely accrue from this particular project. The second project is it is a 29 megawatt solar power plant at Maharashtra for MSEDCL. So basically, we have to put up a new 29 megawatt solar power project there. So there is an SFA of 3.2 crore per megawatt. So definitely the revenues will accrue in the current financial year. We expect a revenue to the tune of around 200 crore in current financial year with an EBITDA margin in the range of 18 to 20% from this.
What is the kind of contribution you see the renewables business making going forward, Mr. Jain? Because that is one big push that you are looking at. How do you see that panning out, and what are the margins relatively for this segment of the business?
Right now, we concentrated up to these two projects with some smaller EPC projects for which we have submitted our bids. So as a whole, once we are through with this, maybe sometime around December, so we'll be in a position to look how we can look into a growth in this particular segment, and then we can keep growing in the renewable sector as well. So just too early to say anything on this one, but we can project a revenue of around 200 crore for current financial year, and will be in a better position to explain the revenue growth and future in this particular sector by December.
Thank you so much, Mr. Jain, for speaking with us. Mr. Manish Jain of Enviro Infra, talking about the quarter gone by, and the margins is something that has enthused the street as well. We'll take a very short break. On the other side, we're speaking with Manishi Rai Chaudhary of Emmer Capital. We're also talking about the new kid on the block, the new listing, which seemed to have been settled at a pretty good price. Highway is listing this morning, and the pre-open session seems to be pretty decent. So we come back with all of that and more.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान जो मैंने शुरू किया था, ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है, आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
All right, we will welcome back, of course, to India Market Open. In a bit, we'll get in my colleague Anushi to talk about the new listing, but we'll do that closer to the listing time. Just bring up the markets because IT is doing really well in trade today. It's leading the charge on the indices, 0.36% up for the Nifty 50, Nifty IT 1.25%, followed by Nifty Media. So those are the buckets that are doing very, very well. So keep this in mind. Okay, now very quickly, let's talk about mutual funds in light of AMFI's numbers yesterday, which suggested a continuous demand of equity mutual funds. Mahima Johnson with complete color on the MF report card. Mahima.
Right. So what I've tried to do here is that, and we try to do this every month, as to how mutual funds have bought and sold different stocks and what sectors have seen outflows and inflows. So I'll start with sectors first, and higher exposure and higher inflows were seen in sectors like healthcare, discretionary staples, as well as auto and auto ancillaries. In terms of the changes on month-on-month basis, these are the basis point changes that were seen in these particular sectors. In terms of outflows, particular sectors that saw outflows in terms of mutual funds selling these in these sectors include IT, also includes oil and gas, telecom and media, as well as agri and chemical. So these are the changes that these particular sectors saw. Now in terms of stock specific action, inflows were seen in particular counters in the large cap space like SBI, Infosys, Axis Bank, Reliance, as well as CG Power. In the mid cap space, there were inflows seen in Vodafone, Vodafone Idea, Yes Bank, Canara Bank, L&T Finance, as well as Swiggy, and this is the second month in a row where Swiggy has seen inflows. In the small cap space, inflows were seen in Ola Electric, Ujjivan Small Finance, Devyani International, RBL Bank, as well as South Indian Bank. In terms of counters that saw outflows this particular month include in the large cap space, Eternal, IOCL, NTPC, Samvardhana Motherson, as well as GAIL. Samvardhana Motherson also here second month in a row where there were outflows. Mid caps, HPCL, VMart, M&M Finance, SAIL, as well as Irida. VMart was the counter which saw inflows last month, but this particular month there has been outflows in the counter. And in the small cap space, there were outflows seen in Sagility, Madhusumi Wiring, Hindustan Copper, IRB Infra, as well as Z Entertainment. Lastly, on the cash side of things, as to where mutual funds are sitting in terms of cash piles, well, overall in terms of equity mutual funds, cash pile up is still there and has increased by 11 basis points on month basis. So this is the overall analysis of what stock inflows and outflows were seen in terms of mutual funds.
Fantastic. Thanks a lot for that, Mahima. Now, from that to, well, another fantastic piece, which is highway infra. Fantastic because it's got a good listing. So 34% is actually really good listing. Off late, we haven't had too many companies with that kind of a debut. But the point is, this one was subscribed 300 times, right? And which is why you expected some bit of a bump up, of course. Now, Anushi's looked at this very, very closely, and she joins in to tell us more about highway infra. Anushi, tell us a bit about this business, and has anybody given an outlook on what to do on this stock post this kind of a premium? That's a significant premium.
Right, Neeraj. So, as you mentioned that we've seen strong subscription numbers for this particular counter, and today we are looking at a 73% of an upside in terms of how the listing has fared out. So just a bit about this company. Now, the company came with a price band of 70 per share, and this was with a total issue size of 130 crore, a considerable smaller IPO in focus with a fresh issue of around 97 crore or so. Now, what the company essentially does, it's engaged in tollway collections, EPC works, as well as real estate development. Now, if you look at the financial performance of the company, we did see an FY25 dip in terms of how the revenue has been, while margins have more or less remained in the 6 to 6.5% of range from the last 3 fiscals, and net profit seeing about 22 crore in the FY25, so flattish growth as compared to FY24. How the company proposes to utilize this 97 crore or so of fresh issue proceeds, this would be mainly funded for their working capital requirements along with general corporate purposes. Knowing a better SWOT analysis on this, if you look at the order book side in terms of strength, that stood at 666 crore. This is as of May 25 that we are looking at, and the company has diversified its revenue base going forward. However, what needs to be focused on its dependency on NHIC, and since the larger portion of the revenue comes from there, so keep this one on your watch out.
Certainly will. Thanks so much for that. Manishi Ray Chaudhary, Anushi, thanks for that. Manishi Ray Chaudhary, CEO of MR Capital Partners, joins in right now. I could have very well asked him about the primary markets and the flows as well, but Manishi's got a great eye on what's happening across the world, so we'll utilize the time with him to talk about that. Manishi, great having you. Thanks for joining in. Now, Manishi, for people whose money you may be advising / managing, portfolios that you might be advising as well, how do they think about this whole this tariff issue, and in some sense I can call it a tariff war that Donald Trump personally seems to have picked up with India, because China has been given a 90-day extension of truce simply because there is not as much that he can do with China with all of those rare earth controls that China has, right? So how are people thinking about it, and what's the impact on multiples or flows for Indian markets?
Well, coming to your first question, I think there is quite reasonably a bit of concern about how it's panning out, how this relationship between India and the United States is panning out, not just from the tariff angle, but also how it would go from a longer-term geopolitical perspective. And this juxtaposes against how things were even about 6 months to 1 year ago, where India was supposed to be in a geopolitical sweet spot. Now, suddenly, all of that has been thrown out of the window. I think this is actually the bigger concern. In terms of the tariffs, which currently stand at 50% to be imposed on August 27th, no doubt investors are watching it keenly, very keenly, particularly how the negotiations on August 25th onwards, how that pans out, because I think Scott Besant's team is coming over to India, and there is another round of discussions that are happening. So I think most investors acknowledge this as a bargaining chip, but at the same time, there is a possibility that it could become, if not permanent, at least longer lasting. And India's exports to the United States are about 2% of GDP. Out of that, about 40%, that's pharmaceuticals and smartphones, are currently exempted. But who knows? I mean, these things are volatile. One doesn't know what decision would be made 6 months or 3 months down the line. So, I think this is an additional layer of uncertainty on India, apart from the usual earnings estimate decline and the valuation premium that all investors have been struggling with.
You reckon, Manishi, that if this were to continue, that valuation premium could come off, or that growth, even if it were to come off below 6%. Yesterday we had HSBC's Pranjul Bhandari saying that growth could be sub 6% if the tariffs are high. But while 6% is not good enough for India, in relative terms, relative to all large economies, 5.5–6% growth, is it terrible? And therefore, will it still be taken to kindly in terms of the valuation multiples?
Right. So my questions, in fact, you asked me 2 or 3 different questions.
No, it's centered around multiples, Manishi. My question is centered around multiples for India.
Right. And I personally think that, yes, Indian multiples should be declining both in absolute terms and relative to the Asian peers. And even in the absence of these higher tariffs, they should have come down. Think of a market which is relatively expensive. It trades at about 20 to 22 times P multiple 1 year forward, but the earnings estimates are declining. So the multiples could actually appear even higher 6 months or 1 year down the line, because the earnings estimates on which they were calculated have declined. And I think this is the single biggest concern that investors have right now. No one has a problem paying expensive multiples in a growth market where earnings estimates are increasing, the earnings growth is high. But for a market which is seeing a bit of a earnings degrowth at this point of time, or at least earnings growth degrowth, I think that concern about valuation takes an upper hand.
Your estimates are what, 5–6% earnings growth for FY26, and is that the reason? And should Indian EPS growth be close to about 10–odd%, does that take care of the concerns or not really?
My estimate would be around 10 to 12%, possibly in the maybe spilling over into the low teens at this point for fiscal 26 and fiscal 27. But remember, I mean, just this estimate for both fiscal 26 and 27, even 4 or 5 months back, was about 17%. So from around 16 to 17%, it's already come down to about 11 to 12%. It looks like there could be even more downside going by the commentary that we're hearing from most of the corporates during the earnings season.
Manishi, where are the pockets of, how do I say, possibilities of relative outperformance then? I mean, today we had the BOFA note talk about a possible uptick, or they've gone overweight on IT. A couple of days ago, some others too. And I'm trying to understand if that, because it's corrected so much, becomes a pocket of outperformance. Are there other areas where you would believe there is safety in investing?
It's difficult to comment about the short term, maybe over 1 quarter. But if an investor has a slightly longer term outlook, maybe over the next 2 to 3 years, private banks do look attractive to us. And I've been harping on this point for quite some time. Private banks are gaining market share and they're likely to continue to gain market share. They have far better technology than the public sector banks, and they have way better asset quality. If India has to grow at 6 to 6.5% real rate and about maybe 11 to 12% nominal GDP growth rate, that growth, both in consumption and investments, would have to be financed by the banks, and private sector banks would have to take a lead role in that. I would also point out industrials, and that would include the defense sector. That's likely to remain a strong theme for the foreseeable time horizon. One has to be a bit careful about the valuations here. And also the consumer discretionaries. I would include the hospital chains and diagnostics into that bucket. Valuation, sensitivity would be imperative here also. But broadly, getting more cash into the hands of the urban populace and the government workers would act as a catalyst, possibly later this year.
Got it. Manishi, my final question would be, where is it that you are not constructive at all? I mean, I sense that you believe that the markets could be contained or maybe drifting lower if indeed the earnings are capped at 10-12% and multiples are going to go down. So where is it that you reckon that downside possibilities are the highest?
Again, I would focus back on the slightly longer term, maybe over the next 2 to 3 years. I'm not positive on consumer staples. Their growth rates, the secular growth rates, are possibly in single digits. Many of them are trading in, possibly around 30, 40, 50 times P multiples. Clearly unsustainable. Second, and here I differ from some of the earlier, the market participants that you mentioned. I'm not really positive on Indian IT at this point of time, despite the fact that it has corrected. I think this recent, discussions about the staff reduction that, the large companies like TCS have talked about, that's kind of a canary in the coal mine. It tells us that demand from the Western Hemisphere for these services are declining, not recovering as yet. The pressure from AI on the traditional services that they provided is intense. And until and unless some of these companies reinvent themselves, it would be really difficult for them to maintain their historical growth rates and margins.
Got it. Okay. Manishi Chaudhary, thanks so much for joining us today and giving us your perspective. Really appreciate your time. Well, it's primary market time, and of course, we've had a very strong listing, and we've got an interesting company where the issue is opening today. Regal Resources, the fresh issue of 210 crore shares and an OFS of 96 odd crores, which makes the total issue size about 306 crores. Mr. Anil Kishore Puria, who's the chairman and managing director of Regal, as well as Karan Kishore Puria, whole-time director, join us right now in our studios. Gentlemen, thanks so much for joining in. Really appreciate your time.
Thank you.
By the way, why AA in Regal?
It's basically numerology.
Okay, I thought as much. Okay. Well, I hope that's paying off per se.
It is, because you can see it is reflected in the results and the growth of the company.
Sure. So, okay, let's talk a bit about this. I mean, you're manufacturing specialty maize products in India, I presume, right?
Yes,
Could you tell us a bit about your business?
Yes. Technically, it's called corn wet milling.
Corn wet milling.
We process maize, we break the maize, and there are 4 ingredients from maize which we get, which is inherent in maize. One is the carbohydrates, which is starch. There's a primary finished product which we have. One is protein, which is called gluten. And one is fiber, which is basically the chilka of maize, which you have above. And one is germs, from where you get maize oil.
Okay.
Yeah.
Okay, so that's the business. You're kind of breaking down maize and doing ancillary products with it to be...
Yes, breaking and separating.
Okay, breaking and separating. I presume this is largely a B2B business?
Yes, 100%.
It is largely a B2B business. Okay. So, and from the time that you started the company to the time it's really taken off, right? Tell us a bit about that. What's the recent performance of the company been? And how do you expect this to move ahead?
So we started with 180 tons per day crushing.
This was when,
in
sir?
2018-19.
2018-19. Okay.
And from there we have come to 825 tons per day at the moment.
Okay.
And we are, the capex is going on, the expansion is going on, and we will be completing 1650 tons of crushing by this quarter end of 25-26. So by January, February, March.
Okay.
So we'll be doubling the production basically.
Okay. And Karan, or is the IPO proceeds being used for this expansion plan, or is that for some other purpose?
No, the IPO proceeds are primarily being used to pay back debt. So we operate in Bihar and we are headquartered in Calcutta, and the Bihar government gives certain interest subsidy. So debt on which we don't get subsidy, we are paying that back. And as we expand, we've already got internal accruals and bank loans committed, for which expansion is already happening. And we've already ordered all the machinery, plant, and it's in erection commissioning phase. So IPO proceeds are not being used to expand, it's being used to pay back debt on which we don't get subsidy.
And some general corporate purposes, I presume. Okay, great. I look at your numbers, gentlemen, and on the revenue front, yes, it's really impressive. From FY23 to 25, you what? Nearly doubled, or maybe 70-80% growth in over 2 years.
About 37% CAGR last 3 years.
37% CAGR last 3 years. Okay. So tell us about why has that growth been so large? Is it suddenly that the market is discovering a business like yours? I don't know if too many businesses like yours are listed per se. So why this strong growth? And is this something that you can replicate? Let's just first talk about the revenue in the top line.
Revenue this year was about 915 crores.
Yes.
And the EBITDA was about 112-13 crores. And the PAT was 47 crores this year.
Yes.
Which was nearly doubled since last year.
Yes.
The revenue went up by 50% from 600 crores to 915 crores. So this is basically adding on to production, adding on to the capacity which we have. That is the main factor. And of course, because of the PAT and the EBITDA is all because of course, economy of scale and the efficiency, and of course, the add-on of the capacity. So that was 3-4 reasons why we had this.
Got it. And sir, you expect this to continue going ahead? I mean, I'm just trying to understand what is the quantum, what is the market size? What is the quantum of the market size that you are attacking with your current and expanded capacity? And how do you see, or for how long are you confident about the growth trajectory? I'm sure you have confidence in the business for 10, 15, 20 years, but let's talk the slightly near term, 4-5 years.
What we are doing is basically increasing our capacity to 1650. At the moment, we're not making too much of value-added products, rather very negligible. So with the additional capacity, we will convert ourselves into value-added products.
What are the nature
The
of
value-added products is basically liquid glucose, maltodextrin powder, dextrose monohydrate, and dextrose anhydrous.
Okay.
And apart from that, a lot of modified starch, which are small quantities, but there are a number of modified starch in the basket. So that will increase our EBITDA and the PAT, and of course will increase our top line, and the additional revenue from value-added products will really push our bottom line as well as top line. Both.
Very good. Now, Karan, I'm going to come to you with 2 questions. One is something that I wanted to know. If there is a market size like this, what is the current market size, and where are you on that pie? I mean, you are 5%, 10%, 15%, what are you?
So the total market in India is about 20,000 metric tons per day. When we started with 180 metric tons per day, we were less than 1%. Right now with about 825, we are 3 to 4% of the market. And once we expand, we'll be about 9 to 10% of the market. We're actually we were the smaller and one of the fastest growing players in this space. And I think growth is also in the DNA of the company. Sure. And last 7 years has been good. We've grown and doubled every 2 years. And hopefully we can keep on that trajectory because the market is large. We're only 3-4% right now.
How strongly is the market growing, by the way?
So we believe the end user industry is growing at about 7 to 8% because a lot of our products are being used in paper, food, pharma, FMCG style companies, which are all growing with GDP style growth of India as well. So 7 to 8% is what we're seeing the market grow at.
Okay, and you believe you can outpace the growth clearly by what you're doing. At 1650, you're about 10%. Are you amongst the largest amongst your competitors, or are there larger players than you?
We'll be number 3 or 4 in the industry at that time, but we'll have the single largest plant if all things remain constant. So we'll have a 2-fold strategy. We've gone for a contrarian play where we are a single plant focused company. So we get great economies of scale and we can focus in a geographic area as well. And secondly, because we'll be a larger plant, we can compete with larger players as well who might have slightly additional capacity. So number 3 or number 4 in terms of overall capacity, but number 1 in terms of single plant capacity.
You want to add something to that?
No, so he's completely. We are in the same sync, of course, father and son. So we have to be in same sync.
Yeah, most certainly. Okay, the growth plans and whatever SEBI rules allow you to talk about. But do you envisage that the kind of growth that you've shown from FY22 to 25 is something that you can replicate for the next 2, 3, 5 years?
I'm 100% sure about that.
So you expect what nearly. You've doubled EBITDA from FY23 to 25. I heard you say in your answer that the new plant is margin accretive as well. So what are your current margins? Where do you expect them, let's say FY28?
So about the future projections will be difficult to talk about.
But I just heard you, I don't want you to give me an exact number.
Because this figure was basically in our DRHP that we are expanding and we are adding all these derivatives. So we had the liberty to say.
Okay.
But
let's not get into an exact number. I don't want you to have any issues. But you expect that the kind of EBITDA growth rate, maybe not the growth rate, but the trajectory will continue?
So substantially. It will rather, I feel that it will be better than last.
Okay.
So if I may double down on what my father said, right? With the expansion, we'll increase top line. With the new products, we'll expand and make the bottom line more efficient as well. And as we become bigger in a single plant strategy, we also get great economies of scale. So over time, the EBITDA will become more efficient and there will be expansion. So he's already mentioned it, but we do see that growth happening.
Okay, great. Well, we wish you all the best for this and more. Thank you so much for taking the time out and being here, and all the best for the IPO.
Thank you so much.
Thanks
Pleasure
a lot,
being
thank you.
No, pleasure was entirely ours. Well, promising guidance and interesting company. I hope you got a brief account of what Regal is like. Regal with a double A, by the way, keep that in mind. Okay, the next company in focus before we wrap up the show, Astral in focus. Missed estimates, the stock is in pressure today. I spoke to Astral's ED and CFO Hiranand Savlani about the company's growth plans going forward. Listen into a small slice of that conversation. Mr. Savlani, what was it? PVC prices dropping, which led to this performance in Q1?
Yes, absolutely right. That the PVC price on YOY basis, if you see, it dropped by 14%. So that was the reason of drop in the top line. Otherwise, the volumes were flattish. Overall, the demand scenario in the industry was flat. So because of that, this situation is there. Otherwise, I think margin front, I can say that if you remove out that 25 crore rupees of inventory loss, I think margins are almost in the line with normally we are delivering in Q1. Normally, our Q1 is loaded with the PVC mix on the higher side because agriculture demand will be there. So because of that, if you historically see for last 7-8 years number, Q1 is always low with the margin because of the PVC mix is high. Our Q4 is always peak where the CPVC volumes are very high.
Got it. So how do you, I saw that in some cases the volume of take in the adhesives business, value in adhesives business and otherwise have inched higher in July. But what about PVC prices? Is there a trend that is formed? Is it easy to predict that trend as well, Mr. Savlani?
So I think for a commodity, it is very difficult for anyone to predict the trend. But one thing is good that now the polymer is trying to settle down. So the slowly and gradually that confidence is coming. So because of that, you can see July numbers were very high of 30% volume. Of course, base effect was there in that we can't say that it is a normalized kind of last year July. So because of that, it is also showing very high volume. But otherwise, if I remove the base effect also, then also the demand scenario it was good in the July. But again, on the basis of 1 month, we can't predict anything. So we have to wait for some more time how the volumes are shaping. And then based on that, we will be in a position to say that now the situation is improving.
Got it. You span a variety of businesses now, Mr. Savlani, while pipes is still the dominant factor, but there is adhesives, there is bathroom products, etc., so on and so forth. So sanitary ware, quite a number of things. How is demand on the ground? We are trying to ask this to every large company about whether demand on the ground is picking up, is it steady or is it coming off? What do you have to say to that?
I think demand is not picking up fast, but demand is okay. I can't say demand is great. So demand scenario is okay kind of things. But normally this kind of scenario is happening in the industry. Once you are delivering 2-3 year good number, 1-2 quarter, 3 quarter maybe little bit lower. But overall we are of the view that demand is going to be there. There is nothing to worry about the Indian economy. And the way numbers are shaping, we are confident that 1 or 2 quarter will be little bit here and there. Like in adhesive, you say Last quarter was little weak, but again you see the July is the 30% volume value growth. So it is maybe a spillover. Sometimes some quarter will be low, sometimes some quarter will be high. But overall, again, whatever we are guiding of NSE for 15% kind of growth, we are confident that we will be able to maintain that kind of run rate.
Got it. Okay. You are also this whole chatter around your backward integration by setting up your own CPVC resin plant. Now, Mr. Savlani, would you want to? I mean, I'm guessing it's good to have as much control as you can on the entire chain, if you will. Can you tell us the rationale for doing this? I believe what you've said is that this one will come up. Commercial production by Q2 FY27 now. So tell us all the details about this, the rationale, the outlook, and what it does post Q2 FY27.
So Neeraj, the biggest thing we should first understand what is the CPVC market, because unless until we will not understand, then we will get a lot of confusion in the mind. What was the rationale of Astral to go into the CPVC? The biggest rationale for Astral was the quality of the CPVC. I'm sure you must have listened recently the news going on into the social media and many other industry players also that many of the projects that CPVC pipe is not functioning very well because many of the players are not able to maintain the quality of the product. So because of that, the pipes are getting leakage. Now for Astral, maintaining quality is the mantra, and that is what we have maintained for so many years. So getting the quality supply at an affordable price is very, very important for any industry to sustain for a longer period. If you remember in 2015, when we came out from Lubrizol and started backward integration and making our own compound, and we did research for almost 2 years plus, and then we developed our compound, and when we came into the market, everybody was worried that Astral is getting out from Lubrizol and they will be in big trouble. But in fact, our margin expanded by 300 bips. And that is not I am telling you today, it is there in the number. You can see our number from 2015 and today's number. So that was the biggest advantage we do. Similar thing we are seeing that number one thing is the quality. Secondly, today you see the CPVC manufacturer who are there in the country, they are generating 25 to 30% kind of EBITDA margin. So you can understand the kind of margin. Secondly, their investment cost is very high for the plant. And the operating cost is also very high. If you compare the technology which Astral has developed, we are quite confident that our cost will be very low compared to the industry. So that is going to give us a big advantage in the coming time. So quality was one thing. That is why we have taken the decision, because the way India is putting anti-dumping duty on the CPVC, all the international players, the Japanese player or maybe the American players, their costing will never going to match with our costing. Their costing is going to be very high. Secondly, they have to incur the logistic cost to bring that material from Japan or maybe some other countries to India. So that cost is also going to be very high. If we are manufacturing locally, I'm confident that our costing will be very low, and that is going to give always edge to Astral compared to any of the competitor. And it is not that overnight Astral has taken the decision. We are working this technology for last 3 years. Once we got confidence, we have taken multiple batches of this in our R&D department. And when we got the right quality and the right costing, then we took the decision to come into the plant. So I think it is going to be a game changer for Astral over a period of time. It's the only question of next 12 months. I can only request that you wait for 12 months and see once our production starts and what kind of advantage Astral is going to get. Third thing, the way polymer prices has come down, I am sure that a lot of demand is going to shift from PVC to CPVC. That the volume of CPVC is going to go high in the coming time. Now, when the volumes are going to go high, then you need the raw material consistency and the right pricing. Okay, because you are going to play with a high volume. So in that case, this plant is going to help us in a big way. And that is going to be a real benefit to Astral when the volumes will go high. And today also the manufacturers which are supplying to India, many of the manufacturers are not giving the right quality. Sure. And that is why the failure is coming. Today many projects are getting failure. So these are the rationale why Astral has taken a long-term view. And our investment is what? 120 crores.
Exactly.
Like 1,000 crore EBITDA. 120 crore is not a big number for us.
So, Mr. Savlani, let's assume that it helps you in FY27 in the second half. Until then, is is the picture looking slightly better or stable? And do you expect that some stability that you've seen in July, can that be extrapolated for Q2 at least, or is that difficult to say right now?
So I think on a 1 month basis, I don't want to jump in. That is not a right way also to communicate any of our investor. So let us wait for a couple of more months and see how the situation is getting out on the ground. And based on that, I am sure that on the second half, we will definitely communicate to all our investors what is the ground reality. And based on that, if needed, we will revise our guidance also. But wait for the Q2 number and then we will be able to communicate that thing.
Okay. And just wondering, just one last question, Mr. Savlani. So that is on demand, but would margins show a better trend from Q2 itself?
Definitely.
Margins
because
will.
You see, today, if you remove this 25 crore rupees of inventory loss, that is not going to be there in Q2.
Okay.
So in that case, margin will definitely going to be better.
Got it. And last customary question I asked you sometimes when you talk about capex or expansion in other categories, you don't need to raise any external capital, Mr. Savlani, I presume. No equity capital raise in the near term, I presume.
So today also, if you see, we are sitting on close to about 500 crore rupees of cash.
Perfect.
So there is no need for raising any of the capital.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिताई, ऐसे कोई मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the out
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachajani. And we'll take you through the next 1 hour of trade. Morning, Mahima.
Morning, Alex.
So it's looking like well, I don't want to say muted, but it is actually just about flat. Take a look at the benchmark Nifty 50. It's 0.25% in the green, 0.25 points or less than 1 point or thereabouts, 2 points in the green.
Almost 0%.
It's pretty much flat. It's completely unchanged. And so therefore, it's quite a bit of chop and churn. You've seen a recovery from the low point of the day and then coming off of the high point of the day, but it's a pretty narrow band if you think about it for the benchmark Nifty 50. Let's take a look at the contributors as well and see what's moving right now. And you will see that it's the heavyweights once again. HDFC Bank was one of the gainers in trade yesterday and contributed on the gaining side, but today it's proving to be a bit of a drag. So is ICICI Bank under a tad bit of pressure. Yesterday it ended off the low point of the day, but today it's losing about 1% or so, and so therefore it's weighing on the benchmark. You have L&T, Maruti Suzuki, M&M, Reliance Industries on the other side that are lending a little bit of support. Let's also take a look at the broader markets and see where they're at, and you have the mid-cap index trading just about flat as well, and you have the small-cap index that's up about 0.1% or thereabouts. So pretty much the same tone and tenor across the market, not just for the benchmark Nifty 50. But you know what, I do want to ask you, Mahima, I'm sure that you've been looking at a few stocks from the broader markets that have been reacting to their numbers. There are a few interesting numbers that have come through on the plus side and on the downside. Right? So Praj, for example, stood out to me. Very weak set of numbers, and that's reflective in the kind of stock performance today. There are a few others as well. HLE Glasscoat, for example, stood out to me as a good set of numbers, and that reacted positively. What else are you looking at?
There's also Titagarh, which is buzzing on the back of its earnings. Well, it's not actually earnings per se. The numbers were not very good, but the commentary seems to be positive, and that seems to be working for the counter. Although off from its days high, but still trading 3% higher. There's also Man Industries, which is down 8%. There's Astral, which is down 7%. There's also Camlin Fine Sciences, which is down 5% odd. But Time Technoplast is another counter on the back of earnings, which is down 3% odd. Kena Construction on the back of earnings, again down 3% odd. But some counters that are doing well. In fact, if you can try to pull up the BSE 500 and see as to what counters are in positive. Some specifically on the back of its earnings include HPL Electric, there's Greaves Cotton. Those are the counters that are earnings specific, but Sonata Software, Star Chem, Easy Trip, SJVN, second day of gains for SJVN today, up 5%. Jindal is up 5% as well, and Zensar, finally some relief there, up around 3% when it comes to the gainers on the broader end of the spectrum. All right, so that's with regards to where the markets stand, but we'll quickly move on to the queries for the day, and we're joined by Swati Hotkar, AVP Technical Research at Nirmal Bang, joining us now, and in a bit we'll also be joined by Astha Jain of Hem Securities. Swati, I'll take up the first question with you. SAIL is the counter, and Mohit from Ludhiana wants to have a view on this one. He's got 500 odd shares, bought at 104 a piece, and from a longer term perspective, would you indicate him to continue to hold with respect to where charts are concerned?
First of all, good morning, all of you. Definitely, the view is positive on the sell. We are continuously witnessing a very strong momentum rally. But in the last few trading sessions, we have hit the profit booking session, which took a stock towards from 138 to 120 levels. But somehow it has managed to maintain the cluster support of 120 levels on a downside. I will suggest to hold on your long positions by keeping a profit stop loss of 118. I believe the stock has a potential to reach up to 130 to 138 rupees. That will be the short-term target. And for long-term targets, 145 are the levels we can see in the coming 3 to 4 months. So my view is positive. You can definitely hold on this particular stock.
Okay, hold on to sale as a view. It's up quite considerably over the last 6 months, relatively speaking. Of course, gains of as much as 16%. Kiran is calling us from Hyderabad. Kiran, you're calling about an interesting stock. What do you want to know about?
Sir, good morning.
Good morning.
My query is regarding PG Electroplast.
Yes.
I'm actually held up in this counter. I have purchased 825 shares at 668 rupees. So I would like to know both long-term and short-term view on this counter, sir.
Okay. So,
sir, and again, one more query,
actually
extending to it. So, is this the risk you have all been discussing? NDTV Profit and every one of you are discussing regarding the EMS space, sir. Is one bad quarter wouldn't justify the valuation? Is this the punishment the stock is going to get, like Keynes, Amber, Dixon, and everyone are going to be punished in the same way? Is this a classic example of valuations?
Yes.
And are there any chances to recover my money in another 1 year? Or should I book the losses and shift to some other counters is a better strategy?
Yeah. So it's a pretty comprehensive question. I'm glad that you've been paying attention to the conversations on the channel. Let me ask you a question. In fact, since this is a stock that has gotten battered over the course of the last couple of trading sessions and quite a considerable amount of value has been lost, we're also joined by Astha Jain this morning. Astha, very good morning to you. I will come to you, Swati, eventually on the charts for PG Electroplast, but let me start with a fundamental question to Astha. Astha, the earnings were a disappointment to say the very least, and we spoke with the management yesterday and they said that there are issues in terms of the air conditioning demand for room air conditioners in particular. They were hopeful that a second summer, if at all it comes through after the monsoon, would bode well for them, but the fact is that the previous financial year was flat in terms of earnings. This year as well, they've cut their guidance. So therefore, the question from Kiran is apt. Are valuations playing catch up right now in terms of the downside, and should you exit right now?
Hi, good morning to all of you. See, the thing is that we all know that the AC room growth is not that very strong. Secondly, the margins were not very strong, and the guidance which the management has slashed significantly, I think that is also acted as a dampener to the issue, to the stock prices. But now my idea here is, since the management is positive about the second half of FY26, so there is no need to exit from this counter as of now. We should wait, at least if management is saying second half, at least we should wait for 6 to 9 months. So this is what I believe, that if the time horizon is such, then definitely we will see how the things pan out to be. Now, if we are seeing the other results, supposedly like Voltas, what we have seen in the case of Voltas also, we have seen a strong, fall in the stock prices on the back of a weaker results. So what we are seeing since the onset of the monsoon was earlier, so we have seen that there was a significant downfall in the room AC demand, and that's why we have seen these companies not giving strong guidance regarding that. But my outlook here is to continue remain invested in the counter, but here the time horizon should be more than 6 months, and then make any sort of decision. Right now, don't exit just on the basis of what we have seen in the financial numbers as well as what management has guided to us.
Okay, very quickly, I may go across to Swati. Swati, on the charts, the question that he had specifically is, should he exit on the fundamentals? The answer is no. But the other question is, can he recover his cost price in a year's time? And he's bought at elevated levels. What would you do?
No, definitely. In the last two trading sessions only, we have seen a lot of price correction from almost 770 to 470. I believe that we might witness some sort of a more correction on the price basis. 460, 450 levels can be act as a very strong bottom levels because the counter is already entered into the oversold zone. So the depth is limited, but bounce back we can likely to be witnessed in the near term future. My initial targets will be 660 and beyond that level, 720 levels can be seen. So it's a whole from my end not to book the losses at the current market price. So it's a whole from my end.
Okay, so hold both in terms of where fundamentals and technicals are concerned for PG Electroplast. All right, we've got our next question from Soumya Deep Chaudhary, who is writing us from West Bengal, and she's holding 75 odd shares of Sterling and Wilson Renewable Energy at 550 a piece, and wants to know if can continue to hold for the next 3 to 5 years or not. Astha, I'll come to you on this one. Is this the right counter to play the renewable theme, or would you recommend something else?
So regarding this counter, what we have seen that there was a sharp downfall in the financial performance of this counter, especially if I talk about quarter one of FY26. So that was one of the reasons that we have seen that this stock has not performed since last few months. But I'm very much positive on the industry as such, and hence I think there is no need to exit from this counter just on the back of the poor results which the company has posted. We are quite optimistic that going ahead this company will going to post a strong set of numbers, and hence we are giving a whole recommendation to this counter. For the price target, we are just giving the price target of 320 to 330 at the initial levels, but we believe that these targets are subject to revise, upwards from now.
Okay, all right. So that's with regards to where Sterling and Wilson stands. We've got our next caller. Radha Lakshmi is calling us from Chennai. Radha Lakshmi, hi. A very good morning to you. How can we help you today?
I'm just regarding the Sundaram Holdings. I just wanted to know whether to hold it or sell it now, book profit. I bought it somewhere, my average price is around 61 rupees. I have 2,750 shares now.
Okay.
I just wanted to know what to do now.
All right. Before I move on to the guest, just want to understand as to what was the thinking behind buying this counter at such an attractive price, because you're sitting on profits of over 11 lakh rupees.
See, basically, I'm from Chennai. This is from Sundaram Finance Group.
Right.
And they have holdings of their companies. Correct. Sundaram Brakes India, Turbo Energy Limited, and Sundaram Home, Sundaram Group. Everything is, they have stocks of all their companies, group companies. Understood. And they get good dividend. And they are also holding lot of other companies. They are holding Brakes India, which is not a listed company, Turbo Energy, which is not a listed company. They have another Impal also they are holding.
Interesting.
TVS group companies, they have almost all the companies with their packet.
Okay.
So their intrinsic value is going up.
Ma'am, I'm curious, and we're always happy to hear from viewers and investors that have done their research. Have you been investing in the stock market for a long time?
Yeah, I've been since 80s.
Since the 80s, wow. My goodness. Wow.
Impressive.
So can you give us a sense of some of your longer term holdings? This seems to be one of them. Anything else that you've been holding for the long term?
I have Maruti, bought it somewhere around, even public issue holding, I'm holding Maruti, and I bought it around COVID times. I bought lot of shares, 90 rupees. Tata Motors, I bought 1,000 shares, and then 130, I got ITC around 5,000 shares.
Wow.
Something like that.
Wow. That's incredible.
That's the dream portfolio for sure, Radha Lakshmi. So congratulations on that. So I'll take your question up with Astha specifically. Astha, she's sitting on profits of over 11 lakh rupees. Would you recommend booking partial profits right now, or would you recommend continue to hold?
I would like to congratulate ma'am for such a great investments and such a great portfolio. Talking about Sundaram Holdings, yes, we have seen that their price to book multiple is standing somewhere at around 3.5 times. So when she was talking about the intrinsic value, we take it as the NAV or the book value. So yes, if I take the valuation from the book value perspective, it seems to be fully priced because the industry price to book multiple is also standing somewhere near to 3.5. Now about the result, I would like to say that results were okay because we have seen just 3% growth in their bottom line. So my idea here is, yes, they have got a very, very strong holdings. So just poke 1/4 of the profit, not partial also. So I would recommend to hold 75% of the quantity while booking 25% of the quantity at this point of a time, because results were not very attractive, and from the valuation perspective also, standing at 3.5 time price to book multiple is again making this counter fully priced at this point of a time. So the idea here is to book not partial quantity, but 25% of the holding and remain invested in rest 70% of the quantity. As here, I think going ahead, what we believe that this counter is well poised to move upwards from here, and we can see the level above 500, which is 550 at the initial level.
All right, so that's the view. Radha Lakshmi, once again, thanks so much for calling us, and pleasure speaking with you as well. Thank you so much for sharing that with us and with the rest of the viewers as well. That's just an instance of the benefits of holding for the long term. Let's take the next question. Rajesh is writing in from Kashmir, and he's got Cyient Limited, which he's bought at levels of 1,322. And so he's incurring a loss at this point. If I remember correctly, the numbers are yet to pick up on the earnings front, but since it's a 1-year time frame, Swati, I'll come to you on this one. Should he hold on to this with a 1-year time frame, or should he not?
Definitely you should hold on this particular counter, because already we have seen a sell-off in this particular stock from 2200 to now 1100. So the retracement has been completed. Stock is showing a positive crossovers from the oversold zone. So I believe that the selling pressure will likely to be cooled down, and we are likely to witness some sort of a fresh longs positions which can be initiated at the CMP as well, or they can hold their long positions for initial target of 1400, and beyond that level 1600s can be seen. So no need to book your losses. You can hold on your long positions. If possible, if you're getting any dips towards to 1130, 1120, you can average it out so that your buying price will come down, and the stop losses for this particular position will be 1,080 rupees on a downside. So as long as holds that support levels, the view will remain a positive in this particular counter.
Okay, all right. So the view is positive on Cyient Limited. Watch out for the earnings as well, though. Mohan is calling us from Hyderabad. Mohan, very good morning to you. How can we help you today?
Sir, good morning, Alex sir, and madam and panel.
Very good morning. Please go ahead.
Yeah. Sir, a small query. I would like to know about Lloyd Enterprises. I would like to purchase it. It has fallen from 96 rupees to 76 now.
Yeah.
And some corporate developments are taking place. They are doing good. They are the promoters of Lloyd Engineering and stake in Lloyd Metals. Recently, they have taken stake in mining, also gold mining, and some infrastructure, real estate also. I want to take for 1 year perspective. Can I buy, sir? I would like to know about the group. I don't know about the group. I request the panel experts.
I see that they're yet to post their June quarter numbers. Asta, do you have coverage on this one? We saw a pretty sharp uptick on the top line in the fourth quarter of last year, but the margins, as I see, have contracted quite substantially. Do you have view on this one?
So yes, talking about this counter, first of all, they had certain fundraising plan, and in that regard only, in fact, some right issue was also there. So now the management is thinking about raising of the fund, and yes, results are due on the 14th of this month only. So it's better to wait till the results, because what we believe that this counter will definitely prove to be a very strong candidate going ahead, the kind of management commentary we have seen over the past. So my idea here is to just wait before the results, and after results just review your query once again in the show, because I think it will be a better or a safe bet to move after the results rather than just before the results.
All right, okay. So that's with regards to where Lloyds is concerned. We've got our next a question from Tanuka, who's writing us from Kolkata. She's got 15 odd shares of Varun Beverages, and this is at 460 a piece, and wants to know if can add more on the basis of SEP, that's stock equity planning. So basically an SIP for stocks is what is the question for the next 18 odd months. Asta, I'll stick with you for this one. Is that advisable for a counter like Varun Beverages?
Yes, sure, because what we believe that Varun Beverages is well poised to move more upside from here. We are giving the targets of around 580 to 590 for this counter, because what we have seen in the results also, yes, they are performing good. Results were quite okay, and the kind of expansion this company is doing definitely make it an attractive bet. and one can do SIP at the lower levels also, but the price target which we would like to assign to this counter is 580 to 590.
All right. Okay, so that's with regards to where Varun Beverages stands. We've got our next caller. Vikas is calling us from Vijayawada. Vikas, hi, a very good morning to you. How can we help you today?
Yeah, good morning, ma'am. I'm holding Sansera Engineering from past 1 year. So my query is whether I can hold on to this or switch to SJS Enterprises or any other better play in this space.
Okay, and you are looking from what time frame perspective? What is the time frame in mind that you can continue to hold the counter?
2 to 3 years I can hold.
Okay, all right. Okay, Vikas, I got your question. I'll take this up with Asta again. We've got a lot of fundamental queries today. But Asta, your view on Sansera Engineering or SJS Enterprises or any other counter that you like in the space?
So, Sansera Engineering, the performance was little subdued because the multiple headwinds which this company was facing, and hence we have seen the revenue was muted with a 3% growth as this company is into, precision engineering. And I think going ahead, we believe because major part is coming from the India, because as far as I remember, 68% of their revenue is coming from India and then Europe and the rest of the world. So India being the major market to them, I believe that this counter can show strong upside from here, and even management has also addressed the issues regarding the global headwinds. So I believe that they are well known about all these facts, and the kind of focus management is having right now on the expansion definitely make it as a good candidate. So there is no need to shift to SJS Enterprises from Sansera Engineering. Wait at least for coming 2 quarters and then make any sort of decision to change the counter. Hold is a recommendation from my side.
Okay, hold is a recommendation that Asta has. All right, but with that, it's time to slip into a very short break. But viewers, don't go anywhere. We'll be right back answering all your queries on the other side. So do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय हिंद, जय हिंद।
हेलो
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising. Welcome back. You're watching Ask Profit, and our first caller on this side of the break has been waiting patiently to speak to us. Karthik, thanks so much for holding the line. And how can we help you today?
Yeah, hi. I was holding Wockhardt, Wockhardt Pharma for 1691. I had like 35 shares.
Yes.
So I'm currently on loss. I'm on a loss of like 35 shares.
Yes.
So I'm currently on loss. I'm on a loss of like 7.2k.
Yeah.
So I just want to know whether I should hold on to this stock. What is the growth of this stock? A bit idea about what will be late. Should I hold on or should I sell it off?
What is the time frame that you have in mind, though, Karthik? Did you buy it for the long term?
No, not for long term.
Not for the long term. So, did you have a time frame in mind? Did you think that you'd hold it for maybe 1 month, 2 months, 3 months, 6 months?
Maybe like 4 months.
4 months, okay. All right, so Swati, on the charts then, Wockhardt 1691 is the buy price, and there's so much swirling uncertainty about tariffs and everything to do with pharmaceuticals that this entire sector has been under a little bit of a cloud, right? So what would you do for the next 4 months? Would you hold?
Yes, definitely. We are like to hold. No need to book your losses because on the technical front, the RSI shows that the stock is trading there by the oversold zone. We have already seen a retracement from almost 1860 to 1400 levels. Upside, a momentum will likely to be carried forward towards first target will be initial will be a 1600 provided by its 20 DMA average. Any move above that level, we'll see the extension of this bounce back rally towards to the 715. So if we're having a view of at least for 6 months, definitely you can hold on your long position. Downside, it has a very good support of 1400 rupees. So as long as it holds that level, the view will remain a positive. So it's out from mind.
All right. Okay. So that's with regards to where Wockhardt stands. We've got our next question from Reshma Bhatia, who's writing us from Pune. She's asking about Hindustan Copper. She's bought 400 shares at the levels of 257, sitting on a loss of 8,000 rupees right now, and saying that now that the stock is tanked, it's looking attractive, and wants to know if she can add 400 more shares at the current levels, and wants to know if she can make 12 to 15% of profits, after averaging out. So Ati, I'll come to you on this one. Do you think that's the right approach with regards to where this counter is concerned?
See, you can hold on this long position, but this is not the right time to take the average quantity at the current market price to take a long positions. If any move towards to 220 to 210 level, that will act as a very strong support level. So if we get a retracement up to 210 level, at that levels you can definitely add your long positions, but not at the current market price. A short-term target for this particular stock will be at around 260, and beyond that level 280 levels can be seen. So for the longer term horizon, definitely view is positive. But for a short period of time, we are likely to witness more selling pressures, which might drag a particular stocks towards to 210 to 220 levels. So not to be in a hurry to take a long positions at the current market price.
Okay, all right. Praj Industries, a stock that is seen quite a bit of selling today on the back of a weak Q1 number. The margins contracting quite sharply, the revenue declining as well by 8% or thereabouts on a consolidated basis. Asta, the question is from Santosh, who's writing in from Chennai. He's got at levels of 525 and he's wondering whether to hold or sell for the long term.
So I would like to recommend hold for this counter, although we know that the results were not very attractive. But I think going ahead, we can see a strong set of numbers from this counter. This is not for the coming quarter I'm talking about. This is 2 quarters down the line, because what we believe that the margin compression which we have seen will definitely going to improve over the period of a time, and in fact some growth can also be witnessed in the financial performance, especially on the bottom line going ahead. So we are positive on this counter, but not from the 3-month perspective, but from the 6 months point of view. Hold is a strategy from my side if the time horizon is 6 months or more.
Okay, hold if the time horizon is 6 months or more for Praj Industries, but the stock clearly under pressure today, almost down 7% as we speak. All right, we've got our next caller. Murli is calling us from Bengaluru. Murli, hi, a very good morning to you. How can we help you today?
Very good morning, and thank you for the excellent show continuing.
Our pleasure, Murli.
Yeah, apart from know your customer also, company also.
Oh, thank you so much for watching that show as well.
Yeah, that's very important where management will also come. And you don't give more than 5.5 out of 8. Even for excellent and very conservative.
Yes. We cannot risk investors' money, so we have to be conservative.
That's true. Yeah, very, very nice. Excellent.
Yes.
My question is, I want to buy GRSC.
Yes. Okay.
Considering the recent performance and the first quarter. And number 2, it has a good ROE also. I see an excellent future for the company.
Correct.
Can I add now on SIP basis, keeping another 2-3 years in mind?
Okay. All right. Murli, got your question. I'll take this up with Asta. Asta, do you think this is the right time to buy Garden Reach and for the next 3 odd years? And he's saying on an SIP basis.
Yes, because order book is quite strong. 22,680 crore of the order book is something very strong, which we have seen from this company. And in fact, results were also okay. The idea here is to accumulate this counter, or one can do SIP also, but at every lower level, because what we believe that the industry outlook is not that very strong, and that is why we are not seeing these counters to be performing in line with their financial performance, especially if the financial performance is of this sort. So idea here is to make a SIP in this counter at every lower level, and definitely remain invested if anyone has this counter already in the portfolio. Price target which we are giving for this counter as of now is somewhere at around 2600 to 2650, but in the longer term we are expecting more upside from these levels also.
Okay. CCL Products is the name of the counter that we're talking about next, and we've got a viewer, Harsha from Hyderabad, that's asking about this. He's asking, is there significant promoter holding? Yes. Promoter holding as of the last count is at 46% or thereabouts. He's looking to hold for a period of 2 years. Do you have coverage on this one, Asta? And if so, would you hold for 2 years?
The only problem is with the valuation, Alex, because this is quoting at a price to earning multiple of 38. So that seems to be on the higher side, and in the light of the fact that the results were not very encouraging, especially if I take out the other income and exception item, the bottom line growth is just a muted one, which which I feel makes the valuation more higher at this point of a time. But again, we are positive on this counter from the longer term perspective. So remain invested in this counter, although we can see some downfall from here, but there's no need to worry. Ultimately, this counter is well poised to move till the level of 950 or so.
All right. Okay, so that's the view with regards to where CCL product stands. We've got our next caller. Tejpal is calling us from Hyderabad. Tejpal, hi, a very good morning to you. I believe you have a question on Shriram Properties.
Yeah, good morning, Alex, Asta, and the panel.
Good morning.
And Mahima.
Yeah, this is Mahima this side.
Yes, Mahima. Hope you're doing well today.
I'm doing very good. How are you doing?
Great.
Go ahead with your question.
So I have 25,000 shares of Shriram Properties at 93 rupees. In the real estate sector, I thought this one is grossly undervalued considering the land bank, what they have from the Hindustan Ambassador factory in Kolkata and all. They are building a very lavish villas in Vizag, each villa costing 6 crores, and considering the market valuation of only 1,500 crores, I thought it's a very good stock, and I've put 25 lakhs in it. I want to put more into this. I want to know the entry price.
Okay, that's interesting, and I think you have done your research very well, Tejpal, so we really appreciate that. I'll take this up with Asta. Asta, do you think, right now, by the way, he's sitting on a loss of 66,000 odd rupees right now. Do you think that buying at the current levels and averaging out is the right way to play the entire real estate space, or can he diversify and maybe book some losses, or wait for him to recover his losses?
At least I would recommend him to wait for today, because today is the result date for this counter. So why not to wait for only for a day and see the results? Although we know that this company is having a strong, properties in the Chennai, Kolkata, Pune markets as well. And then now they are setting for more launches because their main focus is the mid-market segment, mid-premium segment, I apologize. So mid-premium segment is where their focus is. But we would really like to see how that will convert, because they have made certain launches also. So how that will convert into the financial performance. So wait at least for today, and then we'll see the results, and then, make any decision regarding it.
Right, so hold off and wait for the results. Dhurjyoti is writing in from Assam, and he's looking at Manorama Industries and Precall. Actually, so I don't know if you have a view, Asta, on this one. He's looking for both fundamental and technical. So if you don't have a view, I'll go across to Swati on this one. Manorama Industries, it is into the manufacturing of specialty fats and butter that is made from exotic nuts and seeds. I'm looking at the quarter performance. In June quarter, they had a top line of 290 crores or thereabouts, and a decent run up, decent growth in top line as well. What's the view on this one?
Sorry, Alex, I don't cover it in the detail on the fundamental part, so I cannot.
You know what? So it warrants looking at, and we will take a look at it, Dhurjyoti. But in the meanwhile, let me go across to Swati on Manorama Industries. Market capitalization, not the largest, 8,162 crore rupees. How would you trade this? Would you buy it for, he's not specified, but would you invest 30,000 rupees in it right now?
Currently, on the technical front, my view is a little bit cautious, because we have already seen a very strong rally from 1,200 to 1,700, and so we are likely to witnessing a profit booking session, which is likely to be extended towards more downfall can be seen in this particular counter, which might take a stocks to us to 1,250. So that will act as a very good support levels, and those levels will be attractive to take a fresh long position. So buy on deep strategy should be implied, but not at the current market price. Any move towards to 1,250 levels can be accumulated a fresh long positions. We are looking for a target of 1,500 and beyond that level, 1,600 levels can be seen. So the long-term view is definitely positive, but for short period of time, my view is a little bit cautious, not to take a long positions at the current market price.
Okay, all right. So that's with regards to where Manorama Industries stands. We've got our next question from Vinay. Basically, what he wants to understand is that in case of demerged entities, the buy average is determined based on scheme of rearrangement. And okay, all right. So, okay, his query is a little different from what we generally ask on the show. But basically, he wants a view on both ITC as well as ITC hotels, and wants to not given the time period as such. So, Swati, I'll come to you on this one. Charts for both of these counters, what are they indicating? And should he continue to hold going forward?
See, on the ITC, definitely my view is positive. One should definitely hold these particular stocks into their portfolio, because from the last few months, we are continuously witnessing a very strong consolidation within the range of 425 to 400 levels. Any move above that, those levels 425, will see the new trend of in this particular counter, and upside we are looking for a target of 440. So ITC can be accommodated at the current market price as a fresh long position. If you're having, definitely you can hold on this particular stock for a target of 440. About the ITC hotel, very slowly and steadily, it's just finding out a very good formations on the highest levels. As of now, my view is definitely positive, but long positions are not recommended at the current market price. If you're getting any dips towards to 205, 210 levels, those levels are attractive to take your long positions. At the current market price, you should hold on your long positions by keeping a strict stop loss of 220 rupees. Upside, we might witness some sort of a positive move only if it manages to give the breakout of 240 levels for a tag. Then the doors gets open for 260, 265 levels. So view is positive for longer term duration, but short term period of time, we are likely to witness some sort of a profit booking into the ITC hotels.
Yeah, I remember did you point out yesterday BAT is looking to sell?
Yes,
they've
pointed that out in their earnings con call.
So there could be
ITC
that
hotels.
overhang on ITC hotels. So it bears out in the fundamental developments also of the counter. Technical levels or technical indicators are pointing to a little bit of caution in the near term, but Swati says it's a hold for the long term. Okay, we've got our next caller from Hyderabad. Govind is calling us. Govind, hi, very good morning. How can we help you today?
Hi, Alex sir. Good morning, Mahima ma'am and all of them.
Good morning, Govind.
Thank you for picking up my query. Sir, actually I have brought United Spirits at the price of 1400 rupees, 150 shares, sir.
Right.
I think I have thoroughly researched the fundamentally strong company. I cannot able to track this quarter results, sir.
Okay.
Can I able to accumulate at least another 150, 200 shares, sir, at this price, sir?
Yeah, you know, I've heard a few people study United Spirits very closely, especially when it comes to their products. Govind, let me ask your question to Asta. Asta, of course, you've studied the financials more than anything else. Therefore, the question is, would you hold at this point?
Yes, definitely a hold from my side, because what we are seeing is that the financial performance, at least because I never use any such product, so I can talk about the financial performance only. So yes, financial performance seems to be strong, and Alex, what we are seeing that in this whole space, especially if we talk about United Breweries and Radico Khaitan also, the kind of results which we are seeing, Tilak Nagar Industries, I mean, this space is looking very, very attractive at this point of a time. The margin expansion is very, very strong. So yes, United Spirits is looking very strong from the fundamental point of view. And idea here is to stay invested in this counter. Price target can be set at around 1370 to 1380 odd levels.
All right. It's a very near-term question, and this is not something that we encourage, by the way. Index options trading is fraught with risk, and I think several studies have pointed that out, not least of which the regulator has come out and said that most individual traders in option strategies for the index tend to lose money. Having said that, we've got a question from Mr. Yadav, who says that he's got the Sensex 81,000 call that he's bought at a price of 118 rupees, and he's talking about today's expiry. Swati, do you have any view on this one?
As of now, I don't have any this particular software which tracks the Sensex.
Okay, no worries. So you know what we can do in the meanwhile is not give him a specific call on the Sensex strike that he's just suggested, or the trade that he's talking about, but give us your intraday call on the, not call, but intraday expectation on the benchmark Sensex.
The view will remain a positive in this particular indices because today we have seen a very good momentum rally in the Sensex as of now. A short-term pullback rally can be seen in this particular indices. I believe that 80,600, 80,640 levels can be tested in the today's intraday sessions. If it manages to hold down the support of 80,370, that is acting as a very strong support levels. So you can hold on the long position as long as 80,370 levels are held on the intraday basis.
Okay. All right. So that's with regards to where, what counter were we talking about in fact?
We were talking about Sensex.
Sensex, okay. All right, okay. We've got our next caller then. Kiran is calling us from Hyderabad. Kiran, hi, a very good morning to you. I believe you have a question on Sai Life Sciences.
Hi, ma'am. This is Kiran here. Good morning, everyone. I bought Sai Life Sciences a couple of months back with a price of 656, around 178. Currently, I'm having a profit of around 40K. So, can I hold for a long term, or can I book profits, and when the correction happens, can I go for additional shares?
Okay. Okay, Kiran, I got your question. I'll take this up with Asta. Asta, what's the view like? He's talking about Sai Life Sciences.
So Sai Life Sciences, the IPO came, I remember, a year back or so. And at that time also we were positive on this counter because what we believe that this counter has got a very, very strong fundamental, especially if I talk about the financial performance. And in fact, the results were also decent. Although the margin expansion was not very strong in this counter, but going ahead, we believe that this counter will definitely prove to be a strong counter for the margin expansion perspective as well. So remain invested in this counter. Maybe some initial fall can be witnessed in this counter, but over the period of a time, we are expecting it to rise till the level of 1,000. So my ultimate price target for this counter is 900, between 950 to 1,000 odd level. But here, the time horizon can be more than 6 months. So for that time perspective, remain invested in this counter.
Okay. The next question is coming back to you, Asta, on the defense space. And Pakshal from Ballari is asking about Apollo Microsystems, and he's asking for a 2-year view. He says results were good. Order book growth is set to be 3x by December 2025. I'm not sure about what time frame the 3x is going to be at, but essentially he's talking about the prospects for Apollo Micro. He's saying, is this a better investment to make, or would you go for HAL?
Even Apollo Micro is looking to be a decent investment opportunity. Why? Because first of all, the bottom line growth was decent at around 27%. Secondly, I'm very much enthused by the valuation, because if I compare it with the HAL valuation, definitely HAL is on the higher side from the valuation perspective. Order book is decent. In fact, margin expansion has also been witnessed in this counter in their results gone by. So my idea here is just on the valuation perspective, because it is also trading at a price to earning multiple of more than 50, I suppose, where the industry price to earning multiple is 100, but HAL is much higher than this. So from the valuation perspective, this is looking to be a good or a decent counter, and hence I am giving a whole rating to this counter as well.
All right. So that's a view on the couple of defense counters that were asked about. Anil is calling us from Bengaluru. Hi, Anil. Good morning. How can we help you today?
Yeah, good morning. Good morning to all. I'm actually holding a Canara Bank of 6,500 shares under this share price of this 1 or 2 rupees. Okay, I wanted to know that I have planned 6 months to 1 year the long-term plan.
Okay.
So, what is the suggestion from your side?
I got your question. All right. So it's a pretty straightforward question. Swati, let me come to you on the charts. He's bought a significant quantity, and so therefore he's in the green. Should he hold on, and what level should he look at? Where should he put his stop loss?
Yes, the view is definitely positive. Looking towards the chart patterns, the counter is trading in the upward rising channel. The price and the volumes are slowly and steadily are increasing. I'm looking for a target of a 120 rupees from the current market price. Downside, it has a very good support of 100 levels. So as long as stock holds those support levels, the view will remain a positive. Initial targets will be a 120, and beyond that 125 levels can be seen. So you can hold on your long positions by keeping the strict stop loss of 100 rupees on a downside.
Right. The next question is from Arjun, who's writing us from Kolkata. Quick view on this as well. Swati, Tata Consumer for the next 7 to 8 time frame, would you recommend to hold?
Yes, sure, definitely.
Or maybe even enter?
Fresh long positions can be entered at the current market price, but only 20-30% are recommended because we might witness some sort of a more selling pressures, which might take a stocks towards 2000 levels. But if you don't want to lose the rally, then definitely 20-30% can be accumulated at the current market price. For a shorter period of time, at least for a 6 month and so, we are looking for a target of 1150, and beyond that levels 1240 levels can be tested. So the view is positive. You can definitely hold on, or can be accumulated at current market price as well.
Okay, it's time now for the rapid fire round. Asta, Swati, you know what this means. We'll toss as many questions at you as possible. The first one is from Venkat Ramani, who's asking about Tilak Nagar Industries. 296 is the buy price, and he's planning to hold for the long term. Should he do so? Asta?
Of course, for the price target of above 500, maybe 550 can be set as the initial price target.
Okay, Ravichandran is asking about NSDL and wants to know if this is the right time to make an entry. Asta, your view?
NSDL is looking very overpriced from present point of view. So just let this counter fall to the level of 1150 to 1200 and then make an entry into this counter. This is what we are recommending to our clients as well.
Asta, you already gave a view on Praj, but specifically if you bought at levels of 600, if you hold for a period of 1 to 2 years, is it a hold or is it an exit?
No, hold is what I can recommend for this counter from 1 year perspective.
Okay.
Okay, Zuari Agro is the next counter. Short-term view. Riddhi Jain wants a view on this one. Swati, your view?
My view is definitely positive. Upside levels 420, 450 levels can be seen. So you can hold on the long position by keeping the strict stop loss of the 360 levels.
Bharti Airtel, Sukumar from Bengaluru is bought at levels of 2035. He's incurring a loss but plans to hold for 5 years. Asta, should he hold?
Of course, and I think definitely he will come at break even very soon.
KPIT Technologies is the next counter. Manju wants to know if she can hold or sell. Buying price is 1358 and 20 shares is what she has. Swati, on the charts?
Definitely it's a hold from my end because we are likely to witness a very strong momentum rally into this particular counter or the sector as such. 1300, 1400 are the likely targets in the near term future. So it's a definitely hold from my end.
Asta, Paras Defense for the long term, if you're already holding at a level of 706 or thereabouts, should you buy more for a period of 5 years?
Not right now, maybe at the lower level of around 620 or so. But right now we are not recommending buy.
Hindustan Zinc, 123 shares bought at 535 a piece. Swati, on the charts, continue to hold?
Yes, for long term period of time, definitely it's a hold. But the initial targets will be at 470. Beyond that level, only 530, 540 levels can be seen. So long term horizon is definitely positive. You can hold on this stock.
Okay, all right. Well, that brings us to the end of this edition of Ask Profit. Asta, Swati, thanks so much for joining in and answering all the questions that you did. Of course, there are several questions that we didn't manage to take today, but our promise to you is that we'll be back tomorrow at 10:30 to take as many as possible. From Mahima and myself and the team that put the show together, thank you so much for watching, and this is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता आई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Mahima Vachrajani, and no bets, frankly. It's going to be an FMCG consumption space that we're going to talk about. Yes. But you know what you want to know is whether alcohol and the beverage industry is going to see a strong tailwind. Premiumization is the middle word of that theme which is playing out, and which will likely mean that margins will likely have an upside surprise. I can't say will have an upside surprise, and will likely have an upside surprise, and therefore will be interesting to understand what Som Distilleries makes of all of this that's playing out, because the balance sheet doesn't look under pressure at all. There's a very, very strong tailwind in terms of growth, and one of those geographies that they are really targeting and going to target strongly is going to be UP. And what impact does UP have on their top line is what I'd want to first understand. And I'm sure that they're not going to give me a real answer to this question. So what I'm going to also do is going to ask them, and I hope they're not listening, but I'm going to ask them what mix is UP going to command, because they've given an FY27 guidance of 2,000 crore in terms of sales. So what is that mix which UP is going to command? Because they have select states, Mahima, in which they have very, very strong presence, and then thereafter they don't have much presence elsewhere. Okay. Globally also no real presence, and therefore that also is a risk that one needs to be mindful of when they are investing in something like a Som. So that's a risk, but this huge foray and the fact that there's a large tailwind in this space is obviously the big benefit. They're doing 600 crore of capex, and 350 crore of that is expected by end of FY26. So what is going to be the debt component? They've currently iterated and reiterated, no debt, no fresh equity. But of course we will ask them one more time, we'll quiz them on that, because it's a large capex which they are undertaking. For a sub 3,000 crore company, that's certainly large. Now, new launches, and that's what they're focusing on, and contribution of premium. Currently, premium doesn't have a very large contribution. It's maybe sub 10%, if I recall right.
Correct. That's probably one of the reasons as to why foraying into UP will be beneficial from them, because there's more concentration of tier 2, tier 3 cities which don't per se consume premium brands.
Correct. So what does new launches bring to the table? What's going to be the breakup in terms of the mix, and are margins incrementally much better in premium versus their traditional? Karnataka concerns, those were concerns of course which cropped up. Q4 cash flow to a certain extent was subdued on the back of that, but are they firmly behind is what I'd want to know. And now FY26, is there only tailwind coming in with regard to that? Risks from barley, glass, that's the only commodity exposure they actually have. Currently there is no concern. In fact, last 2 to 3 years it's been clean in terms of tailwind, no problem at all. Last piece is with regard to margins. They've guided for 12 to 13% margin, but could that surprise on the upside? Because if it does, you could see very strong accretion to profitability, which could re-rate or make a case for a re-rating on the counter. But I'm going to allow Mahima to take it away with regard to what the company does.
Right. So, as Harsh rightly mentioned, it's one of the company that's present in the alcobev space and majorly has exposure to the beer space, and then IMFL, of course, that's your Indian manufactured foreign liquor. It was incorporated in 1993 and is based in Bhopal and is engaged in manufacturing and sale of beer and IMFL. It sells beer, whiskey and vodka per se, and the kind of portfolio that it has, this is its beer portfolio. Hunter, Blackford, Powercool, Woodpecker as well as Legend are the brands that it has under the beer portfolio. In the whiskey portfolio, it's got brands like Mahawat, this is the recent one, and a slightly premium side of whiskey that premium side of IMFL that they have, and of course whiskey. The other one is Blackford, Sunny, Gypsy and Fox, which are the others in the entire portfolio. Rum and vodka is a very small, very small portion of their portfolio, but they also have ready to drink and mixers in terms of cocktails in their portfolio as well. In terms of where the manufacturing facility stands, they've got 3 manufacturing facilities in India. The total capacity as of their latest presentation, well, this is the breakup in terms of the Hassan plant, the Odisha plant as well as the Bhopal plant. So when you try to sum this entire thing up, overall beer is 38.9 million capacity and IMFL is roughly 4 million cases in terms of where the capacity stands, and they're also expanding, as Harsh mentioned earlier, in the UP, and that allows them a capex of around 600 odd crores. in terms of the raw material exposures, again, as Harsh said, barley and glass are the two main raw materials for the counter, and the fluctuation in the prices is something that will impact their margins overall. And it's difficult, in this kind of cutthroat competition to pass on the kind of inflation that takes place in barley as well as glass as a raw material. Lastly, in terms of the breakup of overall sales, as you rightly, as I mentioned earlier, this is the second largest beer manufacturer in India. So beer is around 95.5% of their overall volumes, and 4.5% right now is IMFL. Beer was earlier higher as a percentage, but that's now come down to 95.5. So the other question here also is whether they're actually planning to, give more exposure going forward to the IMFL side of things or not. So that's with regards to where, the entire whole and soul of the company stands.
Well, yes, one piece, Mahima, is the fact that 99% of their sales are focused on Madhya Pradesh, Karnataka, Odisha and Jharkhand, just 4 states. And therefore, UP could be that huge foray, just given the population size scale that UP commands. Largely, margins are stable across geographies. So, a hint into what UP will command on an existing mix, if the mix does not change substantially, you will likely see margins remain as is. Taxation, MRP caps can impact profitability state-wise, but broadly, that's the theme. So that just kind of caps off whatever Mahima, of course, had to start it off with. Let me start off also with now the metrics. And the metrics that we look at is income statement, balance sheet, cash flow, return ratios, shareholding, street cred, there's no street coverage, there's outlook, and thereafter there's valuations. And I'll allow Mahima to start with the income statement.
Right. So, I'll start with the income statement first from a broader perspective from FY22 to FY25, and then see how they've done this quarter. In terms of where the overall revenue stands, the 3-year CAGR has been a whooping 58%. EBITDA CAGR has been around 108%, and the company has gone from a loss of 10 crores in FY22 to profits of around 100 plus crores in FY25. Margins have also significantly improved from that 5% mark in FY22, but has remained in that range of 12 to 13% mark in the past 2 odd years. So that's with regards to where margin trajectory is into picture. So the question really here is that whether in FY26 they'll be able to do better margins, because the guided range is slightly higher, and they've always done at the lower end of what they've guided for. That's with regards to where the overall income statement is concerned. But in terms of where the Q1 performance stands, Q1 FY26, overall revenue saw growth of around 3% YOY basis, but good growth sequentially. EBITDA saw a growth of 9%, and majorly this particular quarter beer companies were impacted because of short summers, so that's also an important aspect to keep in mind. And overall net profit saw a growth of around 2 odd %, but the numbers did not seem that bad, considering the other player in the industry also did post similar set of earnings. So overall this quarter is not a festive season, plus early monsoons has impacted beer sales overall, and that's with regards to where Q1 stands. But the overall picture in terms of where the CAGR is concerned, when it comes to their revenue, their EBITDA as well as their PAT growth, it's been a good considerable growth, and that's why we've given it a thumbs up when it comes to the income statement.
Perfect. Yes, the 3-year growth, very, very impressive, no doubt about that. Let me now talk about the balance sheet. And when you're looking at the equity shareholders funds overall, which kind of gets you that book value of 747 crore, it's currently trading at roughly 4 times book. And the borrowing number also doesn't look too substantial at 171 crore. In fact, the borrowing number has come down, and has come down materially. The borrowing number in FY20 was around 200 to 220 odd crore, rose in FY23 as well, and thereafter has fallen down, and from 240 crore in FY23, the borrowing number currently sits at 170 crore. So you've seen elevated borrowings which have now been quickly repaid, which is a thumbs up, which is a positive. Plus you're seeing very strong tailwind with regard to the numbers itself. So the EBITDA is now well in line to cover that borrowing number, so no concern there. Cash balance of 20 crore is all right, and broadly we've given this a thumbs up because the balance sheet clearly improving, and the top line growing very, very quickly and without taking on considerable leverage. So all of those are positives. Mahima, cash flow.
Right. So, when we take a look at the entire cash flow picture, the cash flow from operations, as compared to FY24 and FY25, it has come down. But with regards to where the overall growth is concerned, it's been a considerable growth. But the ratio that we always talk about here is the cash flow to EBITDA part, the operating cash flow to EBITDA part, and that's been declining, which is why we've taken a conservative approach here and given it a neutral rating. The net cash flow position, however, has improved from a 3 crore in FY23 to a 6.57 crore in FY25. But considering everything in place, the kind of capex that they're doing right now that's in place, plus considering how they'll be funding that capex, we'll have to see as to how that plays out on the cash flow side of things, and that's why we've given it a neutral rating as of now.
How that plays on cash flow, how that plays on return ratios.
Return ratios,
and
correct.
let's talk about that. And return ratios have improved significantly. They had a couple of tough years post-COVID. FY20 was okay, but FY21 was a year where there was considerable pain, FY22 as well. But FY23, 24, 25, we've seen mid to high teens in terms of ROCs, which is very healthy. So really, we'll give this one a thumbs up as well. Hopefully, it's sustainable. That's really the question one will have to ask management as well. But broadly, no concerns at all. 16 to 18% is quite a healthy ROC. Shareholding pattern, Mahima.
Right. So, if we take a look at the shareholding pattern, the promoters have been slightly increasing their stake. Of course, not a 50% plus stake here when promoters are concerned, but from a 33% to a 38, almost 39% in March 25. FIs hardly hold any stake in the company. It's been in that 1% mark in the past 3 odd years. DI is also, not a lot of interest there as well, but public shareholding is very large here. So it's come down from that 66% mark to a 59% mark, but it's a very high retail investor stock. But just because there is less FI interest here and the promoter holding is not beyond that 50% mark and plus a very high retail invest, we've just taken a conservative approach here and given it a neutral rating.
Perfect. So street cred, let's quickly move on. 1 month, the stock price is down 4%, but otherwise, 6 months up 37, year to date up 35, 1 year 36% up. So clearly doing very well for investors. The stock is a 16 bagger over the last 5 years. So it's done very, very, very well for the retail investor. So we've given this a thumbs up, no concerns there. Outlook, Mahima.
Right. So, FY26, the revenue growth guidance is anywhere between 20 to 22%. The management expects a volume growth of around 18 odd %. The growth will be driven by expanded capacity is what they're saying. They've expected to, maintain the EBITDA margins at that 12.5% mark. They've gone out and said that no QIP or equity raise is something that is on the cards. And management has repeatedly emphasized that, the funding of capex will not be done via any equity raise. So this is with regards to where the overall outlook for FY26 is concerned.
Okay, I'll talk about valuations. 20% growth, 12.5% margin odd is what I have assumed as part of my valuation thesis. The top line therefore goes as is on your screen. FY27, I've assumed a 16% growth only from a perspective that management themselves are guided for a 2,000 crore aspiration in terms of revenue. Could there be an upside? Well, if new capacity were to come through, certainly could be. And therefore, you're seeing the kind of valuations that you are on your screen, 21 times price to earnings 1 year forward or maybe 6 months forward now. And then thereafter, 17.5 times, if I look at it, the FY27 numbers broadly. Of course, not factoring in incremental depreciation if that were to be booked broadly. This is the number that we're arriving at. And those are some of the assumptions on your screen. And mind you, the 5-year average price to earnings multiple that this one has clocked is around 25 times. So already trading at a discount. Despite that, we've been slightly more conservative on this count, given this one a neutral, because you have other players as well, which are trading maybe not at similar valuations, but have potential to obviously compete. And therefore, you want to wait and watch whether those growth forays actually play out or not. And therefore, let's stack up all of the rating parameters that there are, and that gives you no thumbs down across all the parameters, and it gives you a very healthy 6.5 out of 8 on our KYC rating for a soap distilleries. That is obviously impressive. It's been that kind of company that we've seen today. Let me bring in JK Arora, who's the managing director of Som Distilleries, and to talk to us about, of course, what the future holds. Mr. Arora, great having you. Good morning. I'm Harsh, with me Mahima. Let me first start off by asking you, what is it that UP holds for you as an opportunity? Your expected growth is going to be 20% FY26, maybe 16% FY27. How much of that growth is going to come from UP? What's the mix looking like?
You see, UP is the most progressive state from my point of view in the country. The way the administration, the way the government is functioning is amazing. My experience with the UP government, if I tell you, is really a very, very comfortable, very, very supportive atmosphere. That's one, to put up the unit there. But this is not the sufficient. UP is you appreciate it, the sixth largest country in the world, alone UP. And if you see their revenue in just 5 years of time, from 10,000 crores to they have reached to 40,000 crores. So they are not believing in, any kind of, Dakoslabaji, that this liquor is this, liquor is that, and this. And they simply say, if somebody wants to drink, we are nobody to decide what you want to drink, what you want to eat, what you want to wear. It's not our job. So if you are drinking, our job is to tax on the liquor, and we have to have the revenue. So this thing, if the consumer is available on the metro station, you put up a shop on the metro station. It's as simple as that. So this attitude brings in a lot of revenue growth, and market has become really, really big. So any liquor company in India, I would say, cannot do without UP. UP is one of the biggest market, most progressive market in these things. So UP, of course, UP, the players are already established there. It may take little time for us to penetrate the market, but since we are already there, and our acceptance of the brand is very, very good there. Right. So we hope that UP will be going to add a lot of value to us.
Got it. Mr. Arora, just want to try to understand. You've said that you'll do that 2,000 crore by the end of FY27 in terms of top line. How much of that are you expecting from UP in the early stages? And let's say going forward, 3 or 4 years down the line, what will the sales mix look like from UP versus other states?
UP, you see, we are expecting in first financial year, which is going to be the coming financial year. We are hoping to commence the production in the month of maybe January this year. So settling down, for all practical purposes, you take the next financial year. So we are hoping to add at least minimum 300 to 400 crores in the first year, and 500 to 600 crores in the second year from UP.
That is large. Do you believe that you can exceed that 2,000 crore growth number, top line guidance by FY27?
You see, we have always been quoting a conservative figure. If you see our past interviews, whenever we have quoted some figure, so we have already surpassed that figure. We have always done better than what we have quoted. So this is our little conservative estimate. But as of now, we want to stick to that that estimate. But I am quite hopeful this thing. But UP will take 2 to 3 years to be in the full potential, to exploit full potential from this thing. But UP is going to be definitely one of the most profitable and most progressive market for us. That I am sure.
Sarah, then I want to understand that how does your mix change in terms of premium versus your popular segment? Because the trend right now in the Alcobev space is that premium products are picking up and they are aiding the margins as well. So do you think that the premium contribution will go up? If yes, what will the mix be like? And then how will the margins going forward look like, let's say 3 years down the line?
You see, you have put in a very, very relevant question. This is the most burning topic as of now, this thing. You see, when I started career, on that time, this liquor is called Indian-made foreign liquor. Means the liquor, which is a foreign drink, made in India. That's why the name terminology is Indian-made foreign liquor. So at that time, putting any Indian name was a stupidity. I recall when I started career in 87, we put up a new our first brand, Sunny Whiskey, and our competitor has put in a brand name Sholay. On that time, Sholay movie was on a very this thing. So that was a matter of laughing stock in the market. Okay, how you can put up an Indian name, but now you see the whole chemistry got changed. Now Indian name is being accepted worldwide, not only in India. So this thing is now altogether. So all premiumization is being happening on the name of the Indian names. We have recently launched a whiskey in Madhya Pradesh called name Mahavar. It's a beautiful packaging, beautiful product. So, and next week we are launching in Delhi also. It's a premium product, this thing. So that's it. And hopefully in next 2 months, we are launching a single malt whiskey. That's name is Bhimbetka. That Bhimbetka is a place which has got a 10,000 old civilization, which is a wall paintings exist there. Bhimbetka is a tourist place in Madhya Pradesh.
Right.
So that's what it is. So we are on to premiumization on the IMFL.
Right.
You see, we are the only company who are available in beer and liquor both.
Understood.
You see, last three years, there was a huge growth in the beer. So we have tapped that potential.
Right.
Now, since looking to that potential, all governments have started putting the lot of taxes. So beer growth is now a little slow. So we are on to now IMFL, which is doing full well. So we are the only company which is playing in both liquor and beer.
Understood.
So that is the advantage with us. Yes.
Understood. So sorry for interjecting, but we just have a couple of minutes left with you. So I want to make the most of that time. In terms of the mix itself, currently you're sub 10% on Indian-made foreign liquor. Where does that go to when you do 2,000 crore of top line in FY27? Give us that number broadly. I understand you may not have a hard number there.
20%.
Excellent.
Yes.
Excellent. And so therefore, what does that do to your margins? Because tough to believe that margins will remain 12 to 13%.
The margins in liquor is always better than beer.
Yes.
So there is no doubt about it. So margins are going to be better. It's no way going to reduce.
How much better? So would you inch towards 15%?
Not exactly 15%, but it is definitely better. If you see this quarter, our margins are better than the previous quarter.
Yes.
In our last quarter, March quarter, it's about 23 crores profit. This is more than 40 crores profit.
Got it.
So this thing it is showing this thing. Our IMFL volume in the last quarter is IMFL sale is just double what we have sold in the same quarter last year. This year, in the same quarter, IMFL is the double.
Understood.
So you can clearly feel where the focus is now.
Understood. Thank you so much, sir, for coming and speaking with us. That was very, very insightful. Viewers, I believe we've got enough on our plate in terms of the guidance that Mr. Arora has given. Very clean, very clear. 400 crore in terms of the sales from UP in FY27, 400 crore in terms of IMFL, which will be 20% immediately off the bat by FY27 itself, and therefore margins likely on their way up. You might want to tweak those valuation numbers a little bit. Completely out of time on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
We're in conversation now with Indian Hotels MD and CEO Puneet Chatwal. Company in the news after they've announced acquisition of controlling stake in two hospitality firms, A&K Hotels Private Limited that runs the Clarks line of hotels, and of course Pride Hospitality. The combined acquisition size is about 204 crores. Mr. Puneet Chatwal now with us. Thank you so much for speaking with us, Mr. Chatwal, and always a pleasure to have you with us here on NDTV Profit. It's an interesting set of acquisitions. You've clearly been on a shopping spree. Tell us the rationale.
The rationale is in line with what we have been guiding under Accelerate 2030 of the growth coming mainly from our mid-market segment with Ginger and an upscale with gateway brands, keeping Taj as pure as possible, keeping Taj as the crown jewel, yet stimulating the progress, addressing India's mid-market needs, and also making Ginger the strongest mid-market brand in the next 12 to 18 months with 250 plus hotels.
So the mid-market focus, talk us through a little more on that, Mr. Chatwal, and how do these two acquisition targets add to the brand overall, and how do they sink in with your broader perspective?
Well, there is, there is a need that we are trying to address because given the population of India, the majority of the play at the moment and going forward will be in the mid-market in terms of scale. Your profitability and revenue still might be the highest coming from upper upscale and luxury segments, but this is a segment that needed to be addressed. There was hardly any branded supply in this segment. And I think many years ago, we started the Ginger brand, which we reimagined in 2018 and 2019, and made it more into a lean, and needed kind of accommodation which provided the best value and yet gave you a wonderful experience. The profitability of Ginger has been increasing by leaps and bounds. The revenue started increasing, and today we are getting close to almost 10% of the total reported revenue of the hotel segment of the company coming from just Ginger, with very high EBITDA, which used to be 5-7 years ago the revenue of the Ginger brand. So I think all in all, Ginger is expected to contribute 15% of the total revenue going forward, and at the same time address the needs and wants of the middle class in India that needs clean, affordable accommodation in tier 2, tier 3 markets, spiritual destinations, including in the metros. And our success of Ginger Mumbai Airport is definitely a very good proof of all that.
So just on these two acquisitions specifically, Mr. Chatwal, in terms of their turnover, I think about 14.32 crore for ANK, if I'm not mistaken, and about 19 crore odd for Pride. The valuations at which these have been acquired, there are some analysts who are questioning those valuations, even though the long-term revenue accretion is very clear. What is it that you can add on this perspective and how we've arrived at these valuations?
You see, I think it would be fair to say that in the last 20 years, we reached only 70 hotels in operation and another 35 under development with Ginger brand. This gives you a doubling of the scale in the same time. It's not always about the valuation based on what it is today. Our experience is the upgrade to the Ginger brand with the look and feel of Ginger brand increases the revenue by 30%. And these revenue numbers look low because they are totally on asset light model, which means this is the income through the management contracts that these two companies have. And I think given our current model and the complementary model of capital light, it provides Ginger with a very well-hedged portfolio. And we have an analyst call this evening in which we will be able to explain that better to the analysts. Okay, fair enough. What is the kind of expenses or capex will be required to bring all of these hotels up to the mark? What are the investments that you envision going forward, or are they all, fairly close to ready to use? They are ready to use, but not as a Ginger. So it will be a journey which will last, let's say, another 12-month period after the completion of the acquisition. Some may need only a few months. Some may need 8 to 10 months. Some may need, 12 to 14 months for the proper conversion to the brand. And what we call as a property improvement plan, which will be made for each of these properties. And we have funds available of our own in the company, but also because it's a different kind of a model, some owners would want to upgrade and might be an opportune moment for them to upgrade the asset embracing the key elements of the Ginger brand. So all in all, I think it would be fair to say that anything between 1 to 2 crores per hotel in operation is the minimum amount that will be needed to upgrade to Ginger level.
Okay, and you talked about Ginger now contributing to 10% of revenue with all of these additions coming on. I believe all of this starts happening from November. What is the total revenue portfolio of a Ginger or this side of, mid-sized, mid-luxury hotels that you see to the overall picture?
See, post completion of the acquisition, if we took rolling 12 months looking forward, we're looking at more than 1,000 crores of revenue just coming from the Ginger brand. And the whole complementary value proposition through the Cumin all-day diner at Ginger, it has made it a very compelling proposition. And we, as I mentioned earlier, we've seen a lot of traction and a lot of growth in the same property, same asset by insourcing the food and beverage under the Cumin brand and adding the reimagined Ginger key elements of the brand to the property, which give you the uplift in the average room rates.
So, in the next 3 years, what is the revenue contribution that you're seeing, Mr. Chatwal?
Our aim for Ginger's contribution to the revenue would be 15%.
Okay, over the next 3 years, of course. Now, in terms of the model that you were talking about, you mentioned a little earlier that some of the owners would also be encouraged to upgrade because of the kind of model this is. Could you shed a little more light on that, on what exactly is this kind of model?
This is, these are spaces when you enter into a lobby, very vibrant with, very interactive kind of spaces, strong Wi-Fi, a lot of music, also playrooms in the lobby, whether you want to play table soccer or have other fun elements in there. And of course, all the colors, it's very vibrant colors that we use, and that's why a lot of painting will be needed in this entire acquisition of the portfolio so that it looks and feels very vibrant.
No, I mean, sir, may I just rephrase my question? What I mean to ask is, what is the owner's contribution? You have 51% acquisition. What will be the role of the owners? If any, is there a profit share there? Because you mentioned a model earlier. So this is what I was pressing on.
You mean the individual owners or the company?
Yes.
The individual owners, they benefit from the P&L and the profitability of the property. For us, only the amount of management fee, because the revenue should increase, will go up. But all in all, it creates a win-win situation, as we would only get a small percentage of the total revenue, because that's how the management contracts work. In that kind of a model, the larger upside sits with the owners, and that is what makes us believe will make owners very happy to embrace the Ginger brand without any kind of hard selling needed from our side.
And your acquisition at 51%, does this now increase over time, or you want to stick to this 51% of what you now own in these two companies, or you will own?
We are very pleased with what we have today. Should that change, I'll share with you, Tamanna, first.
Okay, so while I have you here, sir, and of course we're speaking about these acquisitions, let me get a sort of a temperature check of what is happening in your space. Q1 across the industry, I think, has surprised on the upside. People thought that there would be a lot of stress with what was happening in the region, geopolitically, etc., and with consumption overall. That doesn't seem to have panned out. Do you see that trend continuing?
I've always been very optimistic. I think it's the beginning of a very long cycle for the hospitality sector, and I'm not talking about a few quarters. I'm talking about a broader view over the next few decades. This is the sector that comes in last, and just like there has been a evolution, let's say, of the automotive sector from CVs to EVs, I think this is the era of hospitality, aviation, tourism over the next few decades. So there'll be headwinds every now and then, things beyond anybody's reasonable control. But overall, demand will outpace supply, and overall the demand will continue to increase as India keeps track on its GDP growth journey of 6.5 or higher, creating higher disposable income and more people wanting to travel and experience more, either for business or for leisure needs.
Have you been seeing any kind of a drop in demand at the higher end, at the luxury end of the portfolio?
Not really. I think there is, it would be fair to say, following the unfortunate incident in Pahalgam and then Operation Sindoor and then the airline accident and the unrest in the Middle East geopolitical tension, Iran and Israel, there was a temporary drop. But as I look at it now, April more than compensated for May and June. Similarly, August, the way it is going, and September, the way the business on the books is expected to compensate very strongly for a sluggish July.
All right, and there you go. That was the management of IHCL talking about the rationale behind their newest acquisitions. In fact, let's also take a look at the markets first things first. Nifty, of course, holding up above that 24,500 level. When you take a look at the Sensex also, let's quickly take a look at what the Sensex is doing as well, because you do have the Sensex holding on to those losses of about 100 points at this point in time. But when you take a look at the sectoral picture, that is looking quite bright, tilted in the favor of green. In fact, you do have media, auto, metal, IT, oil and gas, exactly in that order. Those are some of the sectors that are gaining in trade. On the flip side, there's a defense, realty, finance, as well as bank sector that is on the downside at this point in time. But when you take a look at the list of gainers as well from within the Nifty 50 pack, there's Maruti Suzuki, Tech Mahindra, Hero MotoCorp, M&M, Tata Steel, HCL Tech, making it to that list. On the flip side, when you take a look at the list of losers as well from within the Nifty 50 pack, you have a Bajaj Finance, Eternal, Grasim Industries, HUL, ICICI Bank, as well as heavyweight HDFC Bank also making it to that list. But tell you what, on that note, let's take a look at some interesting conversations that we've had. In fact, on the sidelines of the MK Conference 2025, Heritage Foods is also in focus after the company announced its quarterly numbers. And we do have Mahima who's caught up with the management of the company. Let's go across and listen in.
Before I go on to what's happening overall with Heritage Foods, I just want to understand as to how is this space shaping up right now? What is the outlook like when it comes to the entire dairy sector in India, and how is Heritage Foods planning to leverage that at the most?
Thank you, Mahima. It's always a pleasure to speak to you. And see, at this point in time, I guess consumer demand is picking up. And we have seen the first quarter was not very great for the dairy sector, especially those summer-related products suffered because of excessive monsoon rainfall. But from July onwards, in fact, from June onwards itself, we've seen demand pick up, not just because of weather improving, but also because of general consumer sentiments going favorable. So it's all positive as far as the consumer story is concerned. On the supply side also, there is a mild contraction of supply that we are experiencing at this point in time. Usually August is always the leanest month as far as the milk supply is concerned. I don't think that there is anything for us to worry at this point in time. But we hope things get better from now on.
All right. Mr. Kesavan, the one trend that we've been observing the past few quarters is that value-added products is something that's actually bringing in the top-line growth, the margin uptick as well in the entire industry. Just want to get a sense as to what's happening there. Is there an update there? Any particular products that you're seeing in the value-added space that are picking up well and adding to the top line as well as improving margins for you?
See, value-added products in dairy is actually on a boom, and it's been for quite some time now, especially post-COVID. We have seen people turning more and more to nutritious products, and which is the primary driver for value-added products growth. And this trend is now being continuing for almost 4 or 5 years. There's a little bump on the road that we hit in the Q1 of this financial year, primarily due to the weather impact. But all the primary indicators are positive. Now, at Heritage Foods, we look at value-added products in 5 different buckets. The first is foods, which is a core value-added product for us, which includes curd and paneer, which are the two largest value-added product portfolio that we have. And both curd and paneer are actually have been on a great growth journey for the last 4 or 5 years. And in the current quarter also, we are expecting the growth momentum to continue. Even in other categories, whether it is ice creams or drinkables, which are summer-related products, which got impacted in Q1, we expect the volume trend to go upwards from Q2 onwards. All in all, it's actually a very good story for us because all the core metrics for us, whether it is distribution, whether it is brand building, whether it is new product introduction, everything is actually working very well for us at this point in time.
Okay, interesting. But in terms of products like ice cream, paneer, curd specifically, a lot of competition is coming in because of the rise of quick commerce. A lot of brands which are just startups right now, have taken a lot of market share from already established players. Just want to get a sense of competition there. And in terms of beating the competition, what is the strategy that you're adopting in terms of pricing, grammage? What is it that you're doing right?
See, for categories like curd, the category is still dominated by established players like Heritage Foods and some of the other leading dairies as well. We are the ones who are building the category. We are the ones who are building growth momentum for the category. Yes, you're right. In smaller categories of value-added products like ice creams, we are seeing intense competition from new entrants. But they are still very small at this point in time. Ice cream, again, is a category which is led by large players at this point in time. First of all, I think that as an industry, we welcome more competition. I always say more the merrier, because more competition means that we all innovate, we all work hard on bringing down costs, we all work on improving the consumer delight in terms of creating products that consumers really need or consumers really desire. So, so far, I guess competition has actually helped expand the category. The competition is not just limited to e-commerce. Actually, in fact, many of these startup brands and smaller brands are expanding to general trade, and we are seeing this competition spill onto our streets, as we say. But at Heritage Foods, we actually, I think that competition is helping us get stronger. Many of the innovations we are working on will actually help us accelerate our growth. We are not seeing any impact to our growth trajectory because of the competition. What
is the kind of expansion plans that you have in FY26? You've already mentioned a lot about your procurement expansion plans in your recent con call. But other than that, any expansion plans on the capex front?
Yeah, Mahima. So we are actually in the process of expanding a lot of our capacities on the value-added products. The most significant of which is the investment that we have made into our ice cream factory, which at this current estimate looks at about 230 odd crores capex that we are pumping into that category. The factory is it's a greenfield factory which is expected to come online by the end of this calendar year, and that will prepare as well for the coming summer season. We are also expanding capacities into paneer, curd, and many of the other value-added products. So most of our capacity investment is actually going into value-added products. These are mostly all high-tech, new-age lines, which will help us produce highest quality product in the most automated fashion, bringing down costs, enhancing quality. We expect the growth trajectory for value-added products to continue in high teens or low 20s. That's the kind of CAGR that we expect for many quarters to come. And that's what we are preparing for. And many of the categories like paneer, for example, for us is growing upwards of 30 to 35%. Ice creams is another category which is growing at aggressive 30 to 35% CAGR for us. And these are the categories that we are looking forward to as we expand our business.
Got it. So what's the total capex number that you're eyeing right now for FY26, considering all capacity expansions in plan? How are you planning to fund that? Will it be through internal accruals, any debt raising or fundraising on the cards?
So we have an annual run rate of close to about 200 plus kind of crores when it comes to capex. Most of it, like I said, will go into expansions that we are doing in value-added products. This year is an exception because we are pumping in close to about 230 crores of additional capex for the ice cream plant. So you should expect capex of 450 odd crores in this current year. And after this capex comes online, we expect the run rate to continue at around 200 plus crores as it was earlier. At this point in time, we are looking at a blend of debt as well as internal accruals to fund this. We are not looking at a capital raise for this. We have sufficient internal accruals, and the rest would be funded through term loans. So it'll be a leveraged project at this point in time.
All right, and there you go. That's the management of Heritage Foods talking about their numbers and their growth roadmap as well. Stock, as you can see on your screens, is holding on to a tinge of green as we speak. But let's talk about a couple more counters. In fact, you do have Praj Industries that's under pressure, cracking under pressure, 6.5% downtick coming in for that counter, and Dollar Industries, a whole host of stocks, in fact, in focus, and Jasmeet is standing by with that entire list.
All right, yes, thank you for that. First one on my list is Praj Industries. As rightly said, the stock is under pressure. It has been a weak quarter for the company particularly. Let's quickly understand what happened with the company.
Absolutely, Jasmeet, when you take a look at Praj Industries, it's the top line that is declining to the lowest in over 3 financial years. You're looking at the order book as well. That is growing to about 4,000 crores thereabout. So there's a 3.5% quarter-on-quarter uptick as far as the order book then is concerned. The order inflow during the first quarter was also about 700 crores thereabout. In fact, 800 crores if you round it off. Sharp margin profit contraction is also something that you saw coming in as far as Praj Industries then is concerned. And there's also a drop in the volume in terms of the domestic ethanol business. So that's also something that you're looking at as far as Praj Industries is concerned. There's also delayed execution of high-value orders that you're looking at Kandla. Other than that, there's a delay that led to higher labor and infra expenses. So that's Praj Industries for you, cracking under pressure. 6.5%, almost 7% at this point in time, downtick coming in for that one. But tell you what, let's also take before we move on, let's take a look at Dollar Industries as well, because the margins have remained flat. Like we've discussed, margins remain flat and profits seen an uptick. That's Dollar Industries for you, but those are a couple of counters that you should be keeping on your radar. Other than Astral, which is also in focus on the back of its Q1 numbers, that has also missed estimates. The stock, as you can see, is cracking under pressure, 7.5% downtick on Astral. Let's take a look at what the management also had to say about their margins.
PVC price on YOY basis, if you see, it dropped by 14%. So that was the reason of drop in the top line. Otherwise, the volumes were flattish. Overall, the demand scenario in the industry was flat. So because of that, this situation is there. Otherwise, I think margin front, I can say that if you remove out that 25 crore rupees of inventory loss, I think margins are almost in the line with normally we are delivering in Q1. Normally, our Q1 is loaded with the PVC mix on the higher side because agriculture demand will be there. So because of that, if you historically see for last 7-8 years number, Q1 is always low with the margin because of the PVC mix is high. Our Q4 is always peak where the CPVC volumes are very high.
All right, and there you go. That's the management talking about their growth roadmap. But that's all the time that we have on the show. Thank you so much for tuning in.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए।
मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान, जय हिंद जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान, जय हिंद जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hello and welcome to NDTV Profit. I'm here actually in Alua, which is very close to Kochi, right next to the airport actually. And we are here at Federal Bank's head office. And I have with me the pleasure of talking to Mr. KVS Manian, the MD and CEO of Federal Bank. I wanted to call you a newly minted, but then I realized from your team that it's been a year.
Almost.
I not quite realized that it's been a year now. But I just wanted to, start this conversation off with a slight...
Thanks, Rishi. Thanks for coming.
Thank you so much for having us, sir. I just want to start this conversation off with a very simple, easy question because I have come to this room to interview your predecessor. At that time, there was a very prominent Rahul Dravid back that he did not want to move.
Right.
And I was in your conference room a little earlier and I saw there's a Sachin Tendulkar back now. I'm just trying to understand, one of the core ideologies of Federal Bank was to be a staid, very competent, very... yes, regional, but also national sort of a bank, right? How are you viewing Federal Bank now that you've taken over, now that you're running things at the bank? How are you viewing the future?
I would say that my stint is taking forward the journey that the bank had commenced a few years back. I think under my predecessor, Shyam, he did try to take the bank relatively more national than it was when compared to when he joined. And I think that journey is not yet complete. That journey is still half done, and we need to do more of that for sure. So the way I look at it is, it's Federal Bank is a unique franchise in that sense. If you see, there are very strong points in the franchise. For example, if I take you through some of the uniqueness of this franchise, there is no bank which can claim, other than if you keep SBI aside, there is no bank which can claim any territory where they have 18-20% market share in deposits, right? No bank can claim in India. Federal can claim that for Kerala as a state, right? And Kerala is not a small state, it is a medium-sized state in the country. On non-resident, I think there is a significant franchise that the bank has, easily among the best franchises in India for non-resident. In fact, even the inward remittances, we hold almost 20% market share in inward remittances. Federal Bank is the largest gold loan bank, private bank in India. If I keep the PSUs aside, among the private sector banks, it is the largest gold loan bank. Also, the franchise is not built on rates as a proposition, pricing as a proposition. The CASA franchise, the term deposit franchise, the liability franchise largely is built on a solid footing of the brand being accepted for its service, for what it delivers, and relationships and things like that, and not price driven, right? So these are significant strengths of the bank as I come into the this. So the way I look at my role here is leverage these, build on these further, but also leverage this to take it beyond Kerala. Sure. We have dominating market share in Kerala. We need to build relevant market shares outside Kerala, in other states, right? So that's the journey. I think, so I would say it's a continuum, and I have to build on various things. There are also many more things to do. So that's again the beauty of the franchise. It is strong in many ways, and there are many more things to do. For example, I think our small business current account franchise is not as strong as what it should be, or our wealth franchise is not as big as it should be, or our trade and forex kind of offerings are not what they should be. So I see a great opportunity where the strengths can be leveraged and new things can be done to take the brand to newer heights.
Okay. February this year, you announced the Federal Bank 4.0 strategy to the analysts, right? And in that, you had some very aggressive sort of plans for the next 5 years as to where the bank should be, will be. I'm trying to understand from you what were some of the key areas that you thought would happen a little later, but maybe happen sooner. Maybe, like, for example, the fact that you've broken into the top 6 when you were 9th earlier, right? So what else has happened under this 4.0 strategy?
So I wouldn't call that aggressive. The strategy, yes, there is stretch in it and there is ambition in it. Yes, so I would call it ambitious or with a stretch and not aggressive.
Sure.
Because why I use that carefully, because by aggressive you might get an thought process that we are going to take on more risks and do more aggressive lending and things like that. That's not. If you see the plan, it is not based on that.
Yes.
It is based on a clear. So if I oversimplify that plan, it has three key elements to it. One is building the CASA franchise stronger, especially CA, and SA, maybe take it the upper end of SA. Focus on upper end of SA, because we have a good franchise on SA. If you look at our overall CASA of about 30%, we were 24/6. In fact, 6 is already 7 today.
Okay.
Right, in current account. So I think one important thing is to build the CASA franchise and of course the deposit franchise overall. So the idea was to, first pillar of that strategy was that. Second pillar of that strategy was what I called the middle yielding assets. Improve the mix of the assets. We were far too weighted on the asset side on corporate and home loan as products. Almost 45% of our balance sheet was focused on these two segments, and that meant our NIMs were generally always under pressure because those are relatively lower yield products. So we needed to change the mix on the asset side, and when we change the mix, it is not, we are not getting into I also said that we don't want to do very high yielding assets, 15-20% of the balance sheet, and therefore get the yields up and therefore build a barbell kind of a strategy. We don't want to do that.
Okay.
So what I said is, let us focus on the middle yielding assets where marginal uptick. For example, we were doing home loans. Can we do a bit more of LAP? We were doing commercial vehicles. Can we do a bit more of used commercial vehicles? So things which are not significant change in risk parameter, because there is a DNA of the firm which is relatively risk. I won't say risk averse. It has a certain appetite for risk. I don't want to dramatically move that appetite up. I want to operate broadly within that. Maybe a marginal uptick to that, where the risk return trade-offs are better. Move it inch it up a bit. More the risk appetite. So that's the strategy. That's why I was saying not aggressive, right? So on the asset side, marginal improvement in the mix will also give us some important uptick in the performance of the bank. That is the second. And third key pillar of that strategy was how to enhance our fee to assets ratio. And fee broadly, we are focused on cards as a business is a fee-oriented business, and therefore we want to grow our card business. I mentioned a while back about the wealth proposition. Yes. Our wealth proposition has relatively been not exploited that much. Just to give you a sense, on NR, we have 90,000 crores of banking AUM of NRs, right? They're CASA and term deposits with us.
Yes.
But we have very little of their wealth AUM. We do not have a strong enough offering on that side. So I see that as a big upside. And then, of course, we also said that we want to focus the bank into small businesses, and therefore products like cash management, trade, forex, these are important. So build fees through these. So these are the three key pillars of the strategy, the February strategy that we are making good progress on all of them. If you look at the last 2 quarters, our CA has progressed. Our CA from 6 has already moved to 7. I had said we want to be at 10 in the medium term. So we are making good progress on CA. On the mix of the assets, there is clearly visible. Our documents that we publish give you clear indication that our mix is beginning to change, and our fee performance has been quite strong in the last quarter. Again, if you look at our fee performance, it has been quite strong. So there is visible impact of some of these initiatives that is showing. Of course, we have just begun the journey. It's a medium term journey. It's not a so we want to position the bank to a place in the next 3 to 5 years, at a place where it can be top 5 in many parameters. Of course, like you said, we are 6th in the size of business now, asset liability together.
Sure.
6th to 5th is still a long journey, but more importantly, I think it's not about the number 5th or 6th. It is about how we can improve the quality of earnings, how we can improve the presence, how we can improve the brand presence across the country, make it relatively more nationally acceptable brand. All those qualitative things go into that journey. When we say fifth is just a kind of a pole there to watch out for. Yes.
I wanted to ask you a bit about what the future course of business looks like. When you're talking about cost optimization, that was something that was core to your plan. I'm trying to understand, what does cost optimization look like for a private bank that is functioning in 2025, is looking at a slightly more ambitious, as you said, plan to grow, because one would expect cost is part of ambition.
Yes. So, it's interesting you call out cost optimization. The way we have looked at it is, yes, we need cost optimization, but I have not built in any benefits out of cost to income over the next 3 years. That is not my key criteria to grow. While we'll optimize costs, we will reinvest during this period and probably keep the cost to income around the levels that we have today. There is a reason for that, because my belief is that there are enough revenue levers that we can pull, which can improve the cost to income, and therefore we will do that. And as we grow the franchise in, let's say, metro cities, for example, our metro penetration is lower than what I would like it to be. So if we add metro network, it's costly, right? But I have to therefore add costs. So the way I am looking at it, we'll have to play a very calibrated game where we build upsides in revenues and therefore build costs according to that, so that we can overall keep the cost to income where it is broadly, give or take, but broadly at the same place. If benefit comes, it is bonus. But right now I have not baked in benefits out of cost to income ratio, while we will cost optimize. Now, coming to cost optimization, there are multiple ways we can do that. For example, I believe that our branch operating model, we are already in a journey where we are trying to change the branch operating model from being overly branch centric to centralizing or regionalizing some of the activities and leaving the branch to do more sales, customer engagement and service, right? So I want the branches to do only 3 things: acquire new customers, engage existing customers, and serve customers wherever branch service is required. Today we do a lot of other work at the branch. So we are already on a journey where we are trying to take out some of those operational activities out of the branches, and I believe this will lead to cost optimizations in the medium term, right? Because you will make them more efficient as you centralize. You will do it at lower cost. Branches are the most expensive real estate you are sitting on. Your staff at the back end can be lower cost. All the operating costs are lower when you centralize, right? So I think there are cost optimizations possible by changing operating models on many businesses, particularly branch banking and many other businesses as well. So we will optimize costs, but we are not saying that we will dramatically reduce cost to income ratio, at least in the next 2 to 3 year time frame.
I'm glad you brought up the branch point. I want to come to that, but before that, the cost also has a net interest margin impact. I'm just trying to understand, Q1 you've dropped below 3%. Understandable, across the industry it has happened to all banks because of the monetary policy stance at this point in time. How are you planning to push it up, considering that monetary policy itself is very uncertain in the current global framework?
Right. So, of course, our base case just now is no rate cuts from here. But who knows? I mean, I know several polls are 50-50 on that. But I am in the camp, let's say, so let's start with the assumption that there is no further base cut, and we have seen for at least next 12 to 18 months more stable interest rate policy, let's say. If that is the case, I think, we have a T+1 repo rate adjustment to our loans. We drop the rates the day after the repo rate changes. Some banks go up to 90 days, right? Banks go up to 90 days to change it. So in that sense, we take an accelerated hit at the when it is downward. So in that sense, last quarter we took an accelerated impact of a repo rate cut. So we expect the balanced impact on repo rate cut to be much lesser in the second quarter. So we think we are close to the bottom. Maybe we have guided 5 to 10 basis points further drop in NIMs, but not more than that. So we think we are close to the bottom, and from here we can grow. And all the three initiatives, at least two of the three initiatives I talked about, three pillars that I talked about, two of the three pillars are NIM enhancing, right? As we grow our CASA and the proportion of CA more, it is NIM accretive, so we will add NIM. And as I move to medium yield assets from lower yield assets, it improves the yield on the assets, and therefore again it is NIM accretive. So the two are designed to be NIM accretive over a period of time, and that's the plan. So we believe that, like I said, we are already seeing signs of execution resulting in those changes, but we have to do it consistently over the next several quarters to really see the upside in NIM happen. As you also know, we will get benefits as we go forward on the savings rate cut that we made in June, right? That impact was not baked into the last quarter. So that impact will flow into the second quarter. That's the reason I said that some benefits will come out of our costs as well. And we have dropped our term deposit rates as well. So we have managed costs quite well. Even in the last quarter, if you notice, we have managed our cost of funds reasonably in an agile manner. We will continue to do that, and we hope to get the NIMs back to the 3+ levels and 310, 320. The trajectory will start following.
Okay. Branch banking, I wanted to talk about that. You called it free the branch. I'm just trying to understand from you, what is free the branch for Federal Bank? Because I read the presentation where you talked about how the branches are structured right now and the kind of changes that you want to bring in. But just for our viewers, to make them understand, what exactly do you mean by that?
Right. So like I said a while back, our model was a branch-centric model where branch used to do a lot of activities which otherwise can be centralized or regionalized. For example, a car loan disbursement should the branch be making, or a central or regional setup can disburse, right? Should the mortgages be created by the branch, or you can have a mortgage center of excellence which can take care of that. So there are lots of such activities where we feel our branches are doing a lot of things, and like I said, branch is the most expensive real estate that banks own, right? And therefore efficiency of that premise is very important, and all our front office people sit in the branch. So branch ideally should be a storefront which focuses on getting new customers, cross-selling to existing customers, and whatever little service cash transactions that have to be done at the branch. And unless they have to be done at the branch, we should not be doing them at the branch, because we should give the frontline teams enough time to acquire new customers and cross-sell to existing customers. So the free the branch is meant as an initiative to do that. So when we did our time and motion studies for our branch, we found that the branches are spending very low percentage of their time on sales and cross sales.
Got it.
And we needed to increase that. So we have already embarked on a model where we are trying to move. So we are following all the aspects of that. There are activities which can be eliminated. There are activities which can be moved digital. There can be activities which can be moved to central. There can be activities which can be made more efficient. We can change the process. So it's a combination of multiple things. It's a large project. Of course, it will span over a year or a year and a half to get to where we want to. But we are already on that journey, and I believe that this will make our branches available to customers, the branches, time available to acquire new customers, all of that. I think the brand will, benefit from such a process.
I've got 3 questions now. The first one is about the way you're talking about the mid-yielding assets, right? I mean, except credit cards, which is the only high-yield product that you specifically pointed out.
Yes.
I'm trying to understand, does it bode well for ambition to have a mid-yielding ambition? Or do you think that maybe for now you move from the low-yielding to the mid, and then eventually you would look at the faster yielding or higher yielding products?
So the way I look at high yield is we are currently about 4% of our assets are in what we can call high yield, which is essentially three products: microfinance, personal loans, and credit cards are the three products. You might already have noticed that we are already growing our credit cards business quite fast,
Yes.
right? And in fact, the book is showing that it is one of the faster growing. It's small in base. We are still early players in that. But interestingly, in the last quarter, if you had looked at the net card issued, we ranked fourth in that in the new cards issued.
Yes.
So we are trying to, of course, that's because our cancelled cards are very low. Our base is small, so I'm not as much on the fourth rank. It's not important, but basically we want to grow.
It's an upward momentum that you want to focus on.
And that will add high yield asset. On personal loans, again, I think we are comfortable now with the asset quality or the cycle that we have seen. We do want to grow that faster. MFI is one where I would wait for a quarter or two to get better comfort before I start growing. But having said all that, from our current 4% over a midterm, can we be in the late single digit 8-9%? Maybe yes, and that will add NIM to us. But I am not a big fan, as I told you, of building a barbell strategy where you build 20% of your assets in high yield. That's not my intended strategy. Yes, we need high yielding assets, but we would like to keep it in the sub 10%, which gives us some uptick on the NIM, but doesn't add too much risk to the book and volatility to our earnings. Because these high yield assets also add high volatility to your earnings, and so the proportion is very critical. And so I would say we will follow that. Like they say, खाने में थोड़ा अचार अच्छा है, but अचार के साथ खाना नहीं. So I think high yield assets are the achars.
Okay, let me also bring to my second question, which is about your NR strategy, the non-resident cohort of the customers. I mean, Federal Bank is widely recognized as a non-resident focused bank. Of course, the Gulf countries are your primary source of the NR remittances, but US is also a large participant.
Yes.
In the current environment where the US political landscape is toward penalizing any money going out of the US, especially remittances, they levied 2.5%, if I'm not wrong, tax on that.
It's not yet levied. I think it's a proposal. Yeah, it's a proposal.
I'm trying to understand, does that hurt you, or is that something that you're like, okay, this is part of business, we'll see what other geographies we can grow in?
Yeah. No, so I think some of these keep happening with business. Some geography goes out of action sometimes. So I think we'll have to just ride this. To give you a sense, of course, we have a very strong presence in the Middle East, and even in Middle East, there are countries where we can grow.
Yeah.
Right. Even in Middle East, there is opportunity to grow. That is one. Second, I think also the nature of non-residents business is also changing. Good old days, the large part of NR was focused on either the Middle East or US, but of late we are seeing it diversify into many other European states, Canada, Australia, New Zealand. So I think the NR characteristics of that market is also changing. So I think there is enough opportunity in. We will of course remain focused on US. US is a good market, and hopefully this. Let's see how this pans out. This proposal, whether it gets applied or not. But I think even if US is our second largest territory after GCC, so will US grow lesser if this were to come true? Probably yes. But I think there are enough markets to grow. And last year we have seen NR grow very well and grow well across the geographies. Interestingly, we also have a different opportunity. We also have an opportunity as Federal Bank. We were always good at GCC, of course, but also we were strong in Kerala, right? Non-Kerala GCC is also an opportunity for us, right?
Okay.
So I think there are enough opportunities to offset some setbacks that can happen in some markets. So we remain optimistic about our growth in our business.
Final question is around the liabilities portfolio, for the sector as such. I wanted to get a sense from you, some of the private banks out there. are sharply hiking the minimum average balance because they believe that that's the way to A, retain a higher CASA ratio, but also B, to better cross-sell products because you want high-value partnerships with your customers. Previously, bankers have pointed out that the nature of CASA has changed entirely. People are no longer interested in keeping money in their savings account for very long because there are high-yielding products now. If it's not the bank, they will go to the market and they'll make the money there. I am trying to understand from you, where do you stand in this camp? Are you somebody who believes that I need to retain maximum relationship with the customer, so I want your high value customer base only? Or do you think that banks are an essential service and let people keep money however they want to keep?
So just first to address the macro on the deposit side, one of the beliefs I have is there are three parts to the deposit, right? CA, SA and term deposit. I think it is a term deposit which is an investment product.
Yes.
CA and SA are transactional products. Yes. So yes, term deposit will face competition from other wealth products. I understand that. I do not agree that CA and SA are competition from wealth products because they are transactional. In fact, if a customer trades in the stock market, his SA is better than a customer who does not, because transactions lead to CA and SA balances.
Better balances.
So I don't see a conflict with CASA, right? So term deposit, yes, but there my view is that as if India story has to play out in the next 10, 20, 30 years, then our $2,000 per capita hopefully has to go towards $10,000. So deposit will remain a product, and there is it is a the person who first buys financial products.
Early introduction.
It's an early introductory product, right? So as people rise from this 2,000 to 10,000, I think there is a humongous opportunity.
Right.
And a small percentage of that 10,000, a smaller percentage of 10,000 will be bigger than a bigger percentage of the 2,000.
Sure.
Right? So I do believe that deposit will grow, may not grow at rates that are 15 and 20 or mid-teens and all that. But I think early double digits, it will continue to grow. So we have to remain there. And we as a small share of the market, I think we have to find our strategies to continue to grow, rest market share. On CA and SA, I do believe that, of course, there the pressure is coming out of efficiency of the system, right? System is getting more efficient, payment systems are better, and that's what leads to lower CASA, right? Pressure on CASA, not the investment product.
Got it.
So there, I think, like I said, for example, for us, if we focus on wealth and wealth products, which I said is a means to get fee, it also enhances our SA. Right, so I don't see a conflict with these, and we have to continue to do. So, for example, our corporate CA is quite low, and we have an upside opportunity because we just launched our cash management system last month. Right, new cash management system was launched last month. So we have to create products. Cash management, online trade, and things like that, which we will create to get a car. Coming to your minimum balance question, see, I think every bank to their own on the strategy of what they want to achieve. All I would say is at our stage of growth and where we want to see, I think we have to play the mass affluent category, and we have said mass affluent is our focus area, and we will do products which continue to sell for mass affluent.
Even your wealth products.
Even our wealth product will be focused. Even our wealth strategy is not going to be private bank based strategy initially.
Got it.
We want to be focused on the mass affluent segment, and that's what our focus will be. And so we will continue to do products which are suitable for that.
All right. Mr. Manian, thank you so much for joining us on this conversation.
It was such a pleasure talking.
Such a pleasure talking to you as well.
Thank you.
Thank you.
Thank you.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर फिर 3-3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान। जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान। जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
Hello and welcome back to Earnings Edge right here on NDTV Profit. We're now being joined by the management of Lumax Auto after a stellar quarter, in the previous one as well as following up in this one as well. We're now being joined by the management. Mr. Anmol Jain is joining us. Mr. Jain, a very good morning to you and thanks so much for joining in. Let me first start off with the order book because That's been one of the key aspects for Lumax Auto, as well as giving very strong visibility in terms of revenue going forward. I think this quarter it's 1,500 crores. Last quarter it was roughly about 1,300 crores. So could you just talk us through what's been the incremental order wins in this particular quarter, as well as how much are you looking to execute in FY26?
So thank you, Puneet. It's very clear that, is in line with our growth strategy of the 20% CAGR every year. I think the order book is just a follow-up of that. This quarter, there were many new products which went into SOP, and then there were new wins as well. So currently, yes, we are about 1,500 crores as an order book. I do believe about 40% of this entire order book rests in the future and clean mobility space, which is where strategically the company is trying to position itself. Have more products which are towards this space, higher content per vehicle, better margins going forward. So this should actually orbit us strategically into a very different organization in the coming years. So 1,500 crore order book is a healthy one, continues to grow. It is pretty diverse across different product verticals. Of course, the majority of this order book sits in the advanced plastics or the interiors vertical. In terms of revenue, I don't think more than 8 to 10% of the revenues of this order book will come into FY26. A large part of it, almost 40%, comes in FY27 and another 40% in FY28. So that's just to give some color on the order book.
And Mr. Jain, just a follow-up, if you can just give us some perspective on what kind of products are you actually selling within the future and the clean mobility space, because that seems to be one of the key strategies for you going forward.
So absolutely. So when we talk about clean mobility, there are largely two verticals. The EV models, I'm talking about the pure EV, whether it's a four-wheeler or the two-wheeler. For us, it falls under the clean mobility space. Also, an emerging sector for us was the CNG. And that's the reason why strategically we took a bet inorganically to get into the CNG space. We do believe that the CNG space will continue to grow in the passenger vehicle segment. The major OEMs there, Maruti Suzuki, Tata Motors, have already announced a big aggressive push towards CNG for the next few years. Also, with the CAFE 3 norms coming in, CNG continues to play a vital part to balance out the emission norms. So clean mobility encompasses for us largely electric vehicles and the CNG vehicles. And in terms of future mobility, it talks about a lot of electronification, sensors, human-machine interface, which multiple product lines under the mechatronics product vertical fall under this category. And again, as we go forward, we will also be developing a software integration center, which will then further take the next steps in terms of integrating all these products and selling it as a entire end-to-end solution to our OEMs. So these are primarily the few areas which we classify under the future and clean mobility space.
So Mr. Jain, essentially, roughly about 51% of your revenue is coming from the advanced plastics, segment in this particular quarter, and that's largely been what it has been over the last few years. But it has been decreasing because of the increase in alternate fuel segment. That's already 9% of your revenue in this quarter, as well as mechatronics, as you mentioned, as well as you're adding more software-defined, solutions as well for cars. So, would that be safe to say that with this strategy in mind, Lumax will be moving away from just being a supplier of lighting products to essentially becoming a technology first as well as electronic first manufacturer, and hence with all that we've seen in EV specifically, because Mahindra is also one of your key customers, that will be one of the key strategies going forward?
So clearly, Puneet, our midterm plan encompasses, let's say, to achieve this 20% CAGR, there are few key growth engines apart from the different 9 to 10 product lines which we cater to. Clearly, the advanced plastics or the interior space will continue to grow. And there, the growth is not largely coming just by volume organic growth, because we do know the industry currently is facing headwinds, and that business is largely dependent on one OEM being Mahindra. But the value content per vehicle with the electronification, with the HMI, integrating things like ambient lighting, having a stronger software push, integrating into different products in the interior space. So that's one growth driver for us within the advanced plastics. Also, the second vertical is the mechatronics. If you look at Q1, we've almost doubled our mechatronic revenue on a year-on-year basis. And the growth in mechatronics will continue to outperform some of the other product segments, largely because of course, a small base. But as I said, a significant part of the order book rests under the mechatronics in terms of the future mobility. The third segment for us, of course, is the CNG, which, as I mentioned already, is an inorganic growth strategy. And we have very aggressive plans to grow that segment. And lastly, the aftermarket segment, which continues to be an integral part. Almost 10% of the consolidated revenues comes from that. Q1, again, we saw a pretty strong comeback in terms of a 15 to 16% growth on a year-on-year basis. And again, these primarily are the four growth engines, which will not just take us forward with the whole 20% CAGR objective, but also position the organization to a very different, like a tier 0.5 with a software play and giving end-to-end solutions for our OEMs. Well, so that is the play at large over the next 4 to 5 years as a midterm strategy.
Got that, Mr. Jain. So just if you can put some numbers. So right now, roughly, I mentioned advanced plastics is 51. The growth will continue there, as you rightly mentioned, with ambient lighting amongst other products. So do you expect that this share should rest somewhere around 40 to 45%, with mechatronics also almost growing almost at the pace that it is? Somewhere around FY28, do you see that the mechatronics division will be around 15 to 20% of your revenue, and with alternate fuels as well, closing on 10%? So do you think that 1/3 of the business will be resting with those two new segments?
So I believe the advanced plastics will continue to grow at maybe a 15 to 20% CAGR. So clearly, I don't see a dramatic shift in the percentage of the pie. I think it will continue to be anywhere around 45 to 50, 55% of the total consolidated revenues. Yes, the CNG vertical will grow. I wouldn't be surprised if both CNG as well as mechatronics over the next 2 to 3 years contribute about 10% each to the consolidated revenues. And again, I'm talking based on the order book which sits at hand currently. I think the other muted growth will be in the structures and control systems, where I do envisage a single digit, maybe a 7 to 9% CAGR. So that would still continue to give about 10 to 15% of the total consolidated revenues. So this is again, a broad aspect of the contributors. Aftermarket will perhaps grow beyond the 10% to maybe around 15% to the total kitty. So again, a very diverse product portfolio where clearly each of the verticals will be anywhere between 10 to 15%, and the advanced plastics will continue to have the lion's share at about 45 to 55%.
Got that, Mr. Jain, and thanks so much for giving that clarification as well. Let me just ask you, for this quarter, we saw some impact on margins because of price correction. Do you expect that to reverse in Q2, or do you see that within this year that should play out?
No, I think it was I would not say it's a price correction. It is actually a price actualization. A lot of times when new products are developed, it takes time for those price settlements to be agreed upon with the OEMs. And again, this is largely for the BEV models of Mahindra, where, it was the first time for Mahindra as well, getting into this space. So the settlements have already been done. So it is just a kind of a Q1 impact which will come into Q2. So it's a one-off case. It's not a routine nature of the business. But in Q2, you should see the corresponding effect of Q1 come into play. And I think, again, for the whole year, we still remain very optimistic to maintain the EBITDA margins between 14 to 15%, as was the guidance given earlier and as was what was achieved last year as well.
And Mr. Jain, just one very quick question on the content per vehicle for both four-wheelers and two-wheelers. Given your strong order book and the comments that you made across segments, it does seem that the four-wheeler content per vehicle will continue to increase. If you can just give us some perspective on what you're doing for two-wheelers as well, because that currently sits around 22 to 25,000 per content per vehicle. So where do you see both those in the medium term, of course, because the order book is 80% coming from FY27 and 28. So where do you see both these numbers going forward in the next 3 years?
I think the content per vehicle will continue to increase in both the segments. Of course, passenger vehicles will have a larger play, purely again based on the technology involved in terms of the software integration involved. And today, if you see, I think about more than 50% of the revenue pie comes from the passenger vehicle space. So the contribution per vehicle or the value content per vehicle will continue to increase in both spaces. We've already launched certain IVI products, certain throttle position sensors for the two-wheelers. And again, with that, we do expect to take this wallet share across different OEMs in terms of these new product offerings. But I do believe that in both segments, the content per vehicle over the next 3 to 5 years should see another maybe 10 to 20% upside.
Well, that was the management of Lumax Auto. They've seen the content per vehicle increase by 5 times over the last 5 years and still seeing a stellar growth going forward as well. But let's stick with the auto team. We're now being joined by the management of Suprajit Group, Mr. Ajit Kumar Rai, the promoter as well as chairman of the company. Mr. Rai, a very good afternoon to you and thanks so much for joining in. Just if you could start with the business update that you mentioned of Suprajit Control Division or SCD on 16th of July. It was a key one because you are trying to reduce costs as well as reorganize your business. If you can talk us through the rationale as well as what kind of cost savings are you anticipating from this move?
Thank you for having me on your channel. In terms of controls division, if you look back historically, we had initially acquired, Westcon, and even before that, Gills Cables. And then 2 years ago, we did the LDC acquisition, and then recently the SCS acquisition. In the process, we had, multiple assets, set of people across the world. So as we go forward, it was felt it's important that we need to completely restructure the entire global, infrastructure of the company as well as the people. So what is our view was that customer would require all the 3 options for them. One to be onshore, one to be near shore, and also to be, low cost wherever it's possible. So with that in mind, we decided on this complete restructuring, which would give us plants, let's say in Mexico for North America, Morocco for Europe, China for anywhere in the world, and India for anywhere in the world. In the process, we realized that, it was not necessary to have 2 plants in Mexico. We have 2 plants in Juarez and Matamoros, and we thought that we'll combine the 2. Secondly, within Europe, we had multiple engineering and business development teams and warehousing teams. Because of the acquisition of LDC, we got something. Because of SCS, we got a warehouse in in Germany. So we decided that as a part of that, we will restructure European operations, where the warehouse will be moved to Siofok, near Siofok in Hungary, from Germany, to reduce the cost. We said that, okay, we have too many, more people within the German operations because warehouse has moved, and we'll only be focusing on engineering and business development. And that we'll also had earlier engineering and business development teams out of Tamworth. We'll restructure the whole thing and reduce the headcount. So these are all basically optimizing operations that we have done, which I think in the long run will give significant value proposition to us as well as to the customers. But you will see, even in the first quarter results, Suprajit Controls division, if you look at the margin, it has increased from 8% to 12%. It's like a 50% increase in the margin. So it shows the process that we've undertaken about a year ago after announcing SCS acquisition is yielding the necessary results for us. But there's some more work to be done. As we said, SCS by itself will turn profitable by the 4th quarter of this year.
Well, Mr. Rai, the other one was a very interesting one because the Suprajit Technological Center is now closely working with a company called BrewBreak on ABS development. Now, given the current context in India and possibly the paper out now that ABS could be mandated in even entry-level vehicles, it could be one of the key product categories for you going forward. If you can talk us through the update of where is it in terms of product development, and what do you see of the market opportunity right now? Because we only have a couple of players right now that's dominating the share.
There are big players, the global marquee players in India. So they are the main two players as we see it. And beyond that, there aren't much of a competition in that industry. First, let me understand the notification. It's a notification for general discussion. It is not it's not been announced as a date. So no, I think honestly, no two-wheeler end manufacturer are really ready to adopt it so fast, because I don't think anybody has the capacity to deliver that kind of numbers in India. So first of all, we believe that this date of implementation is not expected to be what has been given in the general notification. I think it will change. Secondly, we have to see what is the form of that they are doing. Are they talking about ABS, just one of the, let's say, front wheel and not the rear wheel, all ABS? These are all the fine prints we don't know yet. So we don't know that situation. So I think there is some time before it will be implemented. Now, coming to us, I think, of course, the business is very large. And as you rightly said, beyond those two key players, there are probably not many who are in the market. But for us, I think BrewBreak and we are jointly developing a new product, which is now in the advanced stage of trials and testing. I think we expect to fit it into some of the, at least one major customer's vehicle within the next few months. So once that tests on the field and all are ready, we are ready actually to produce. We have a small brake lines being set up to productionized as a starting thing. So we are ready. We are as ready as we can. We are fast tracking that project because we understand the gravity of the situation and the timing of the whole project.
The other one, Mr. Rai, was the new verticals, and we spoke a little bit about that the last time we spoke. So braking as well as brake releases, actuators, as well as digital clusters and sensors. Now, all these, how much are they contributing in revenue as of now? Because the latter two divisions might be coming in the electronic space, but could you talk us through the current phase of product development and how they are reported right now?
The electronics division is clearly stated because it has been declared as a separate, division. So it is very easily can be, it's there in the business update of course. But in terms of the braking, it is a new division that we are launching. Currently, it is being disclosed within the domestic cable division. And I think for the next probably at least a year or so, it will come under the domestic cable division because we want it to have some decent size before we start declaring separately the results. Right now, we are of course doing some CBS and some, of course, the brake cables and then some levers and some such stuff that is required. But as we do more and more, I think over the next 1 year period, and also when whether it's a hydraulic or whether ABS gets some traction, I think we will start looking at it probably as a separate division.
And Mr. Rai, what about the guidance? Because the last time we spoke, you mentioned FY26 overall revenue will be roughly between double-digit growth, EBITDA roughly between 12 to 14%, excluding SCS, of course. Do you still stand by it? And what could be one of the key triggers? Because you've already done 17% growth in revenue in Q1. So if you can just talk us through this specific guidance with the reorganization amongst other key factors.
Yeah, you are right. We were given that kind of a guidance, and I think we are still standing by that guidance. But having said that, I think the individual divisions, we have 4 divisions within that larger Suprajit today. The performance might vary because the market dynamics are, very diverse and different. So I would say that even Phoenix Lamps as well as the electronics division will grow in the second half, and overall will add to the growth of the company. And I think, as you've seen in the first quarter result itself, our margin is already in that range of, we are at 12+%, nearly 13%. So I think our margin is between the 12 to 14 that we have already, committed on. So we should be able to hit those guidance, although individual divisions may have some varying performance.
Well, Mr. Rai, thanks so much for joining in, giving us perspective across a whole host of topics, as well as for Suprajit. We look forward to our next conversation, but thank you, sir, for joining us today. And with that, viewers, that's all the time we have on this edition of Earnings Edge. Stay tuned to NDTV Profit for more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ एनडीटीवी पर। जय जवान।
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the markets, not much of an action that we are looking at. The benchmark index, that is Nifty 50, but Nifty Bank, that is down nearly 300 points in trade.
Yeah, absolutely. In terms of how we are looking at the benchmark indices, currently flat in red is what we are looking at in terms of how Nifty 50 is performing. But in terms of how the mid-cap index is doing, we are looking at relatively muted moves in the trade today. Let's see Nifty mid cap 150 up over 0.07%, Nifty small cap 250 clocking in some higher gains, but still 0.2% up currently in trade. But let's see some of the stocks which are in focus in the small cap space. Now, if you are just looking in terms of how the reactors have been in terms of earnings, so in terms of positive reactors, we are looking at something like an office space solutions in which the margins we have seen expanding significantly in the first quarter. In fact, we'll be talking the management later in the show as well. Revenue is also in line with the growth guidance of 30% given. It's up over 7% in trade currently. Other two stocks in focus includes the likes of Apex Frozen Foods along with Alpex Solar, both the stocks buzzing in trade as well on the back of the first quarter earnings that we are looking at. However, on the negative, what we are seeing in terms of earnings is something like Man Industry, wherein we've looked at a revenue decline, but company still reaffirms a 20% of top line guidance. RPP Infra Projects is another stock which is in pressure today, and this is on the back of margin contraction as well, down about 6% in trade currently. And now, if you're looking at Manoj Vaibhav Gems also, here the growth has slowed to 1% in the quarter with margins remaining flat at around 7%. But other than that, other couple of stocks which are buzzing as well includes the likes of Stallion India. They have signed a MOU with the Rajasthan government. Along with that, AFCOM's holdings, wherein they've reported cargo volumes, plus there is also some lock-in expiry that we are looking at. Stock up over, currently down about 2% is what we are seeing. Medi Assist is another stock which is in focus, and this is on the back of a large block deal that we are looking at. 15% of equity trading hands is what we have seen. So, in terms of the small cap space, Somit, these are the couple of counters which have remained in focus, right?
Right, Anushi, thank you for that extensive market check. With that, let's welcome in Kavita Shirvaikar, the MD of Patel Engineering, our first management on the show. Starting with you, Kavita. Firstly, if you look at, there was a stable revenue growth of 12%, but higher costs did weigh on your margins and your EBITDA number. Could you explain which were these factors that led to higher cost, and is this some kind of trend that we'll see for the remaining part of this financial year as well?
So first of all, thank you for having me on the show. See, let me say this year, financial year has been a good start for us because first quarter Q1 we have achieved 12% growth in turnover, and net profit margin, if you see, there is an increase of 55%. So overall, our balance sheet is also strengthened. Our debt position also has reduced by 75 crores.
Right, right. So you have an order book, as I can see, of close to 16,300 crore rupees. Then why the revenue guidance is so low at the project revenue growth guidance is so low at 5 to 10%? Isn't this too conservative of a guidance?
So let me tell you, this year also our target is to cross 5,000 crore plus turnover. Our order book is 16,285 crore, and over and above we are L1, which currently we have received the LOI of 240 crores, which is 16,500 crore. Book to bull ratio, if you consider 3.5, times. So we are saying ki conservative side, we are saying ki this year also our target is to cross 5,000 crore. And it demonstrates our stability, steady growth, consistency in execution.
Okay, Kavita, this is Anushi joining in as well. Just about the order book, you have a target of reaching the levels of 25,000 crore by the year end, and this is with expected inflows of around 8,000 crore. Just want to understand from you, are most of these new inflows that we are looking at is from the hydro project side of the business that we are going to be seeing? Just want to understand the overall outlook coming from this segment, and is the expected contribution to remain in the 60% of likes?
So I'll tell you, see, let me explain you. Our 16,000 crore order book is divided between hydro, tunneling, civil and other infrastructure sector. So out of that, hydro is 60%. Now with Indus Water Treaty, government is more focused on hydro and renewable energy. So now let me tell you कि some of the projects which were stuck at long time, now the approval is expedite. Government is completely focusing for speedy execution and taking out new projects. Let me tell you, NHPC, our major client is NHPC, NTPC, NEPCO, all large players, Central PSU. So their NHPC itself around 10,000 megawatt, which will be come up for bidding in near future, even SGVNL. So our focus will continue to remain in hydro, irrigation and tunneling sector, and selectively we'll look into other sector as well.
Kavita, what were some of these delays that we'd seen in the earlier quarters in terms of where the hydroelectric segment was concerned? Was it from the government side? Just want to get an outlook in terms of that. And is this execution risk, which was there before, is behind us now?
See, let me tell you, hydro, what are the risks we face? Because sometimes we observe that there is a delay beyond anyone's control, unnecessary delay in the project. Now, first thing, let me tell you, there are 2-3 factors which was, reasoning for the delay of the project, like environment clearance, land acquisition, other factors. Now the government also is focusing and considering to resolve these issues. Unless and until 90% land is acquired, they are not issuing the LOI. So let me tell you that going forward, we will see the timely execution of the project. Let me give you example. Subansari, largest hydropower project, 2,000 megawatt, which is in Arunachal Pradesh, we have timely executed, completed around 2,000 crore revenue in 4 years. So these are the benchmark projects. Like last year, we completed our tunneling project, T15 project, successfully, timely completed. And the year before, we completed Selapaz Tunnel, which was in difficult terrain, 13,000 feet high. With commitment and dedication of our team, we have timely completed the project. So now going forward, we will see these issues have been taken care and there won't be much delay in the execution of the project.
Ma'am, on the balance sheet side, if you look at your debt, it has been around 1,500, 1,600 crore rupees. Any plans of debt reduction in FY26, if you could give us some number on that front?
See, as you have seen, we have been consistently reducing our debt year on year. This year also our target is to 150 to 200 crores through monetization and claim realization. First quarter itself, we have achieved around 75 crores reduction in debt and accordingly our interest cost also has reduced considerably and our net profit margin has improved. Considering our strong financial position, our rating also has improved.
Okay, so this is in terms of the debt picture that we are seeing. Also want to understand on the net working capital side. Now, if you look at the last 2 quarters, FY25 and the first quarter, it's remained in the range of 169 days or also. Do you expect further improvement coming here in the upcoming quarters? Just want to understand the picture over here. Along with this, are there any challenges which were there before in terms of payments coming in from the government side?
So let me tell you, as you have rightly mentioned, that our working capital cycle also has been improving consistently. Earlier it was more than 6 months, now it has come down to 169. Net is still 110 days. And going forward also, we strongly believe that it will improve further because government also has taken various measures for realization of, taking timely decision, realization of claims and paying contractors' dues. So all these factors together, we see there will be further improvement in working capital cycle.
Right, ma'am. Just wanted to check with you on one thing. You're expecting 5 to 10% growth for FY26, and for FY27, your revenue guidance earlier was 15%. So, are you still confident you will be able to achieve that in FY27, or are you bringing that number down as well?
No, I'll tell you, considering overall the order line in pipeline, see, currently around 10,000 crore plus bids are under evaluation, and we are planning to bid around 40,000 to 50,000 crore projects by this financial year end. So considering overall, and then next FY27 guideline continue to remain around 12 to 15%.
That's in terms of 26 and 27, the guideline that we are looking at. Want to also understand in terms of margins as well. Now margins, from FY27 onwards, the expectation is to see further improvement going forward. For this current year, we are seeing about a 13% to 13.5%. Just want to understand in terms of, hydroelectric and tunnels, irrigation, all these segments which are there, which segment in particular enjoys higher margins, and what's your overall take on the blended margins going forward?
The overall blended margin which we are saying we'll be able to maintain 13 to 14%. Considering our existing order book and the future projects in pipeline, so we are, we are confident, we are giving guidance of we will be able to maintain this margin.
And any big ticket size order considerations that you have for this financial year? This is considering the hydroelectric space. There is emphasis in your note as well that there's limited competition over here. So just want to understand the overall opportunity which is there currently. If you are looking at your bid pipeline, that is about 40,000 to 50,000 crore, and this is with a success rate of 20 to 25% that we are looking at. So from this overall bid pipeline that we are seeing, what is the pie for hydroelectric segment in general, and what is the kind of expectation in terms of competition also from this particular segment?
So that 40 to 50,000 crore order book, let me give you, overall it will remain in the same ratio, like around 60-70% is hydro, balance 20 to 30% is water sector and irrigation.
And on the basis of that, if you can just give us the margins as well, the margin breakup.
Margin breakup, see, it varies from the project to project. It depends on the terrain, it depends on the type of work we do. So overall blended, we can see that hydro there is a high margin, irrigation there is little lower, and overall blended we are saying that we'll be able to maintain 13 to 14% margin.
Fair enough. And Kavita, my last question to you is about the order book. Now, if you just take the overall last couple of fiscals in consideration, in 23 you had reached a peak of around 21,000 crore. But from there on, we've seen decline in terms of where the order book is concerned. Just want to understand, why have we seen a subsequent decline in terms of the order book over the years?
So let me tell you, because of election year, order book was subdued. And now again, we have seen it has taken the momentum. It is like Patel Engineering itself. We have received LOA worth of 2250 crore in Q1 itself. So overall target for the year was 10,000 crore, and we see the momentum.
Thank you, Kavita, for joining and sharing that perspective on Patel Engineering. The stock in focus today, currently up over 2% in trade. But with that, let me welcome in our guest for today. That's Mahesh Ojha, AVP of Research and Business Development of Hensex Securities, joining us. Welcome to the show, Mahesh. First of all, Patel Engineering, you heard the commentary. It's FY27, which is more interesting going forward. But revenue for this quarter, if you're looking at, we are looking at a 12% of growth. Want to understand your overall take on the first quarter numbers for this company?
I think number is in line. If you're looking on order book and debt reduction, that is quite positive. And stock is reasonably valued on these levels. I think stock has a potential up to at least 54, 55 layer from 1 year horizon. And stock is lower consolidation from many times. So I think stock has a potential for upside, but yes, quite lower consolidation is going on. So above 42, 44 closing, we may see some more upside. That could be 54, 55 range.
Right. Another stock that remains in focus today is Mediassist, and this is after the block deal that we are seeing such kind of a move. The stock is up around 8% in trade. Now, what was this block deal? It was a block deal coming in from the promoter side, who was selling around 15.7% of its stake in the company. Now, this total value of the stake was close to 560 crore rupees, and the floor price that was set for this block deal was 507 rupees. but the block deal happened in a block window, and the price at which it has happened was much more than the floor price. It happened at a price of around 520 rupees, and that was one of the major reasons why the stock had gained in trade. Now this block deal was pretty much expected by everyone on the street, but this higher price is something that got the street excited, and that's the reason why the stock has been buzzing in trade. And what I'm understanding from my sources is that multiple mutual funds were lined up to buy this stake from the promoters, right from Kotak Mutual Fund to ICICI and ICICI. Everyone had lined up for this block deal, is what dealers have indicated. Now if you look at the shareholding pattern, the promoter holding post this stands at around 5%, or around 4.5 to 5 odd percent, and that could be the last chunk that could come in from the promoter side. So not much of an overhang which remains on the company's books now currently at this moment, if you look at, because most of the chunk has been offloaded by most of the chunk has been offloaded by that promoter. So not many block deals might come in going forward, and that was also another reason why the stock has been perking up in trade today. Mahesh, any views when it comes to Medi Assist? How are you looking at this counter after this 8% move, or after this block deal that has happened now, which was one of the key overhangs on the company? Do you advise your clients to buy this counter?
I think stock has potential for some more upside. That could be 675, 680 range. So this is also quite mutual fund are buying the stakes in lower range, and they at this trade it's completely active. So I think due to that some lower price, but I think so, stock has some kind of upside potential there. So we can see some more upside from current level. But yes, your view should be more than 6 months at least.
Right, Investec had also come out with this note on Medi Assist post the Q1 numbers, where they maintained the buy rating on the stock with a target price of 650. They said that the company has been seeing healthy gains, healthy market share gains, and the 14% revenue growth that we had seen on a YY basis was pretty much in line with what the street was expecting. So strong growth number coming in from the company, and the brokerage also remains quite bullish on Medi Assist.
Okay, so that's the bullish tone that we are seeing for Medi Assist stock, currently up over 8% as Somit pointed out. But another company in focus and is buzzing today is Office Space Solution, and this is on the back of its first quarter results that we are looking at. In fact, if you just look at the numbers, revenue was up over 30%, which is in line with their growth guidance for FY26. Margins have, however, expanded to 38% as compared to 31%, and net profit stood at 9.9 crore versus 2.8 crore. But to discuss more in details about how the first quarter was and the outlook forward, we are joined in by Amit Ramani, the chairman and MD. Now, Mr. Ramani, we are looking at standout results in terms of how the performance was for the first quarter. While your revenue growth is in line with the guidance that you've given, its margins in particular, which has seen a significant sort of expansion. Just want to understand from you what has led to these expansion in terms of margins.
So from our standpoint, I think the journey, has been there for the last 2 years. I think consistently we focused on, the right areas for us that will help us improve the margins. So this obviously includes a bit of occupancy improvement that has happened. It is also some bit of operating leverage and some bit of operating efficiency that's coming at the operating level as well. And all of these are contributing to a positive number on the EBITDA itself, expansion of almost about 710 basis points.
Mr. Ramani, if you look at the mix, you've emphasized this before also, which is that the growing portfolio size of the managed aggregation model. Now that has about 23 to 25% of margins, while if you look at the straight lease model, that has about 30 to 35% of margins. So do you expect there to be a drag in terms of margins going forward? Because on the other side, where you're adding more premium offices with grade A assets more in consideration, there would be a shift over there as well. So just want to understand both of these case scenarios from you, and this is on the terms of longer term that we are looking at.
So we continue to maintain the guidance that we will have a split of about 65% in managed aggregation and about 35% will be straight lease. So I don't think the model itself or the ratios itself will change, and hence the margins will only improve. Because if you really look at it today, we have 12 months or more centers is 84% blended occupancy, and the overall occupancy is at about 73%. Now, as a percentage of the overall portfolio, the mature centers of 12 months or more will increase. increase as we go forward, because in FY24 we ended at 95,000 seats, and FY25 we ended at about 1,35,000. So almost 50% of the seats were less than 12 months, which now obviously will mature this year. Hence, we believe that the margin will improve from there. As far as the ratios go, the reality of the model is that it diversifies our risk, right? And it allows us to have a much lower capital base to continue our expansion. This year also, the guidance is almost 40,000 seats. So from that standpoint, the spend would be similar to last year. Hence, it's a very capital efficient model. So obviously, some margin is obviously lower in the managed aggregation model, but the model itself is much richer.
Right, sir. Also, if you could give us some guidance or some understanding of how should one look at the occupancy number going forward. I believe for the first quarter, it should at around 73%.
Yeah. So I think we see about 2 to 3 percentage points improvement in occupancy, because as I was explaining earlier, the mature centers, which is 12 months or more centers, will become a larger base of the overall seat capacity that we would have, right? So we added 40,000 on last year, and we will add another 40,000, but the mature center as a percentage overall will be higher, and hence the occupancy will see about 2 to 3% percentage improvement this year.
Okay, so that's in terms of occupancies that we are looking at. Just want to also understand more on a macro perspective, how the price realizations faring up for the overall industry if you are looking at, because now if you just take residential industry in consideration, therein we are looking at now single digit of growth as compared to a double digit growth which was there earlier. But with more competition also coming, we've had a couple of IPOs in the last few months as well. How are you stacked up against the competition and the price realizations there onwards?
See, I think the price realization is a factor of multiple things. So one being the commercial real estate based rental, right? And then that has been at an all-time high. As you can see that we've had double-digit growth in some cases of the rental, and which has a direct impact to our seat pricing, right? Second, every contract that we have, which is a bit more long-term, typically 1 year to 5 year contracts, have basically a 5% escalation built into it. So that obviously has some positive spin as well. And then, clearly when we are looking at the overall portfolio, every center behaves a bit differently. And from a competitive landscape, I think it's great that, multiple companies have listed, and congratulations to all of them. And we feel that as this industry matures, which is a sign of clear maturity, and I think the competitive landscape is good because the commercial real estate overall is doing well, and hence Flex is doing well as well.
But any concerns from the IT segment? We've had a couple of large caps announcing more layoffs on the table. So 30 to 35% to 37% of your portfolio also, if you look at now, that revenue comes from the ITS segment that we are seeing. So any impact from there?
See, currently we are not seeing any impact. And I'll explain the reason for it. The ITS, when we look at it, we club all the pieces together. But ITS today is 3 parts. One is India-facing IT, which has no impact. Second is the India offshoring business, which probably has some impact. But I think in our view, therein as well, when people are expanding into new spaces, if they're deciding to shut down a space and consolidate, they're looking at obviously Flex as an option. And the third, which is impacting positively, right, the whole IT sector, is the GCC. And in that GCC space, we are seeing a lot of traction in terms of growth. And from that standpoint, I think we believe that the GCC will cover up for a little bit of challenge that we see in the IT offshoring piece. So overall, we don't see any impact currently, and hopefully in the future also, we won't see any impact.
Mr. Ramani, the other piece that I want to focus on is the seat addition targets. Now, for this year and even the next year, you have a target of about 40,000 or so seat additions over the year. Just want to understand in the first quarter how much of it was done. And in this portion also of the 40,000 seat additions that we are looking at, what is the kind of contribution coming in from elite centers as well? Because that's one area where you want to expand significantly. So just want to understand outlook in terms of both of these areas.
So currently, if you look at our portfolio, we ended FY25 at 1,35,000 seats. Today, we have close to about 1,55,000 seats. That's basically operational seats as well as seats which are under fit out. In addition, we have LOIs of another 10,000 seats. So we have clarity of about 30,000 seats currently. And then we obviously will add another 10,000 seats over the next 7 to 8 months. Also, if you look at the Elite Center, the product has done really well. 3 centers are live today. 3 more will go live in the next 60 days. And post that, we will add maybe 1 or 2 more. As an overall portfolio, the flagship product will end up being about 85% of our portfolio. And the Gold and the Elite product will be about 15% of our portfolio.
Okay, thank you, Mr. Ramani, for joining and sharing that outlook. It was nice chatting with you again on the first quarter results this time. But that was Office Space Solutions for you, stock up over 7%. Let me go straight to Mahesh for his view on this counter.
I think counter is fairly valued, and I think stock has some more upside that could be 780, 800 level. From margin perspective, I think the margin can be shrink in coming time, but volume will be increased. Particular sector is not much more competition, so I think quite bullish on the particular counter, and I think stock has a bright future in upcoming time, and numbers are quietly good.
Well, thank you, Mahesh. Thank you for joining us and giving us your perspective over the stocks that we discussed. With that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
Welcome, you're watching India Market Close at NDTV Profit. I'm Mahima Vachurjani. With me is Harsh Saita and Neeraj Shah. Well, let's take a quick look as to how the markets are doing. It's a quiet day for sure with respect to where markets are concerned. It's a flat day. The Nifty 50 trading around 0.04% higher. The kind of gains is also just 11 odd points, and the range is also very narrow when it comes to the Nifty 50 today. The Bank Nifty tad bit under pressure, down by about 0.5 odd percent. Let's try to pull up the Nifty 50 heat map and see how the entire Nifty 50 counters are doing. Tech Mahindra is the top gainer on the Nifty 50 today, and also one of the largest contributor on the Nifty IT today, up 2%, followed by Maruti up 2%. Hero Moto seeing good gains of about 2 odd percent today, and this is after it saw some partial profit booking yesterday. M&M, so largely auto names are seeing good amount of gains today, almost 2% in all three, Maruti, Hero Moto as well as M&M. There is also gains in Sun Pharma, NTPC as well as Tata Steel. Titan also doing well in trade today, followed by Cipla as well. But some counters that are under pressure, HUL seeing profit booking down 1%, HDFC down 1% as well, Bajaj Finance down around 2 odd percent, Grasim also seeing some profit taking today, down by about 1 odd percent, and ICICI Bank also down by about 0.8%. Let's also try to pull up the sectoral heat map and then also see the advanced decline ratio. In terms of the sectors, well, pharma and media leading the pack, followed by the Nifty Auto as well, all up by about 1 odd percent. Nifty Auto up by about 0.8 odd percent. Nifty IT also seeing good gains today, up by about 0.8 odd percent. Nifty Metal also doing well in trade today, but it's the Nifty Defense that's again in the red today, down by about 1 odd percent. Nifty Finance and Bank, the entire BFSI segment in the red, down by about 0.5 each, both private bank as well as the Nifty Bank. So that's the area of pressure today. But in terms of the overall broader market sense, that's also pretty much flat when it comes to the mid cap 150 at least.
It is flat, 0.25% higher on the mid cap 150, but it's relatively better than what we're seeing on the index itself, and that's probably because of the contributors to a certain extent. And let me explain that. Let's pull up the Nifty 50 contributors, and what you'll see is roughly 50 odd points on the negative side contributed by just HDFC and ICICI. So those two pulling the index lower, purely the financials, which don't really pull as much weight on some of the broader market indices, of course. And let's pull those up. And and that's what you're therefore seeing. The Nifty Small Cap Index surely seeing some bit of more zinc versus even the mid cap or the Nifty 50. So 1/3% higher on the Nifty Small Cap. Sectorally as well, and we did look at the sectors as well. We did see a positive tilt even in terms of the way sectors are responding. Let's look at the BSE 500 top gainers, top losers. Those are just some names for you. A Sonata Software up 11, doing very well. Alchem Labs came out with numbers not so long ago. Saman Capital is also up 6.5%. SJVN came out with numbers yesterday. So some of those movers on the back of numbers. But you do have a CSB, for example, which is down 5, and Astral again on the back of numbers, a Praj on the back of numbers, a KNR Construction on the back of numbers. So a lot of those movers are on the back of earnings. So that earnings tilt is reflecting on your screen at this point. But not as bad a day, Neeraj, as one would ideally see it as, given the way the Nifty is reacting.
Yeah, the thing to keep in mind with regards to the index is also how large brokerages are thinking about this as well. And I think if you just look at what the BOFA view is, like it's a nice balanced approach to what the markets could show. So Amish Shah says that expect muted returns and be nimble and rotate amongst sectors for alpha. So I think that's the first part. He says that risks are skewed towards the downside for the Indian markets currently. Also has a view on FI flows. They of course say that see more downside risk if the tariff are at about 25 to 50% and that rate sustains, if you will. And the risk reward for FI, they say, is still unfavorable. Do not see a revival of FI flows. They believe mid caps and small caps are overvalued, but within that overvaluation, there are some pockets and opportunities. They have upgraded the IT sector from underweight to overweight, and IT has actually done remarkably well today. They have also upgraded utilities from underweight to neutral. So some green shoots, but otherwise slightly iffy from our markets perspective. Talking of markets, let's get in Kush Bora to try and understand how he thinks about the markets currently from a trade perspective. Kush, good afternoon. Thanks for joining in. Are you taking a trade today on the indices?
Hi, Neeraj. A very good afternoon. Well, we did in the morning, but I think now if we had to, I would still go with a long trade on the Nifty. A couple of reasons for that. So first up, yesterday we spoke about how a rebound could take the Nifty to 24,600. We saw that happen yesterday, then some today. But any further up move from here would require some sort of positive news flow, be it domestic or global, because FIIs haven't really covered their shorts, index shorts, at least in a meaningful way. So that is something still to watch out for. However, two things have happened which are technically positive. One, yesterday we saw a higher high, higher low formation on the index, on the Nifty on daily charts, which is a positive sign. And then second, today we saw a continuation of that. So from a technical standpoint, these are early signs. I wouldn't trade short because as we've discussed, the markets are heavily short. Any kind of a further trigger would actually take Nifty to 24,800 and 25,000 levels. So yes, while the bias for the last 6 weeks has remained a little negative, this recovery that we are seeing yesterday and then some today, flattish kind of move today, I take that as a positive sign. So if I had to take any trade, I would take a long trade on the Nifty in the futures, or in if you go by spot levels, then 24,400. That's where you put your stop loss.
And what about the Bank Nifty, Kush?
Hi, Mahima. I'm afraid Bank Nifty structure hasn't really improved as much, despite yesterday's move. In fact, yesterday also, if you see, it was more of an inside bar where Bank Nifty, despite the kind of positive news, wasn't able to take out the previous day's high. So, the strength very clearly missing. Also, I think I was listening to Neeraj Tamanna this morning where, they were speaking about this pair trade where you short IT and, go long on bank. Incidentally, that's something that we mentioned in our report as well, in our advisory, yesterday morning. So that seems to be playing out very clearly. However, I would not give a very big downside to the Bank Nifty, not below 54,500, 55,000. Maybe that zone is a support zone. And the reason is the constituents. If you see, HDFC Bank has a very decent support at 1950. ICICI Bank has a very strong support at 1400. So yes, these stocks are down, but now very close to their support zones. So I wouldn't go short on a Bank Nifty, but if I did have a short position with today's day high, I would continue to hold it.
Got it. Kush, your picks for this afternoon?
Sure, Harsh. Going with both long trades, more of domestic facing. Thyrocare is one trade, that we've discussed a couple of times yesterday. Just because of the volatility, it saw the stop loss triggered, but then it gained, quite a bit of ground yesterday, trading positive today. So Thyrocare continues as a positive trade. 1375, 1405 are your targets. 1315 is where you place the stop loss. The second one is delivery. It's had a good run. We all know that. Slightly muted today. But on the whole, the structure is very interesting for this one, relative strength, because of the kind of moves that it's made in the falling market. So 478, 487 are the targets. 456 is where you place the stop loss.
Got it. Okay. Kush, stay on. It's a conversation that you might want to hear as well, because as much as people thought that quarter one would be hit, and naturally so, by a lot of weak traffic, maybe due to the geopolitical stress in the month of May or otherwise, I think hotel companies by and large have done reasonably well. Yes, we've had some issues for TFS on the airport traffic, etc. But hotel companies by and large have done okay. Somebody who looks at that space so closely, because he's got a listed business, but he's also, well, a veteran in this bucket, Mr. Patanjali Keswani, known as Patu Keswani, very fondly by a lot of people, Chairman and MD of Lemon Tree Hotels, joins us right now on the show. Mr. Keswani, great having you. Neeraj here. It's been a while that we've spoken. Thanks so much for talking to us today.
Thank you, Neeraj.
I would love to know what happened in quarter one and what are the trends that one can derive from it, if any, for the rest of the year, because almost everybody, Mr. Keswani, I'll be honest, thought of let's say the geopolitical stress in the month of May and believed that inbound traffic from abroad, as well as maybe local traffic as well, would have gotten considerably affected. But by and large, the numbers from the sector seem to be very decent.
So I think, Neeraj, you have to consider, it's actually, firstly, these are seasonally weak quarters, Q1 and Q2. Number two, there is always base effect. So last year in Q1, there was a big deflation in demand because of the elections and the heat wave. So when you are comparing Q1 this year to last year, this year we had issues obviously with the geopolitical stress, as you mentioned, and that COVID scare. But last year the impact was much larger because of the elections and the heat wave. So actually, the performance in Q1 this year, because of the base effect of last year, looks very good. However, I'm not denying that as an industry, we did pretty well. Looking forward, I would say Q2 will not have the benefit of last year's low base. So rather than, I don't think we will do as well in Q2 versus last year as the industry did in Q1. So I'm talking from the industry perspective. Obviously, different companies will have different performance levels, but that's my overall perspective.
Okay, so some bit of base effect aiding quarter one, quarter two may not necessarily do as well, but broadly, when we talk to everything which is consumer facing, be it discretionary, be it staples, or be it, let's say, hospitality, right? Technically consumer facing, I think the sound bites that we are getting, Mr. Keswani, are very varied, with no clear trend or linear trend around whether the consumer has revived spending or not. Now, in hotels, there has been great spending for the last 3 or 4 years. Do you reckon that to continue? Quarter two may be an aberration, but does the uptrend continue for the rest of the year, if you will?
So look, I expect that the industry, or at least the performing part of the industry, will have early to mid-teens revenue growth this year compared to last year. But I am very sure that the rate at which the industry increased prices, which was like 20% in the past per year, that has got to moderate because there is some level of, I would say, saturation. So future revenue growth will have to be a combination of demand growth in terms of rooms, over which you can overlay the rate growth. So I would sound a note of caution. As I said, I expect early to mid-teens growth in the industry, parts of the industry. I noticed you smiled, Neeraj. I do think in India generally, I sense there seems to be some as you said, some wariness about spend, some slowdown. So I just get a sense that there is some slowdown in consumption.
Well, okay. I think my smile would have largely been around the fact that it is good to hear an optimistic voice in the scenario currently, because not everybody is, right? And Mahima, that's where maybe my smile came from. But you track Lemon Tree so closely. I'm sure you have some questions.
Yeah. So, Mr. Keswani, I just want to understand, because, you know, Q1 operationally also looked very nice. You did mention the base effect, but going forward, I want to understand that when you say that, you know, there is positivity coming in the entire space, do you think that largely the focus will be on increasing your ARR? And do you think that the mix will be shifted towards higher yielding segments going forward for Lemon Tree?
So I think the way we look at revenue growth is partly strategic and partly opportunistic. So in markets where we find that, you know, and there are many micro markets in India, wherever we find there is an opportunity, obviously, where demand far exceeds supply, then the way to go forward is you are already doing high occupancies and therefore you increase your rates. In markets where occupancies are anyway not too high, then the focus must be increasing your occupancy rather than focusing on rate. So this is it's a combination of these two. And ultimately what you want is, as you are showing on your screen, you want revenue per available room to go up. Obviously, if the revenue per room goes up due to price hike, then the flow through is much larger than if revenue grows through occupancy, because then there is some implied variable cost which comes into the P&L. But broadly, what I am trying to say is I have no doubt that there is a structural story in play in the hotel industry. This part of discretionary consumption, in my opinion, is just going to grow and grow as more and more people move into the magic household income of about 35 lakhs a year. That is the magic number. It occurred in China. So they calculated it at $8,000 per capita. And I think in India now, at this inflection point of its GDP, we are definitely going to see larger and larger numbers of Indians moving into consumption of branded hotel rooms. Which means what? It means that if the economy grows at 6% for the next 5 years, the number of such consumers will grow 3x. So it will not be linear or directly proportionate to the economy, but to the number of people who move into this part of the bell curve.
So, this is Harsh also joining in. You're very well placed to tap into that opportunity, of course, and you've given very strong guidance as well. You're planning to double the number of rooms which are available in your portfolio, and then thereafter double it as well over the medium term. Talk to us about the initial doubling. You've got an 18,000 room pipeline at this point, plus live rooms both. Talk to us about the glide path. How quickly do you get to 18? Where do we get at the end of FY26 and then thereafter?
At present, we have about a little under 11,000 operating rooms and about 7,500 in the pipeline. These rooms in the pipeline are a function of where those hotels are at the current stage of construction. So my best guess is that these 7,000 will be operational in the next 3 years. But at the same time, two other things will occur. We will obviously continue to add more hotels into our asset light side, which means that depending on whether that's an existing operating hotel or it's under construction or it is planned to be constructed, at different times, these hotels will also come into move from pipeline into operations. Then, since we have now, we are planning to list Fleur, which is our asset company, there will be clearly a certain opportunity to increase the owned hotels portfolio. So if I looked at it very broadly, I would say that by 2030, I would be very disappointed if we did not have something like 35,000 rooms operating and in the pipeline, which will give us, I think, about 10% of India's market.
Wow. Mr. Keswani, would you like a lot of not India hasn't had a lot of local brands which have truly become global. There are a few, but not quite. And then when we talk about hotel brands in particular, considering there is a large domestic market which allows large chains like you to expand within India itself, do you reckon that over the next 5, 10, 15 years, there is a local brand or two, maybe yours, maybe some of your peers, maybe all of you together, which could actually become very large global brands as well?
So let me start by talking as an Indian, and then I'll get to the hotel industry. I've always wondered why all the very large market cap companies, maybe it's partly due to the exchange rate, but I mean, why do all trillion-dollar companies only originate from the United States? Why do $500 billion plus companies originate in Europe and in China? I actually was looking at this from the perspective of economic growth. And really, China's growth was 2006 to 2013, 14, which is where, by the way, India is exactly where China was in 2006. So unless we commit multiple self-goals, I have no doubt that we are, as I mentioned earlier, in now part of a structural cyclical change in consumption, which will then flow down into the whole economy. When you look at those, those $1 trillion or $500 billion companies, they all started by saturating their market and then going global. How do I see the, say Marriott? Marriott actually started as one brand in America. I think original Mr. Marriott in the 1920s had a push cart. From there, he bought a hotel and then over time saturated the US, then expanded to wherever Americans went. The story is the same in most successful businesses. They want to capture more and more share of their existing customers and more customers. What do I see in India? I read a very interesting article the other day which said that the foreigners arriving into India were only 10 million. But the Indians going out of India, this is 2024, were 30 million. So if 3x are the number of Indians going out, why would I focus on the incoming? Why would I not follow these 30 million who I estimate will grow to 100 million as happened in China by 2011? So yes, my view is that Indian companies in the hotel space specifically will go global. They will follow their Indian customers. And by following the Indian customers, they will be able to offer better returns to asset owners all over the world because there will be such an explosion of Indian consumers going all over the world. So short answer, of course, I want to be one of them, but I'm pretty sure there'll be 2 or 3 hotel companies in India who will be large players on the global stage in the next 10, 12 years, 15 years.
We would love to stay in a lemon tree at the next available opportunity, I must say. But yeah, this is unique. We haven't seen too many people speak about it this way, Mahima and Harsh, and this was really, really nice to hear this.
Yeah. So I think, Mr. Keswani, I have a follow-up on that. Right now, I think in international presence, you're there in Bhutan, Nepal, and Dubai. Just want to understand from a longer term perspective, you did mention 10, 12 years down the line, but let's say 5 years down the line, any particular geographies that you're aiming at?
So let me put it in another way, Mahima. Today, roughly, say 30 million Indians travel outside. Where do they travel? So we looked at that too, and really there are 7 or 8 obvious suspects. The largest numbers go to the United Arab Emirates, which is Dubai. I think 8, 9 million go to Dubai, Ras Al Khaimah, Sharjah, etc. And I'm not talking transit, I'm saying they go there. Then there is a very large number of Indians who go to Nepal, to Thailand, some to Sri Lanka. Then, of course, there are the Indians who go on to Hong Kong, Singapore, New York, and London. I'm giving you the cities where Indians go. In the latter case, they are obviously transiting in many cases. But actually, I'm sharing some of our insights. I think the most exciting markets for an Indian company in the hotel business right now is the United Arab Emirates and Thailand. And we would and Nepal, of course, and we would certainly want to be present there at scale.
Reason for that, Mr. Keswani, that you pick these markets, is it only because Indians venture there and that's why the opportunity is large, or is there a value plus volume game at play there?
See, I have a view on Indians. Indians are like the Japanese were 40 years ago. The Americans were 55, 60 years ago, and like the Chinese were 15 years ago. They like familiarity. And especially the first time Indian or the second time Indian who travels to a new geography, they want the psychological comfort of feeling somewhat in a safe environment, emotionally safe, psychologically safe, and certainly they like Indian food. So we would like to offer that to them.
Okay, this turned out to be a far more interesting conversation than what we had thought when we thought about speaking to you with results, Mr. Keswani. But lovely talking to you, as always, I might add. Thank you so much for taking the time out.
Thank you.
Right, that's Lemon Tree. And a lot of insights. But, as it's with live TV, while you ponder over what's happened, you also need to look at what's happening right now next, and Hindalco's numbers out on the screen. And the looks of it on almost all line items, they've beaten estimates, but for margins which are looking weak, 12.3, despite the fact that margins are lower, the net profit is higher. Now I'm just looking or waiting for the sales numbers to be out just to see how much of a revenue beat has been. It's 64,232 versus 64,889 crores. Well, on a quarter basis, the numbers may be lower, but I believe versus estimates, the net profit, the top line numbers would have been high, because
it is a beat.
It is a beat, right?
59 odd was the expectation, and 64 is what we have. So that's where the beat has come from. The margins largely subdued in comparison to the expectations. Profit is also largely a beat.
Yeah, and some of it came, Harsh, by virtue of the Novelis numbers that we saw overnight as well, right?
Yes.
Because it didn't exactly set the stage on fire. So, well, okay set of numbers. Maybe the revenue number is helping making the street believe it's good, but the margin numbers certainly looking slightly wobbly. Is Vansh with us? Okay, Vansh will be joining us any moment. Any other details you guys are picking up?
Not yet, but even HAL numbers are out.
Maybe you want to read them out.
Yes. So in terms of HAL, the net profit is down by about 4%. So that's the first number that we have on HAL, and revenue growth is at 11%. EBITDA is in fact down by about 11%, and margins have come at 12 point. No, that's not the margin. Okay. So but revenue growth around 11%, but EBITDA down 11%, and not much of a PAT growth there as well. So overall HAL numbers also not looking very attractive, but we can try and pull up the stock. Hindalco stock not doing anything per se, but let's try to pull up the HAL stock and see, not doing much in trade as well. It's flat as we speak. So that's with regards to where HAL and Hindalco is concerned. In terms of, so I think we will have to slip into a very short break, but we'll be right back with more action on the other side.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Welcome back, and of course earnings continue to flash on the bottom of your screen, and we'll discuss that in just a minute because it's 3:30 and it's that hour of the show where we bring in Somit, who gives us a lowdown on all of the dealing room chatter he's been picking up. Apologies, 2:30.
Yeah, 3:30 we close the market. I was just going to say
make
that.
the same mistake.
Yes. Maybe 3:30 is the time.
Where's the party today?
Maybe it's an attractive time for me, so no surprises why.
Multiple stocks in focus, couple of pharma stocks specifically. Firstly, it's Biocon. The stock was under pressure for the last 1 month, but dealers are now indicating that the selling pressure on this counter is largely over, and there could be a positive announcement related to one of the molecules of Biocon. When it comes to Himadri Specialty, dealers are indicating that some announcement related to a tie-up or deal could come in from the company's side. Also, the company will be attending a couple of analyst conferences next week, so keep an eye out for Himadri Specialty as well. For Apollo Hospital and Suzlon, the buzz on the street is that there is buy flows or at lower levels for both these counters on expectation of strong Q1 numbers, so keep an eye out for that. For M&M and Keynes Tech, dealers are indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been buying these counters. And lastly, when it comes to Cipla, dealers are indicating that there could be a positive announcement that could come in for the counter related to one of its key drugs. So keep an eye out for Cipla. The stock is up 1% in trade today.
I wonder, Somit, so, just wondering, I don't know whether you have answers there or no, but is this drug launch for Cipla that large enough that it could be a meaningful mark for Cipla? Is that
Yes,
what
that's
people are
what
talking
I'm
about?
hearing. Yes, that's what I'm hearing, that for Cipla specifically, the drug could be a big
very
drug.
large one.
A big drug is what, launch of a big drug is what is expected.
Okay, very interesting. The other one is this buy flows that you see at lower levels ahead of Q1 earnings for Apollo Hospitals and Suzlon.
Yes.
Now that's interesting because, the premise is that the numbers will be good, but on anticipated lines. So are people expecting a beat in both of these names?
Well, yes, a beat is expected in both of these names, Apollo Hospital and Suzlon. Specifically, even if you see the chart of Suzlon today, there has been heavy buy flows at lower levels, despite the fact that the stock crashed after one of the news reports which suggested that Himanshu Modi might exit the company. The stock has recovered very well in trade. So that is also one of the indications that people are buying, given the fact that they're expecting a beat to come in.
Very interesting. Okay. Sumit, thanks for putting that into perspective. Really appreciate your time and the insights, more importantly. Kush Bora, Sumit pointed out Suzlon and charts, and I'm inclined to ask you that, do you see the presence of some buying in Suzlon, in an Apollo Hospitals, or a Keynes Tech, or for that matter, M&M, any one of these names, if you will?
So Suzlon, not really, though I concur with Soumya that yes, from lower levels of the day, the stock has seen buying. But if you'll recall, a couple of sessions ago, we did discuss that, buying at lower levels will be ideal. Not sure if those lower levels are here yet. The 200-day moving average of 60, 61, that is the zone where you should look at accumulation on Suzlon. In fact, the counterpart for this, Inox Wind, that stock's actually hit oversold territories and might just see a spurt. But I do like Cipla, the kind of moves that it's made over the last 4 sessions, taking out some of the key resistance levels. I think this momentum could perhaps continue for some more time. So among the stocks mentioned, I think Cipla actually looks quite on a strong footing, and the price and the volume action do confirm that.
Okay, we've Aditya Shah of Hercules Advisors also joining us now. Aditya, hi, good afternoon. Any first reading with regards to where Hindalco earnings are concerned, and then we'll also ask you about HAL.
I think the results are really very good. I need to see the numbers properly. I have not been able to see the numbers, but on first glance, the numbers seem to be good.
All right. All right. We were talking about HAL, and since it's reported its earnings, Anushi has dissected them, and she's giving us more details on that. Anushi, what are you picking up?
Well, thanks for that, Mahima. So what we are seeing is 11% of growth in terms of revenue for HL. Now, this is in line with what the street expectation was concerned about. 4,900 crore or odds of was the expectation, and we've seen about a 4,800 crore. So that is what is in terms of revenue that we are seeing. Of course, execution playing a part in this as well. Because if you look at the order book, that stood at 1.84 lakh crore. This was at the end of FY25 that we'd seen. This was an uptick of 95%. Other than that, it's a margins which is mainly a surprise. Now, if you look at the margins, they've expanded to 22.7% as against 19.3%, which is a 341 basis points of an improvement that we are looking at. Now, the expectation for margins was about flattish kind of a growth, so it's a beat on that front. However, we are looking at a dip in terms of where the net profit is concerned, with the net profit being down about 3.7%, and this is on account of impairment loss, which has impacted the net profit growth. Along with that, higher tax expenses also. Last year there was a tax refund which took place, which resulted in a higher base as compared to this year. What would be the key monitorables? Of course, the order book positioning, that continues to be the key focus. Other than that, deliveries to Indian Air Force in terms of the Tejas Mk1A is something that we should be watching out for. Update on GE engine supplies is also something that we've seen. There was an improvement in terms of how the supply scenario is panning out, but a further update on that is something that we should be seeing, and commentary on repeat orders of LCM, that's Light Combat Aircraft, a Mark 1A, also remains in focus. So that's the overall picture that we are seeing for Hindustan Aeronautics on the basis of its first quarter numbers, which has come out.
Okay, thank you so much for breaking that down for us, Anushi. Kush, anything on the charts that you're seeing? The stock did recover post its earnings, but it's again come back to that red territory a tad bit. It did go 1% higher and it's coming off. Any trade there once now that the earnings are out? How are you seeing the charts?
Well, it doesn't really change much for me in the sense that, the downturn momentum that the stock has actually continues. Now, the only saving grace is that the day low for today is at the 200-day moving average. That's where the stock has rebounded from. Perhaps, from a near-term perspective, that's where the stock could halt its fall around the 4,300, 4,350 mark, maybe some accumulation. But I don't see an immediate spurt or an immediate recovery on this. If you want to start accumulating, perhaps 43, 4350 would be a good zone, but that should be more of a positional trade, 6 to 12 month kind of a time horizon, not an immediate one.
Okay, what else? I was trying to look at some of the stocks which gave some very good results overnight, and the kind of reactions that we saw in the morning for some of those names, or vice versa, some which actually had a bad set of numbers and the reactions were adverse. So on Astral, the markets really gave a thumping thumbs down, and we'll talk about that in a moment. So that stock has failed to recover and is currently down about 8.28%. Praj had a forgettable quarter too. That also didn't do well, and that stock corrected and probably still lower, 7% lower. I wonder if the likes of Office and Tilaknagar Industries are still holding on to the gains that they showed post their numbers. Aditya, do you look at individually any of these names? Because, I mean, Office did well, and it's a small space, but the couple of companies listed, both have delivered good numbers. Similarly, the liquor companies, I think, almost without exception, have delivered some pretty strong numbers.
So we're not being able to comment on the office side of it, but liquor companies, of course, liquor companies continue to be a good investment. I am very bullish on the liquor companies over a longer period of time. As youngsters continue to keep consuming alcohol, that's the bet, and they will continue to do exceptionally well. Companies like United Spirits or companies like Radico Khaitan, all of them will continue to do exceptionally well. So liquor is a space that I'm very bullish on. No comment on the other sector.
Okay. Fair call. Kush, do you have any thoughts on Office, on this one, in conjunction actually on Praj Industries as well, which has cracked quite a bit?
Yeah, no, I think Praj, Astral, both of them were already in a bit of a downturn. Praj more so than Astral, but this breakdown isn't healthy. Praj has now broken below some of the key support levels and trending lower. So yes, I won't expect any kind of a rebound. Perhaps maybe an oversold territory that can kind of a bounce, but nothing to write home about and shouldn't be considered as an entry point. Astral has some glimmer of hope. 1240, 1250. That's a medium-term support zone, has been for the last 6 months. Perhaps that should act up. Also, the stocks hit oversold territories, so you could see some consolidation around these levels, but not an immediate trade. Office, far recent listing for me to comment on right now. I mean, you've got some data, but not enough to make a medium-term view.
Okay, so that's with regard to an Office, but stock of the day, Astral, reported a 33% drop in its Q1 profit due to inventory losses, lower PVC prices pressuring the stock, as well as the numbers. Puneet here with the key highlights of Astral. Puneet.
Well, thank you for that. So definitely a weak quarter to say the least. Let's quickly pull up some of the key takeaways that we had for this particular quarter. Q1 was expected to be impacted because of the PVC prices, and that was the key highlight for this quarter as well. So let's go across to the key highlights first. And we had three of them. So of course numbers were below estimates. PVC price volatility was one of the major reasons for the profits as well as the margins getting impacted, and that's largely continued from the last quarter as well. And the third key takeaway which we have, the company is seeing stable PVC pricing in the month of July, and while this is a positive, there are a couple of things that you should know about this. So when you look at the core numbers, and we are aware of it, the revenue was down by 1.6%. Margins were impacted in this particular quarter, and because of that, the margins have come in at 13.6% versus 15.5%. But more importantly, what impacted the quarter one performance was that the average PVC prices have dropped by 14% on a YOY basis, and that was one of the key reasons. Compared to the last quarter, it's still down 4 to 5%, and that's reflected in the profits getting impacted this quarter. And this has led to inventory loss that the company has mentioned in this particular quarter, that they had about 25 crores, which impacted the profits. We'll get back to what this means in this context. And the key question, why is PVC prices such a big dampener for something like an Astral? Now, just as other commodities, PVC's prices can be passed on to the customers with a lag of a particular quarter, but when the companies aren't able to, they report inventory losses, and 25 crores was the impact for Astral. Now, the key aspect is that when there is sharp price movement of PVC within the quarter, for example, if it starts at 100 and then goes to 90 within the same quarter, the company is reporting inventory losses in that same quarter. And that's one of the key reasons what Astral has been highlighting over the last few quarters, that they have been impacted rather because of management conditions amongst other factors. So finally, what is the outlook? They're mentioning that beginning Q2, they've seen almost a 30% growth in the piping division specifically. That's a key positive. And BIS implementation will be one of the key positives to watch out for if it does get implemented by Q3, something that the management has highlighted. But that was a lowdown of what has impacted the the performance in Q1. Let's listen to what the management also has to say. Mr. Savlani, the Chief Financial Officer, mentioned about the pricing environment for the company in this particular quarter. Listen in.
PVC price on YOY basis, if you see, it dropped by 14%. So that was the reason of drop in the top line. Otherwise, the volumes were flattish. Overall, the demand scenario in the industry was flat. So because of that, this situation is there. Otherwise, I think margin front, I can say that if you remove out that 25 crore rupees of inventory loss, I think margins are almost in the line with normally we are delivering in Q1. Normally, our Q1 is loaded with the PVC mix on the higher side because agriculture demand will be there. So because of that, if you historically see for last 7-8 years number, Q1 is always low with the margin because of the PVC mix is high. Our Q4 is always peak where the CPVC volumes are very high.
Right, so that's of course the management of Astral as well. Excuse me. Aditya Shah, what's your take with regard to the numbers? And would you look beyond these numbers at the backward integration that Astral is doing and look at that as a possible inflection point and likely look at the stock more constructively now, given this correction that we've seen today?
Look, Harsh, the stock still trades at about 70 times multiple. The numbers are really very poor. Let me give you an example. There's been trend, there's been a stock in the EMS space, which is really very hyped. PG Electroplast, the stock reported a massive slowdown in growth and the stock tanked by about 35%. Similar thing is happening to Astral. If the growth slows down and you are at an obnoxious multiple, obviously the market is going to correct the stock. Market is going to have a time correction. So from my perspective, it's a great company. It's a fantastic company, but it is not at a right valuation. You cannot buy a Maruti at the price of Mercedes and then expect to make stupendous returns from there on. So from my perspective, it is a really very expensive stock. I try to wait for some time of some correction or a time correction before which you can look at this.
Expensive. Okay, that's the underlying message. Kush, your take?
Well, on Astral, as I said, 1240, 1250, that's the medium-term support zone. If that gets respected, then yes, you could see some sideways consolidation. But then if that is broken, then I think 1200 is very much on the cards. So yes, I wouldn't go out and buy just because the stock's cracked and giving way. I would actually wait for it to start consolidating. 1240, 1250 could be a near-term support zone.
Okay. Well, let's Jeman, stay on. The next company in focus is Man Industries. The case for the chart, of course, is that the results, the revenues were flattish, 742 versus 749 crores, but margins expanded 6.6%. EBITDA was up 30%, as a result of which there was a 45% uptick in profit after tax. But the stock is getting pummeled in trade. Clearly, something didn't sit right with the street, despite the fact that the management reaffirmed the 20% growth guidance due to despite the Q1 numbers. Nikhil Mansukhani, Managing Director of Man Industries, joins us right now on the show. Nikhil, thanks for joining in. I want to start off with, in case I've missed something, Nikhil, because I was looking at your numbers and the margins seem good. It is tough to pull off a margin beat in times like these, but the street seems to be disappointed with what you've given. There is a sharp downtick in the stock. Is there something that has changed between what you had earlier guided to what you've guided now?
No, I think, Neeraj, we are pretty much in line with the guidance. I think the difference is that, Q1Q versus YOY, we have always indicated that we are working more towards raising the margins. The margins are much healthier and even going forward will be even healthier. The only thing is this is Q1. We obviously had a hit of around 150 crores of revenue because one of our export orders, the shipping got late because of the of the war of the last quarter. So, but which is obviously not incorporated when you do the results, and it will obviously show up in the next quarters coming forward. So I think it's a sentiment, but we are working towards. I think we are working towards the right direction to push the profit up. The revenues, as guided by us, of 20%. We would be getting there by the end of the year. For
Okay, so one is the revenue number, and you get there. Two is, as you rightly said, I mean, so maybe the street is disappointed because after 8%, 11%, and 10% in the preceding 3 quarters, if you come down to 6.6, it's not something that might please the street. Are you giving any kind of a number or a guidance for what you might do for the year? Because let's say you did 9% in FY25. Would you be sub 7%, which is 6.6 or around there? Or would you make up for this number in the remaining quarters and try and nudge 9%?
No, we would make up the remaining numbers in the next few quarters. And in fact, the overall growth would be approximately 20% for the company, at least. So we are expecting a higher growth, but 20% would be, as guided, would be 100% achieved.
No, sorry, Nikhil. What I meant to ask was, would you make up for the loss of margins in the remaining quarters? And would you be able to reach the 9% EBITDA margin console for the year?
No, we would be higher. We would be at almost 10.5%, 11% EBITDA margin for the year.
For the year, which means you actually have to do substantially better in the remaining 3 quarters to make up for the loss in quarter 1 as well. But you believe you'll do that?
Yes. We already have the order book in hand. Executions are going on. It was the slight bit of the orders were delayed in the shipping and the production, which was not because of us, but because of other reasons. And now looking forward, especially H2 is going to be extremely strong. And all those numbers which are promised would be achieved, including much higher margins of EBITDA.
Okay, Mr. Mansukani, hi, Mahima also joining this side. I think the top line was also largely impacted by the volumes in the export side of business. Just want to understand as to that's because of the deferment, if I'm not wrong. And secondly, that recovery in volume is going to be seen in the next 3 quarters. Is that what you mean?
Yes, correct. So that particular volume will be covered up in the next 3 quarters.
Okay, all right. And in terms of your overall capacity expansion plans, the overall Saudi Arabia capacity that you're aiming at is around 1,200 crores, and commissioning should be in that Q3 to Q4 FY26. What is the overall revenue potential that you're expecting out of that particular plant once it gets operational, and when do you expect it to achieve that break-even point?
So we will be operational by March 2026. And the top line revenue which the company can achieve from there is approximately around 3,000 to 3,500 crores. The capex in Saudi is around 630 crores. And we are already in discussion with the Saudi government, for for certain orders. So the first year we are looking at somewhere around 1,500 crores of top line orders. And the second year, it would reach up to 3,000 crores.
Right. Nikhil, this is Harsh here. So I want to first start off by understanding from you, this 3,200 crore order book that you have, you'll fully execute that this year. That's broadly the expectation, because you'll do 4,200 crore of top line this year. That's the anticipation.
Yeah, between 4,000 to 4,200 crores. Correct.
Understood. And with regard to the unwind that is expected from the export side, are we already seeing that in Q2, or do you expect that to come in maybe H2 FY26? Just trying to understand the timing of that unwind. When does it happen?
So it is in the second quarter, and third and fourth quarters, but major portion of it would come into the H2, which is Q3, Q4. Okay, so we have to wait for H2 for that to happen. Okay, understood. With regard to your the potential that you have, the bid pipeline is 15,000 crore, is what I understand. How are things evolving from a geopolitical as well as from a tariff standpoint? Is that at all impacting this particular number in any fashion, or are you still expecting robust order book growth to come through this year? So the tariff is not impacting, because anyways, US was a very high tariff for the line pipe industry. So that doesn't affect us at all. In fact, we are expecting quite a robust, order book. In fact, the bids which we are quite a few we are H1 and like L1, and we should be expecting certain orders very soon. And we are seeing quite a bit of traction overall, whether it be Middle East, Far East. There are a lot of new orders which are upcoming, which we are already bidding for. And also that now we have got more and more qualified for hydrogen and other like Qatar Energy and everything. Now we are bidding there also. So we have a larger order book. Regularly, the order book was around 8 to 11,000 crores. Now we have bid for more orders. So we are hopeful that, this robust order book will continue for the next 2 to 3 years at least.
Got it. Okay. Nikhil, just one last question, because just stemming from what happened maybe in the previous quarters as well, you believe a lot of the growth numbers that we're talking about, 9% or 20% plus revenue or margins better than 9% core EBITDA margin, or the bottom line numbers looking okay, all of that will come from operational numbers, or could some of it include one-off elements? Because as you would know as well, right? In your Q4 con call, there's a lot of questions around that. So just trying to understand that.
Yeah, last quarter we had the benefit of a real estate asset. That's why the jump in the revenue as well as the profit as well. This year is purely from operations.
Good to know that. Great. Nikhil, we will leave it at that, but wishing you all the best for the quarters ahead. Thanks so much for taking the time out. And viewers, that's Man Industries saying that while they clocked in 6.6 or 6.7% margins right now, they'll make up for it, and they believe on the whole, the operational margins for the year could be northwards of what they did last year, which is 9%. And therefore, they will actually do much better over the next 3 quarters, and particularly in the second half, to clock in console margins for the year northwards of 9%. That's a strong ask in an uncertain scenario. The management seems confident of doing it. We need to slip into a break though. Get you BTST ideas as well as the bull versus bear segment on the other side. Stay tuned.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ एनडीटीवी पर। जय जवान, जय जवान, जय हिंद।
Welcome back. You're watching India Market Close. Well, the markets have kind of slipped into the red. The Nifty 50 down by about 0.4%. The Nifty Bank almost down by about 0.8%. The broader markets also. The mid cap 150 specifically down by about 0.2%, and the small cap 250 almost trading in that flat range. So that's with regards to where the markets are concerned, but it's time for a bull and bear segment. The stock that we are putting spotlight on today is Titagarh Rail Systems, which is facing a revenue downtick in the freight rail business, but there are certain things that have also worked for the company, and we have Anushi joining us to present the bull and the bear case for Titagarh.
Well, thanks for that, Mahima. So, despite an overall weak set of earnings that we are seeing for Titagarh, the stock is up in trade today. And this is on the back of the commentary that we are looking at in terms of how the first quarter has went by. If you're just looking at the revenue growth, now that was down about 24% in the quarter. And this was with margins remaining flat in the 11% range. But the main impact of this revenue decline that we are looking at is on the basis of the lower freight rail revenue, which is currently contributing higher in terms of where the revenue mix is concerned. In terms of what we saw this quarter, now if you look at the freight volumes which were there, the wagon production that has continued to see an impact down about 21% in this quarter because of the availability of wheel sets which were there, an issue which the company has seen from the last 9 months or so, which has impacted the earnings in the previous quarters as well. But on the bull case scenario, now this is a positive that can be expected considering that the freight rail supply challenges are to recede by the second quarter and normalize from there onwards. So the company expects to make up for this loss in terms of the production volumes that we are looking at from the second quarter itself, which brings us to our second point as well in terms of the bull and the bear case scenario that we are looking at. If you look at the bear case scenario, execution has remained a concern, and this pertains to the Bangalore Metro that we are looking at along with the Vande Bharat prototype delays which had taken place. Now, do note that these were the initial kind of hiccups that we had looked at in terms of the Bangalore Metro. The expectation now being that these issues have also normalized. So in terms of that, it's a robust set of order inflows that we are looking at, and this is with inflows crossing the mark of 2,000 crore in this quarter itself, which has taken the order book to 26,000 crore. So strong order visibility going forward, which will also aid the revenue growth that we are looking at. So that's on the bull side that we are seeing. But coming to the third point in terms of how the performance has been, now if you just look at the passenger rail segment, now that is expected to gather momentum from FY27 onwards. Now this is on account of different scenarios that we are looking at. As described, we talked about the Vande Bharat train sets execution expected from the second quarter of FY27. So that is something that we should be watching out for. Other than that, propulsion system also is expected to gear up in terms of how the revenue growth is concerned. They are seeing higher growth coming in from that particular vertical. The company is also expanding its reach in terms of the backward integration, in terms of how the foundry business is concerned. From the third quarter only, we'll see peak levels coming from that segment as well, which is in the freight rail side that we are looking at. The company already has outlined its positioning in terms of the wheel business as well with the JVs it has formed, so stronger outlook from there. But concern remains from the investor side as well. Now, if you look at the various time frames, the stock has underperformed the market so far. It's down 28% on a year-to-date basis that we are looking at. Current multiple also has not seen a significant correction that we are looking at. 37 times is the multiple that we are seeing. So this is the overall picture that we are building for Titagarh Rail Systems in terms of bull and the bear case scenario.
All right, Dhanushi, thank you so much for giving us the bull and the bear perspective on Titagarh. And we're also joined by Aditya Agrawala, Head of Research and Investments at Invest4Edu. And we're also joined by Aditya Shah of Hercules Advisors. Both Adityas joining us on the show now. Aditya Shah, I take up the first question with you. If you've had the chance to look at the earnings for Titagarh, what's the reading there? I mean, the sense is that the commentary that is come in from the management is positive, and that's why the stock is seeing the uptick that we are seeing in the trade today. In terms of Titagarh, of course, one about the earnings and anything in the railway space that in particular that you're liking.
From my perspective, again, Titagarh Wagon over the period of last 3-4 years has seen a massive uptick. We've seen the stock at one point in time trade at about 100 or 200 rupees on the back of the massive investment that the government is making on railways. The stock shot up. Now the valuation multiples also got re-rated. After the re-rating, the stock was once trading at about 60 to 70 times multiple. That has come down to about 40 times multiple now. I don't think those two multiples are also leaving any margin of safety in these kind of companies. So I tend to be very careful. Over a period of next 3 to 4 years, I expect them to grow at about 10 to 15%. But the growth does not justify the valuations that are there. Within this space, again, I don't have a particular preference as such. Companies like IRFC or IRCTC, those kind of companies will do well, but again, the valuations there also are expensive. IRFC, for that matter, came from 200 and now down to 125. So from my perspective, I'd be really careful on the railway pack. The government is making massive infrastructure investment within the railway space. But a lot of these stocks have already priced in the next 2 to 3 years of growth. So if somebody is investing here, they will be ready for some time correction, post which these stocks will leave.
For a time correction, Aditya Shah, you say. So where within the infra space do you feel that valuations as well as growth prospects are well poised and well balanced?
So from my perspective, you look at some of the road builders, let's say, for example, in Ahluwalia Contracts. Those kind of companies are trading at about 15 to 20 times multiple. A contra bet could be someone like a PSP Projects, where they've been taken over by Adani and the valuation continues to remain extremely cheap. Those are some contra kind of bets. Again, within the infrastructure space, if you look at companies like L&T, they trade at about 20 to 25 times multiple, but investors should be really very careful. Those are peak kind of multiples that companies like L&T would trade at freely. So do not overpay in the infrastructure sector. Try to buy companies at about 15 to 20 times multiple. Those are the kind of multiples from which you could end up making money. If you end up paying 30 to 40 times multiple, in the shorter term, you could be in for some pain.
Enjoying this conversation. What about something like an NSDL? You had, and Aditya Agrawala, I'll just come to you, just give me a couple of minutes. But what about something like an NSDL, newly listed, stock ran up significantly. monopoly or a duopoly kind of a play? How should one look at that? And a little bit from a valuation standpoint, but also how do you view it?
So in one word, gambling is what is happening in NSDL. The valuations are not stretched; they are stretched. The valuations in NSDL now traded about 75 to 80 times multiple. There's no justification. If you look at CDSL's result, in fact, the profits de-grew for CDSL, and a similar trend would be seen where profit growth will not be more than 10 to 15% on both of these companies. The market is bidding up these stocks in some euphoria. So I would tend to avoid both of these companies per se. You cannot be investing at 60 to 75 times multiple and expect to make a decent kind of return in the near term. So from my perspective, IPO holders in NSDL can continue to hold the stock. But new investment in NSDL is perfectly not guaranteed. What has changed in the company since the IPO at about 800 or 840? Nothing, fundamentals have not changed particularly. Just that the market is bidding the stock up over the last 3-4 days, where continuous circuits were on the stock per se. So from my perspective, there's a lot of danger in both of these stocks, and I'm pretty sure that they are both poised for some time correction, maybe some sort of growth slowdown or a mode slowdown as well. If mode of IEX can go away, government can obviously tell NSDL or CDSL to lower down their DP costs, which could in turn be a problem for both of these companies. So risk regulation.
Okay.
Buy these stocks about 60 to 75%.
Interesting. That's a comprehensive view on NSDL. Ati Agrawala, your quick view on Sonata Software. The stock has been rising since the start of the day today. The volumes also 21 times its 30-day average. What is happening there? And after such an uptake, do you think if one wants to go ahead and enter, is there still momentum there?
Hi, afternoon, Mahima. Thanks for coming on the show. We had seen similar kind of an up move a few months back, rather in the month of April. If you notice, stock had witnessed similar kind of an up move backed by similar kind of a volume action as well. And that is what we are witnessing again in trade today. My sense is stock is still in a consolidation phase, though there is some kind of an accumulation going on for sure. If this kind of volume is taking place on the up move, and one needs to give it some time for really to see any kind of a big uptake in the stock. So if one is looking to accumulate the stock at current levels and not look for immediate gains, yes, it makes sense to latch onto the stock even after a 14.5% kind of an up move. If you're looking for from purely a trading perspective, I would give it still time and maybe look for opportunities on declines to buy close to about 360 on the downside with the stop loss at 340 and look for a target of 460 to about 480 on the upside. Overall, my sense is stock is trying to form a base and eventually should see higher levels closer to about 450, 460 in the medium to longer term time frame.
And at its day's high point as we speak. But Aditya Agrawala, your view on the indices today, the Nifty 50 as well as the Bank Nifty?
Consolidation, honestly, if you take a look at the markets, one day kind of an up move, then again a decline. Bank Nifty 2 shows a similar kind of an up move. 24,600, 24,700 continues to act as a major hurdle for the Nifty on the upside. And if we talk about the downside supports, between 24,400 about 24,200 is where the immediate supports lie. As of today, my sense is 24,500 about 24,400. These are crucial levels to watch out for and see how markets behave in the next 20-25 minutes of trading that is left. And if we get a close anywhere above 24,500, my sense is you could again see some bit of pullback in tomorrow's trading session to levels of 24,600, 24,800 again. I wouldn't like to take any trade on the Nifty today after this move, and would also like to avoid the Bank Nifty completely to take any trades either on the long or the short side.
And your top picks for the day?
So I've got a couple of recommendations on both on the buy side and both large cap ones. First is Maruti Suzuki. Looks very interesting. A fresh breakout on the stock from a downward sloping channel and is headed higher. So for a target of 13,500, I'll be a buyer in Maruti Suzuki with a stop loss at 12,500 on the downside. The second stock is from the cement pack, continues to show strength. Ultratech Cement, the cement giant, again has broken out from a narrow consolidation phase, can be bought at current levels for a target of 12,200 on the upside and place a stop loss somewhere around 12,250 on the downside.
Okay. All right. So that's with regards to where Sonata Software is concerned. But a lot of counters today, as we were mentioning earlier as well, are on the back of their earnings.
Yeah.
And there are a lot of counters otherwise also that one of the counters, that's Himadri Chemicals, which was there on heard on the street on Somit's list. That's seeing an up move of almost 5% on the back of the announcement that it is expected to have. Any view there, Aditya Agrawala, with regards to where charts are concerned for Himadri?
I would completely avoid. Rather, if anything, you look at this opportunity, this up move as an opportunity to exit from the stock. My sense is it's going to get fizzled out close to about 490, 500 odd levels. Once it tests those levels, stock could again see some kind of a selling pressure coming into it and can slide all the way down to sub 440, 430 odd levels. So I wouldn't be too much excited after this up move. Rather, look for opportunities to exit after this up move.
Agarwala, take on IT. Tech Mahindra is one of those gainers and has done very well in recent times.
Oh, yes, definitely. I think IT as a space can now be looked at. Select pockets within the large cap and the mid cap IT space should definitely looks interesting to me. And Tech Mahindra is one of them stock which looks interesting from the mid cap IT space. And I would give it some more time, not only look at it from a trading perspective. I'm looking at a target of 1700 to 1800 on the upside, which was its previous peak. On the downside, 1400 is a very good support area for the stock. So with the stop loss at 1400, I would go long on the stock and look for a target of at least 1700 to about 1800 on the upside. From the large cap space, TCS is something which is looking very interesting to me, offers an excellent risk to reward ratio as well at current levels. On the downside, 2900 is a good support area, and my sense is stock will slowly claw back to levels of 3400, 3500 on the upside. So these are two stocks which do look interesting to me. And yes, of course, Persistent Systems and Coforge, they too can be looked at in a gradually phased manner for accumulation phase.
15% returns. What's the timeline on this, Aditya Agarwala, before I take that to Aditya Shah as well?
On TCS?
Yes, on TCS, TechM, both of those, you have 15 to 20% upside on those.
Harsh, give them at least a couple of quarters and you will see those kind of returns on the stocks.
Couple of quarters. Aditya Shah, are you that positive?
So mid-cap IT, as I said, the valuations are still not cheap, they're expensive. But there should be a bottom made for the entire mid-cap and the large-cap IT space. Slowly and steadily, as the tariff war continues to escalate and at some point in time gets resolved, the firm bottom would have been made. So within the large-cap IT space, something like an HCL Tech and for that matter, TCS also look really very interesting. On the mid-cap IT space, something like a Tata Tech or a L&T Technology or NT Infotech Mindtree all look interesting, but they have to be accumulated in a very staggered way because, as I said, tariff war will continue and the valuations are still not cheap.
Not cheap valuations, tariff war to continue, those are some overhangs. But, the cabinet has approved 4 new semiconductor projects. Let's pull that one up. It's flashing at the bottom of your screen. So it's again something that you should look out for because these are opportunities coming through. 4 semiconductor projects in Odisha, Andhra Pradesh, Punjab, worth 4,600 crore. I'll come to that with regard to a question, but we have Vansh waiting by on 3 companies in terms of earnings and some of the reactions that we're getting. Vansh, take it away.
Yeah, so let me start off with the positive ones first. First would be on the list would be Alchem Labs. Now the strong set of numbers from the company, and there is a strong operational performance that is coming in. The EBITDA has been aided by the top line growth and margins, and the domestic business grew by 12% year-on-year basis, and the international sales were up by 9% on a year-on-year basis. If we talk about the numbers, the revenue was up 11% at 3,300 odd crores, and the EBITDA was up 21% at 739 odd crores, and the margin stood at 22% versus 20%. Net profit was up 22% at 664 odd crores. Second on the list is Granules India. Now again a strong set of numbers. The sales growth was largely driven by the North American segment, and the EBITDA has been impacted from the higher manpower cost. Now the higher manpower cost is on the account of the consolidation of Sen Chemicals by the company, and there has been decline in the PAT, and this is on the account of the exceptional items like litigation costs. If we talk about the numbers, the revenue was up 2%, EBITDA was down 5%, and the margin stood at 20% versus 22%, and net profit was down 16% at 113 odd crores. Third on the list is Marksans Pharma. Now clearly a very poor set of numbers from the company. There has been a weak operational performance, and the revenue growth has, however, the revenue growth has been supported by the new product launch in US, and the EBITDA and net profit were impacted by the ramp-up cost for the company. If we talk about the numbers, the revenue was up 5%, EBITDA was down 22% at 100 odd crores, and the margins stood at 16% versus 21% on a year-on-year basis. And net profit was down 34%. So clearly a weak set of numbers that the stock is getting hammered today.
Okay, all right. Thank you so much, Vansh, for bringing us those details. Aditya Shah, I'll come to you on Marksans Pharma. I mean, the stock is tanking, and how today? And this is, because of weak operational performance overall, EBITDA net profit overall impacted by ramping of overall costs as well. How are you, penciling this particular company against the pharma companies in the space? And if you had to, choose one or two companies in that space, what would that be?
So within the space, as I have said, I have been very bullish on the API space as well as the CDMO space. So companies operating in those space look particularly very interesting. Companies like, as I have been saying, something like a Syngene, a Piramal Pharma, or something like a Laurus has also done pretty well. So for that matter, or then you can look at something like a Krishna Diagnostics. So all those companies where they are not involved in the US, that's the real opportunity. Mind you, companies involved in the US also have done extremely well, such as Sun Pharma or Cipla as well has done extremely well. Cipla with its product launches will continue to expand its product portfolio. But from my perspective, as of now, there are too many problems within the US with respect to tariffs, and there's no clarity as to how this will move. CDMO and the CDMO API and the diagnostic business is something that I'm keenly watching out for within the pharma space.
Okay, all right. Aditya Agrawala, anything on PN Gadgil? It came out with its earnings. The number prima facie did not look very impressive to me, but the stock is flying in trade today, up almost 6% as we speak. Anything with regards to where charts are concerned? Any trade there?
There is a bit of an up move. I don't rule that out. All the way to levels of 620, 630 is what we can see on the stock. And after it crosses 630 is when the real move will start here, Mahima. So as of now, if you're already long on the stock, continue to hold on to positions for a target of 620, 630 on the upside. Place a stop loss somewhere on the downside about 550, 555. Once it crosses 630 odd levels, that is when I would initiate aggressive buying in the stock and look for a target of at least 720 to 750 on the upside.
Today we had the management of Lemon Tree, who came in and who told us that he's looking at a potential 35,000 rooms by FY30. He said this is roughly 10% or taking up 10% of India's market share in hotels, and the stock is available for 11,000 crore. Would you buy a 10% in Indian hotels 5-year forward at 11,000 crore today?
Who was that question for?
Aditya Shah.
Yeah. I can predict for FY28 that I'll be a billionaire and then laugh about it. I don't think that FY30 you should be projecting that far out. You should take 1 year at a time and then proceed from there. The hotels business is a very competitive business. It is on an uptick. And valuations have expanded. For example, Indian hotels trade at a very expensive multiple now. Indian hotels used to trade at about 100, and look where it is now. So from my perspective, hotels business, commodity business, you must buy them when nobody wants to buy them. Right now, everybody wants to buy the hotels business. So we'll be very careful. Right now, I want to move towards the safer bets within this space. Indian hotels continues to be the top pick here.
Okay, all right. So that's with regards to where Lemon Tree stands, and that's Aditya Shah's view. We've exclusively spoken to the MD and CEO of Federal Bank, Mr. KVS Manian, and Vishwanath himself went there and spoke to him, and he spoke about the bank and the targets that they have in terms of mass affluent segment and aims for double-digit deposit growth going forward. Listening to an overall excerpt of the entire conversation.
One of the beliefs I have is there are three parts to the deposit, right? Ka, Sa, and term deposit. I think it is a term deposit which is an investment product.
Yes.
Ka and Sa are transactional products. Yes. So yes, term deposit will face competition from other wealth products. I understand that. I do not agree that Ka and Sa are competition from wealth products because they are transactional. In fact, if a customer trades in the stock market, his Sa is better than a customer who does not, because transactions lead to Ka and Sa balances.
Better balances.
So I don't see a conflict with Sa, right? So term deposit, yes, but there my view is that as if India story has to play out in the next 10, 20, 30 years, then our $2,000 per capita hopefully has to go towards $10,000. So deposit will remain a product, and there is it is a early the person who first buys financial products.
Early introduction.
It's an early introductory product, right? So as people rise from this 2,000 to 10,000, I think there is a humongous opportunity.
Right.
And a small percentage of that 10,000, a smaller percentage of 10,000 will be bigger than a bigger percentage of the.
Okay, so plenty to unpack there, and I'll come to that in just a minute. But we are at 323. So Aditya Agarwala, top BTST picks.
A couple of them, Harsh. The first one is MCX. It looks very interesting after correction. Looks like it's on the way up for a target of 8,600 with the stop loss at 7,950. I'll recommend going long on MCX. And the second one is Varun Beverage. Again, a very interesting chart setup after a correction, good consolidation, and now a breakout and an up move, follow through up move. So Varun Beverage is also a buy for a target of 545 with a stop loss at 495 on the downside.
Interesting. Aditya Shah, do you like a Varun Beverages?
Not particularly at that kind of a valuation.
Okay, point taken. Federal Bank. Now, I'm not sure if you had a chance to listen into that conversation that Vishy was having with Mr. Manian, but all bets currently with regard to a Federal Bank is concerned, Aditya Shah, as you well know, is with regard to Mr. Manian turning it around in a significant fashion. Believe that's doable?
Yes. So Federal Bank is one of the smaller private sector banks which is doing pretty well. They are steady, they are small and consistent, and they are moving towards, they're very aggressive on the gold loan side of the book. So that is something that I like. A secured product is always, a combination of secured and unsecured product is always something interesting. And they do not go for aggressive growth as someone like an IDFC First Bank does. They go for slow and steady growth. So from my perspective, although the valuation is not cheap, over a perspective of 5 to 7 years, if they remain steady and consistent, I think both the business and the stock price will continue to do exceptionally well as the business expands and the NPAs are in control for the bank.
Aditya Agrawala, any view on Star Cement? Strong volumes coming in there, almost 17 times 30-day average. Stock also up almost 10% as we speak. Anything on the charts that you're observing there, and any support and resistance?
Yes, Mahima, yes. In fact, it's not only today. If you take a look at last couple of weeks, stock has been posting very strong moves once it had broken out of the consolidation of 240. My sense is it is going to go up from here on as well. It looks like it's testing levels of 330 to about 340 on the upside. Some very targets of 330, 340 for Star Cement. On the downside, immediate supports are 270. But if you've already missed the bus, my sense is wait it out for a minor dip in the stock close to about 280 and then look to go long on the stock again. A very strong chart setup on volumes. Likelihood of a continuation of an up move very much, but wait for some pullback to buy afresh in the stock.
Okay. Apollo Hospitals is expected to, post its earnings today post market hours. Here's something that you can expect. Revenue may rise around 13.4%. EBITDA may see an uptick of around 8.5%. Margins will see an upside of around 90 basis points, and net profit may rise around 19%. The key highlights could be EBITDA growth driven by better profitability in hospitals and, overall company. No bed addition is expected in Q1, but margins could see improvement led by operational leverage. Occupancy is expected to, the moderation in occupancy is expected to offset by improved overall average revenue per operating bed, and that metric, average revenue per operating bed, is expected to be at 8%. And lastly, in terms of addition in stores, that is expected to drive growth in digital health as well as the pharmacy business. So that's something to keep your eye out on, a big earning in the Nifty 50 post market hours today. So that's with regards to where Apollo hospitals stand. But with that, Aditya Agrawal and Aditya Shah, thank you so much for being here today and giving us all those insights and taking out the time. But Harsh, take it away. Markets are about to close.
Well, yes, thank you for that. Let's pull up the Nifty and let's see how the day has been. It's been a choppy sort of a day. Even though we've traded in a decently narrow band, we're closing in at probably the lower end of the day, maybe 100 odd points lower on the Nifty 50. We're below the 24,500 mark, so that's the crucial level as well that we look out for. And the Bank Nifty is what's dragging the Nifty lower, and that's what's really playing out. Let's pull up the intraday on the Nifty and we'll likely see exactly that at the day's low as we speak. And let's pull up the contributors on the Nifty as well. Likely candidates, HDFC, ICICI, there you go, around 70 odd points by the two of them. And then you have a Bajaj Finance also, which is dragging the index by another 15 odd points. So clear pressure from some of these pockets. Let's look at the heat map and try and get a sense on the breadth of the Nifty. So it's obviously weakened from the best part of the day, but nonetheless there is some bit of resilience seen, and that's within auto and IT, especially at Tech Mahindra continues to be 2% higher, unperturbed by everything that's happening in the rest of the market. There's also Maruti, Hero, M&M within the auto pack. Pharma also surprisingly doing well. A Cipla, a Sun Pharma doing decently okay in trade. HCL Tech is up around 0.5% thereabouts. The candidates at the bottom, of course, we've spoken about some of them, but some consumption names out there. Trent, HUL, Eternal, Nestle, Tata Consumer, outside of the financials. So those are some of the stocks which are dragging the index. Now let me talk a little bit also about sectors, and you'll likely see the same color play out on the sectors as well. Pharma doing well, not surprisingly. The Nifty Auto is up 0.5% and the Nifty IT also up nearly 0.5%. So those sectors continue to do decently well for the day. The defense index, at the first hint of pressure that we've seen in recent times, we've seen the defense index take a better part of that squeeze. So we're seeing that play out. But the Nifty Bank, and within the banking index, the private banking index is taking a bit of a knock. The Nifty Realty Index within the broader markets. The markets have closed. Let's look at the advanced decline, and that'll also give us a sense on how the broader markets have done. Even Steven, in fact, the tilt has shifted towards the declines versus the advances as we speak. And what we'll see is also on the Nifty mid cap and small cap, we will see that reaction come through near the day's low on the Nifty mid cap. The Nifty small cap also very, very similar in its texture in terms of chart, near off the day's low, except if I were to exclude that initial blip that we saw. So broadly, that's the trend, that's the theme playing out. The BSE 500 top gainers, top losers will give us a sense on some of the gainers and losers. Sonata Software still out there, the top gainer on a tough day. You're seeing Alchem Labs as well on the back of numbers. SJVN's numbers came in yesterday. That one too perked up. Samman Capital 4%. Some reports with regard to a top management rejig probably coming through. Astral is down 8.5%. Again on the back of numbers, disappointing. Praj, CSB Bank down 6, really no news there, but still down 6. RVNL is down 5.5, again on the back of numbers. So lots of those on earnings reactions coming through. Let's quickly also pull out what to watch out for in trade today. US CPI inflation data will come through. That'll give us a sense on where possibly policy is headed. But those adjustments with regard to dividends, and then we'll of course have the key earnings in focus. Interim dividend, again, those adjustments, and there are a couple of those stocks where anchor lock-in will expire, so you want to keep those on your list as well. This is earnings post market. A lot of these will come out, and Ashiana Housing within the real estate space, Jupiter Wagons too, fast growing. NSDL, first set of earnings after listing. Karnataka Bank, Awas Financiers, and you'll also have Balrampur, I believe, is out. So that number is already out. But Bharat Dynamics within the defense space. These are the earnings to focus in on tomorrow. And of course, within that, we will have Apollo hospitals as well to factor in. So plenty to look for, but completely out of time on India Market Close today. From Neeraj, Mahima, myself and everyone who puts this show together, thanks so much for watching. Stay with us. Market Express will take all of the action forward and give you a crisp half-hour analysis of everything that's gone on through the day.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
जय जवान मेरे साथ 15 अगस्त को सिर्फ एनडीटीवी पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, it was a choppy trade on Dalal Street today. The Nifty shut shop well below its intraday high at 24,500 levels. The 30-pack Sensex also lost over 300 points. Bank heavyweights such as HDFC and ICICI Bank dragged the frontline indices, while auto players like the M&M and Maruti uplifted the benchmarks. Most sectors ended the day in red. Finance, bank and defence lead the losses, while pharma, media and auto remained resilient. So the market breadth ended skewed in the favour of the declines. Hindustan Aeronautics reported a 4% YOY decline in the Q1 of FY26. Consolidated net profit to 1,383 crore rupees, which has missed the estimates of 1,400 crore rupees. Now, this is due to a 150 crore impairment loss and higher tax expenses. Revenue also rose 11%, which is in line with the 4,800 crore expectations. And this is driven by aircraft and helicopter deliveries. EBITDA surged 30%, with margins expanding 341 basis points. Now, this is beating the flat growth forecast. Key monitorables include Tejas Mk1A deliveries, GE engine supply updates, and repeat LCA Mk1A orders. Astral missed estimates in Q1. The numbers were dragged by volatility in the PVC prices. The revenue declined 1.6%, while the EBITDA declined 14%. The profit also declined 33%. Management told our channel that the margins are seasonally weaker in the first quarter. Time Technoplast reported a 20% year-on-year surge in the quarter one of FY26 consolidated net profit to 95 crore rupees. Now, this is beating the estimates of 90 crore rupees, and this was driven by strong polymer and composite product demand. Revenue also grew 10% to 1,353 crore rupees, which is in line with 1,350 crore rupees of expectations. EBITDA rose slightly 12% to 195 crore rupees, with margins slightly up at 14%. Polymer segment also grew 7%, value-added products 15%, and volumes rose 17% overseas and 12% in India. The composite products margins expanded to 15%. The board also approved a 1:1 bonus share issue and a 1,000 crore rupees of QIP. Ashoka Buildcon reported a 45% year-on-year surge in the quarter one of FY26, consolidated net profit to 217 crore rupees, beating the estimates of 200 crore rupees. This is despite a 23% revenue decline to 1,887 crore rupees, which has missed the 2,000 crore forecast. EBITDA remained flat at 599 crore rupees, with margins expanding sharply to 32% from 24%. Now, this is driven by actually better cost management, and also 17% drop was seen in the construction expenses and 60% lower depreciation. The order book stood at 15,886 crore rupees, with road EPC at 49%. Bought toll collection also rose 13% to 362 crore rupees. Novelis Hindalco's US-based subsidiary reported a challenging quarter one of FY26, with consolidated net profit dropping 67% quarter-on-quarter to $96 million. Now, this has missed the estimates of $120 million, and this is actually due to the soaring scrap costs and US tariff impact. So, revenue has risen 3%, driven by a 1% increase in the rolled product shipments to 963 kilotons. Adjusted EBITDA has also fallen 30%, with margins contracting to 7% from 11%. Strong beverage packaging demand was offset by weak automotive and specialty shipments. Management expects a $60 million quarterly tariff hit, but anticipates a recovery by quarter four of FY26. Hindalco Industries reported an inline quarter one of FY26, with consolidated net profit down 24% quarter-on-quarter to 4,004 crore rupees. Now, this is missing the 4,250 crore of estimate. This is due to higher raw material cost and 330 crore of exceptional loss, which has been incurred by the company. Now, revenue has dipped 1% quarter-on-quarter, beating the 63,500 crore of forecast, driven by strong aluminium upstream performance. EBITDA has fallen 10% to 7,906 crore rupees, with margins contracting to 12%, which is impacted by a 14% year-on-year rise in the raw material cost. Now, Novelis has faced tariff and scrap cost pressures. Alchem Laboratories stock jumped 6% today after a stellar quarter one of FY26, with revenue up 11.2% to 3,371 crore rupees. This is fueled by 12% domestic and 8.9% of international sales growth. So net profit has risen 1.8%, which is nearly 22%, to 664 crore rupees, and EBITDA has surged 21.4% to 739 crore rupees. Now, lifting the margins to 22% from 20.1% on a strong operational performance. Venus Pipes and Tubes reported a mixed quarter one of FY26, with revenue up 15.1% to 276 crore rupees. Now, this is driven by strong sales volumes. However, net profit has fallen 10.2% to 24.7 crore rupees, and EBITDA has dropped 6.7% to 44.7 crore rupees, with margins shrinking to 16.2% from 20%. So, this is due to higher raw material costs. Bombay Burma Trading Corporation reported an 8.3% rise in quarter one of FY26 net profit to 241 crore rupees, with revenue climbing 8.7% to 4,712 crore rupees. Revenue growth was also driven by strong performance in its tea and auto component segments. However, EBITDA has dipped 1.6% to 724 crore rupees, which is squeezing the margins, to 15.4% from 17%. Now, this is due to the higher input costs. Praj Industries reported a tough Q1 of FY26, with revenue down 8.4% to 640 crore rupees and net profit also crashing 94% to 5.3 crore rupees. Now, this is driven by a 24% drop in the bioenergy revenue and delayed ethanol project executions. Now, despite a 10% year-on-year order book growth to 4,448 crore rupees, high labor costs and customer liquidity issues have squeezed the margins to 5.5%. Man Industries reported a mixed Q1 of FY26 with revenue slipping 0.9% to 742 crore rupees due to export delays from the Iran-Israel conflict, but net profit has soared 45% to 27.6 crore rupees. Now, this is driven by a 30% EBITDA jump and margin expansion to 6.6%. Now, with a robust 3,200 crore rupee of order book and lower cost boosting the efficiency, the company has reaffirmed its 20% growth guidance for FY26. Dollar Industries has also reported a robust Q1 of FY26 with revenue up 19.6% to 399 crore rupees. This is fueled by an 18.7% of volume growth and a stellar 65.2% revenue surge in the e-commerce and the quick commerce channels. So while margins have held steady at 10.5%, net profit jumped 39.3% to 21.3 crore rupees. This is reflecting strong demand and digital channel success. Travel Food Services reported an 8.5% of revenue drop to 375 crore rupees in Q1 of FY26, but net profit has soared 66% to 91.7 crore rupees. Now, this is driven by a margin expansion to 39% from 24.9%. Operational efficiencies, lower operating and finance cost, and 4.5% higher passenger traffic at managed airports alongside 70 new outlets in the development has boosted its profitability. P.N. Gadgil Jewellers delivered a sparkling Q1 of FY26 with revenue up 2.8% to 1,715 crore rupees and net profit also nearly doubling, soaring 96.3% to 69.3 crore rupees. EBITDA has jumped 71.3% to 110 crore rupees, boosting the margins to 6.4% from 3.8%. Now, this is driven by robust retail and festive demand. Lemon Tree Hotels reported a robust Q1 of FY26 with revenue up 17.8% to 316 crore rupees and net profit also soaring 93.5% to 38.3 crore rupees. Now, this is also driven by strong occupancies and higher average room rates, especially at its Aureka brand. Now, despite the renovation and the tech expenses pressuring the EBITDA margins, they have improved to 44.5% from 42.9%. Now, with Aureka Mumbai hitting the stable occupancy levels. MRF Limited reported a mixed Q1 of FY26 with revenue up 6.8% to 7,560 crore rupees. Now, this is driven by strong domestic demand. However, the net profit has fallen 13.9%, which is nearly 14% to 484 crore rupees, and EBITDA has also dropped 9.1% to 1,034 crore rupees, with margins shrinking to 13.7% from 16.1%. Now, this is actually due to higher raw material costs. Stallion India Fluorochemicals signed an MOU with Rajasthan to build a 120 crore rupees of R32 refrigerant gas plant in Bhilwara, also producing R410A and other advanced gases, with production set for 2026. So the land acquisition has begun, supported by RECO for approvals. Now, Q1 of FY26 saw a 51% revenue surge to 110 crore rupees and a 23% net profit rise to 10.4 crore rupees. This despite of margin pressure being faced from the border conflicts and also early monsoons. So the company forecast a 30 to 35% of revenue CAGR and a 3 to 4% of profit margin growth through the premium offerings. Balrampur Chini has reported a weak set of numbers in the first quarter. The profit was down over 26%, while the EBITDA also declined more than 19%. Margins are also contracted on a year-on-year basis. MRF Limited has reported mixed results, in the Q1 of FY26 with revenue up 6.8% to 7,560 crore rupees. Now, this is driven by domestic demand. However, the net profit has fallen 13.9%, which is nearly 14% to 484 crore rupees, and EBITDA has dropped 9.1% to 1,034 crore rupees, with margins actually shrinking to 13.7% from 6.1% due to higher raw material costs. President Donald Trump said that gold will not face tariffs, knocking down a ruling by the US customs officials that bars off the precious metal imported from Switzerland would actually face the duties. So the spread between futures and spot gold narrows to $50 from $100. Now, federal ruling last week had dictated that 1 kg and 100 ounce of gold bars will be subject to duties. US consumer prices likely increased moderately in July, though rising costs for goods like household furniture and apparel because of import tariffs probably resulted in a measure of underlying inflation posting its largest gain in 6 months. So the Consumer Price Index report from the Labor Department's Bureau of Labor Statistics will be published amid the mounting concerns over the quality of inflation unemployment reports following the budget and staffing cuts. Ford is recalling more than 103,000 F-150 pickup trucks in the US over axle bolts that may break and result in the vehicle rollways or a loss of drive power, the US National Highway Traffic Safety Administration said. Now, a broken axle bolt can actually damage axle hubs, splines, components that actually transfer power from the axle to the wheels and help them rotate. In a major development, the Supreme Court ordered that all stray dogs in Delhi NCR, must be shifted away from the residential localities to the shelters. Now, the SC has directed that the government of Delhi, civic bodies and authorities of Noida, Gurgaon and Ghaziabad to shift the stray dogs to dedicated shelters within 8 weeks. The Supreme Court is hearing a batch of petitions challenging the Election Commission of India's order to conduct a special intensive revision, that is the SIR, of electoral rolls in the poll-bound Bihar. Now, in the previous hearing, a bench of Justices Suryakant and Joymala Bagchi cautioned the poll body that the court would not hesitate to act if the revised list reflected mass exclusions. The petitioners have criticized the SIR process as a form of citizenship screening. Lok Sabha Speaker Om Birla announced a 3-member panel to probe allegations against High Court Judge Justice Yashwant Verma, at whose residence a large sum of burned and partially burned cash was found after firefighters fought a blaze in March this year. A speech by Tamil lyricist and poet Veramuthu on Lord Ram at a literary program has sparked political controversy. Now, with the Bharatiya Janata Party accusing him of hurting Hindu sentiments, speaking at an event where he received an award named after medieval Tamil poet Kambar, who authored the Tamil version of the epic Ramayana, Veramuthu said that Lord Ram lost his mind after separating from his wife, goddess Sita. Gujarat experienced widespread rainfall with 50 talukas reporting precipitation as clouds moved steadily towards the central and northern parts of the state. According to data from the State Emergency Operations Center in Gandhinagar, the heaviest rainfall in the past 24 hours was recorded in Sinor, Vadodara. US President Donald Trump extended a trade truce with China, stabilizing economic ties between the two superpowers for another 90 days. Now, Trump has signed an executive order just hours before tariffs on Beijing were set to jump back to sky-high levels. Now, during the trade talks last month, negotiators failed to resolve broader sticking points on the issues like rare earths and technology export controls. US President Donald Trump said that he was deploying 800 National Guard troops to Washington, D.C. and temporarily taking over the city's police department, an extraordinary assertion of presidential power in the nation's capital. Now, Trump's move, which bypassed the city's elected leaders, was emblematic of his second-term approach, which has seen him wield executive authority in ways with little precedent in the modern US history and in defiance of the political norms. Firefighters battled multiple wildfires across Turkey, with a large blaze in the northwestern province of Çanakkale burning for a second day after hundreds of residents were evacuated in precaution. Now, both Çanakkale Airport and the Dardanelles Strait, which connects the Aegean Sea to the Sea of Marmara, were temporarily shut due to the wildfires. The Philippines released a dramatic footage of a Chinese warship colliding with a vessel from its own Coast Guard while chasing a Philippine patrol boat in the South China Sea. According to the authorities, the incident occurred near the contested Scarborough Shoal as the Philippine Coast Guard escorted boats distributing aid to fishermen in the area. Now, more than 60% of global maritime trade passes through the disputed waterway. Brazilian President Luiz Inácio Lula da Silva and Chinese President Xi Jinping have discussed the role of the BRICS group of states and bilateral business over phone call, according to Lula's office on Chinese state media. Now, the leaders have spoken for an hour on Monday. Now, they've agreed on the role of the G20 and BRICS in defending multilateralism, and Brazil's presidency said in a statement. La Liga is set to make history as the Spanish Football Federation greenlit Villarreal's home match against Barcelona at Miami's Hard Rock Stadium, home of Inter Miami. So the move, part of La Liga's push to expand its global brand, awaits UEFA and FIFA approval. Now, previous attempts to stage US matches failed due to opposition from the players, fans and clubs. Now, the decision aligns with the 2026 FIFA World Cup in the US, aiming to grow soccer's American fan base. Japan's boxing authorities are enforcing stricter safety measures after the tragic deaths of super featherweight Shigetoshi Kotari and lightweight Hiromasa Urakawa, who suffered brain hemorrhages post-bouts at Tokyo's Korakuen Hall. Now, the Japan Boxing Commission convened an emergency meeting proposing 10-round title fights instead of 12, mandatory hydration tests, and pre-fight and weigh-ins to prevent this extreme weight cutting. Now, the boxing community, reeling from the losses, is pushing for urgent reforms to protect the fighters, with calls for enhanced medical protocols and monitoring. Paris Saint-Germain is making waves in the transfer market, securing 2 blockbuster signings. The League One champions have welcomed French goalkeeper Lucas Chevalier from Lille for £40 million and Bournemouth's star defender Ilya Zabarnil in a £63 million deal. Now, both the players have signed 5-year contracts, signaling PSG's intent to dominate both domestically and in Europe. Soccer superstar Cristiano Ronaldo is officially engaged to longtime partner Georgina Rodriguez. The couple, together since 2016, shared the news on Instagram, with Rodriguez flaunting a massive diamond ring. After 8 years and 5 children, the Al Nassr star and his fiancée are set to tie the knot. The Duke and Duchess of Sussex have extended their Netflix partnership with a multi-year first-look deal for Arkwell Productions, giving Netflix priority on their film and TV proposals, unlike their $100 million 2020 deal. Now, this arrangement is less restrictive but quashes the rumors of a split. So Meghan emphasized creating globally resonant content. With Love, Meghan's second season, a lifestyle series, arrives soon alongside a Christmas special. Despite the first season's modest 5.3 million views, Netflix praises the Sussex's storytelling, citing Harry and Meghan's 23.4 million views. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान जय हिंद जय हिंद।
हेलो बोलिए मैडम डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको हम और आप तो जन्म भी नहीं हुआ था हमारा
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ कौन सा गलत काम कर रहा हूँ मैं
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Power.
The markets end lower after seesaw trade. Nifty closes below 24,500, while the Sensex finishes over 300 points lower. All sectoral indices end mixed. The mid and small cap indices underperform the benchmarks. India ramps up the semiconductor manufacturing amid global trade tensions. The cabinet approves 4 semiconductor projects in Odisha, Punjab and Andhra Pradesh with an investment of over 4,500 crore rupees, adding to the 6 existing projects under Semicon India. Direct tax revenue from the 1st of April to the 11th of August slips with net collections falling by 4% compared to last year, representing 26% of the FY26 budget estimates. In an attempt to cushion the hit from US tariff, India plans to expand export market target to 50 countries from the current 20. Sources say Commerce Ministry is targeting regions such as Middle East and Africa that account for 90% of India's exports. The Adani family tops Hurun India's most valuable family businesses list for the second year in a row with a combined valuation of 14 lakh crore rupees from Adani Enterprises, Adani Ports and other group companies. The opposition criticizes the Supreme Court's order on stray dogs in Delhi. Congress MP Rahul Gandhi says it's a step back from decades of humane science-backed policy, while TMC Saket Gokhale calls it cruel and inhumane. Lok Sabha Speaker announces a 3-member panel to probe allegations against High Court Judge Justice Yashwant Verma, also accepting an impeachment motion signed by 146 MPs. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to take you through the latest in markets as well as national and international news. So let's take a look at how the markets fared today. We saw benchmark indices surrender their gains after an optimistic start to the day. The Sensex declined over 400 points. Similarly, we saw the Nifty shed 97 points to close below the 24,500 mark. The day's trade was a mixed bag for sectors. Pharma and the media sectors closing in the green, while the realty index was a drag. For more details on this, let me go over to my colleague Harsh Saita as he joins us with a wrap of the day's market action. Harsh, over to you.
So while it was a Monday of a recovery, Tuesday has seen a bit of a reversal actually. So 0.5% odd lower on the Nifty, and that was largely driven by the financials. The Nifty Bank was down around 0.8%. The private banking index was what drove some of the losses there. And it was essentially ICICI HDFC which contributed 70 negative points to the Nifty 50. And if I throw in a Bajaj Finance there, that's 85 negative points on the Nifty just from those three names. So that was what actually dragged the Nifty a bit today. But what actually has done well, therefore, IT has done decently well on a day like this. We've also seen good traction from pharma, and therefore some of those names have done well. Tech Mahindra was the top gainer, 2% higher. Even among pharma, Sun, Cipla did decently well for themselves. And within the losers, it was also the consumption basket which took a bit of a knock. Tata Consumer and the like, all of those, including an Eternal, which is Zomato, traded slightly low and were some of the top losers of the day. Now, outside of that pack, we also saw broader markets reverse quite sharply towards the fag end of the day. The breadth of the market will show that, will signal that, because for a large part of the day, the breadth was positive, but we turned negative at the fag end, and that is indicative of the way broader markets also played out. We saw sharp falls on both the Nifty mid cap and small cap, and even though they were resilient in comparison to the large cap index, but that outperformance was largely visible all through the day of trade, so it wasn't at the fag end only. But broadly, that's how it played out. Some of the key losers within the broader market indices were the likes of the Nifty India Defence Index, which has been under pressure every time the index falls. We've seen the Defence Index underperform sharply, and we've also seen some bit of that from the realty index, and both of those also were some of the culprits within broader markets. The BSE 500 top gainers, top losers list will largely reflect stocks which have moved on the back of earnings, and we've seen some of those. Sonata Software was up 12%, the top gainer on the BSE 500, and some of the losers as well dominated by earnings. So that's broadly been the theme within the broader markets as well.
Right, thanks so much for that, Harsh. Meanwhile, 10 to 12% earnings growth is a possibility for FY26, but there is a good chance that most corporations will face more downside during the current earnings season. This is the word coming in from Manishi Ray Chaudhary, CEO of Emma Capital Partners. Listen to what he had to say on the earning estimates.
My estimate would be around 10 to 12%, possibly in the maybe spilling over into the low teens at this point for fiscal 26 and fiscal 27. But remember, I mean, just this estimate for both fiscal 26 and 2027, even 4 or 5 months back, was about 17%. So from around 16 to 17%, it's already come down to about 11 to 12%. It looks like there could be even more downside going by the commentary that we're hearing from most of the corporates during the earnings season.
Right, now let me quickly cut across to my colleague Pallavi, who's going to be bringing us some crucial information around CPI inflation. We understand, Pallavi, it has dipped further in July to 1.55% from 2.1% in June. But give us a detailed analysis on what this essentially means.
Right, Sanjana. So we are looking at yet another positive print for CPI inflation. Like you mentioned, it's dipped to 1.55%. Now, this is the lowest in almost about 8 years or so. And the decline continues to be led by food prices. Let's have a quick look at some of the components. So the consumer food price index has contracted this month as well. It's come in at minus 1.76%. Within that segment, we're looking at vegetable disinflation at 20.69%. Pulses, which is another important category, has seen disinflation at 13.76%, whereas most other components, cereals are at 3% inflation, milk and milk products at 2.74%. Oils and fats is something we might be watching out for going forward as well, because that's at 19.24%. So that is among the higher categories there. But all in all, that is a good set of numbers. And even looking at the RBI commentary, inflation is expected to continue to remain low for the next few months, possibly up until the fourth quarter of the ongoing fiscal year, which is when we're expected to see some uptick there. But for more information on what she's making of these figures, I'm also joined by Yuvika Singhal, economist at Quant Eco Research. Yuvika, hi. Thank you so much for taking time out to speak to us.
Pleasure, Pallavi.
So, first up, the inflation reading for today is not entirely on unexpected lines, right? It is broadly close to economist estimates. What are you making of these figures?
I think it's good news. So another month of lower than expected, or in line with expectations CPI. Though we were expecting the number to be slightly lower, but I think 1.55 also gives a lot of comfort. This could be close to a record low. Probably we have seen one more time inflation in this on this series of CPI inflation dip below 1.5. But this is probably the second lowest print that we have seen on this CPI series. So it's all good news. And in large part, as we all know, this has been driven by the comfort on food that has been in place since the winter months, right from the months of November, December. And we have to see it in conjunction with a plethora of positives that have taken shape, which have allowed inflation, especially driven by food inflation, to dip to such levels. So it was the Kharif output, which was good last year, followed by a bumper Rabi crop this year, followed by a timely onset of southwest monsoon, which has progressed fairly well in the season. So I think the food inflation story continues to offer a lot of comfort to us as analysts for the entire trajectory of the year, like you pointed out, and also to RBI.
Right. So, Yuvika, given that this trajectory is expected to continue going forward, what are you looking at in terms of next month's print? And the reason I'm asking is, like you mentioned, this is already the second lowest we're seeing in the current series. Can we expect further deacceleration here onwards, or do you think we can now expect inflation to remain low but similar to today's figures?
So possibly, I think, Pallavi, this will be the trough of the inflation that we are seeing. So this is probably as best as it gets. Here on, we have already seen price pressures build in. So if you look at the reading for the month of July as well, the sequential momentum in food is positive and fairly pretty much in line with seasonality, I could say. So a large part of this benign reading that we are seeing is also driven by a very favorable base from last year. So going forward, this favorable base is going to wane, and as sequentially price pressures move up, we are likely to see readings inching higher than where we are at this point in time in July. So I do not see inflation running up, so that no alarming readings. Probably we are likely to see readings sub 3% up till the end of the calendar year, and probably move up closer to in the range of 4 to 4.5% by the time we end the fiscal year. That is the very fag end, the last quarter of the fiscal year. So in terms of trajectory, I think there's still more comfort that can be drawn, at least over the course of the next 5-6 months. And for the full year, we are looking at inflation averaging at 3%. And mind you, this will be the lowest level of annual inflation that India has seen probably on history. So it's a number that needs rejoicing. Like I said, a lot of factors have come together to enable inflation, headline inflation driven by food, to come this low this year.
All right. I do want to ask you, given that, inflation is clearly one front where we continue to draw comfort, given that this is a time of immense economic uncertainty, given what's happening on the tariff front, what are you making of other high frequency indicators, and what is the sort of, I know at this point it's, a lot just depends on how the situation evolves going forward, but at the moment, what is the macro picture looking like?
So I would say the macro picture does, from a domestic perspective, still show decent degree of resilience. While we did see, when we started the fiscal year, the months of April and May, we did notice some nascent signs of stabilization coming in as far as urban consumption is concerned, though that has turned somewhat mixed in the month of June and July. So we have yet again seen certain high frequency indicators, whether it's credit growth or within which personal loans category or passenger vehicle sales, which have seen some tentative degree of weakness creep in. But having said, I think broadly domestic pillars of strength remain in place, emerging from the rural economy, which is yet again being backed by an above normal monsoon this year. We have support from the government offering comfort to the rural side of the economy. Remember, we are likely to see a whole host of income transfers which were promised last year coming into play this year. In addition to this, we have also seen the government capex start the year at an extremely brisk pace. Remember, last year, almost through the first half of the fiscal year and even longer, if I remember, up till October, November, the government spending wasn't there because of different reasons. This year, the government has been fairly gung-ho about its capex spend. So from a domestic perspective, I would still find pockets of strength coming in from rural consumption, government capex spending, urban consumption, not so much, but then again, the scenario is such that urban consumption could look better as we head into the festive season on the back of the 100 basis points cut in the interest rates from the RBI that we have already seen, which will get transmitted in due course. So from a domestic perspective, I think we are fairly okay. As far as the global economy is concerned, yes, there is too much of uncertainty at this point in time. And the initial news bites and especially the trade and the tariff related announcements that have come in do not augur well for India's perspective. Having said so, we will still wait for the dust to settle. We know that tariff negotiations are still ongoing. They are still very much on the table. The penalty is yet to kick in. We have just seen one round of tariffs at 25%. The penalty of 25 is still being waited out for to be implemented later. And we have time in hand to see where eventually the situation settles. And that to us will help us going back to the drawing board and say that, okay, this is the impact that the global uncertainty or the tariff will have an impact in terms of whether it's our current account, whether it's growth or some bit of impact coming in on inflation. So we'll have to wait and see eventually how the global situation pans out. But like I said, the domestic economy offers comfort, and that augurs well for us.
Okay, I do have one last quick question before we can let you go, Yuvika. So, given that we are stepping on to the festive season, do you think that this festive season is expected to be better for the domestic economy compared to an year ago? And added to that, how much of an additional comfort will the income tax concessions announced in the budget offer this time round? We're yet to see any discernible impact by the looks of it. You did touch upon it when you were talking about the broader economy, but is that impact going to be more discernible going into the festive season?
I would hope so, Pallavi, largely because at the beginning of the year when the income tax reduction announcements came in, we were pretty sure that they would have a kick-in impact on urban consumption, where a windfall gain such as a reduction in income tax tends to push households to consume more, and more of discretionary spending is what is typically, when we go back in history and see similar kind of windfall gains, how do they tend to pan out? It's largely discretionary consumption which gets a kick. So we were somewhere more, positive on this. Like you said, we have not seen a discernible turnaround in urban consumption. But like I said, there are plethora of factors that could provide this comfort coming in. The low food inflation and the low headline inflation. We have seen RBI affect 100 basis points of reduction in rates, which will eventually see greater transmission. The CRR cut is also likely to come in September onwards, so there should be ample liquidity in the system. And I think all these factors put together will probably augur well for the festive season, giving the much needed push to consumption from the urban side. And remember, we'll also be at the end of a good monsoon season, which should continue to support rural consumption as well. So as a bag, I would say both urban and rural could look somewhat better, maybe a couple of months later. And also remember, the festive season kicks in much more early this time around. So, we have Ganesh Chaturthi kicking in towards the end of August, which would mark the onset of the festive season, probably a couple of weeks earlier this year. So we'll have to bear in mind that all the inventory buildup and the production buildup is likely to happen now in the months of July, August, early September, for it to actually have or to be able to cater to the consumption pickup that is likely to happen September, October.
Right. All right, Yuvika, thank you so much for taking time out to speak to us. Always a pleasure speaking to you.
My pleasure. Thank you, Pallavi.
So, Sanjana, yet another good set of figures on the inflation front. On the headline, we're looking at a print of 1.55%, and that is the lowest after June 2017. On food inflation, it's the lowest print after January 2019. And, like Yuvika was saying, while this may be the trough, we still are expected to continue to draw comfort on the inflation front for the next few months.
Absolutely. And also, I think a very reassuring statement coming in from her regarding even the uncertainty around tariffs as well. So that's comforting to listen to. And thanks so much, Pallavi, for that very comprehensive update. Let's move on, because in a move to boost profitability, the Managing Director and CEO of BSE, Sundararaman Ramamurthy, has highlighted the exchange's focus on a diversified product mix. According to the CEO, the exchange is operating with an 80% margin, and he says that diversification is key to sustain growth in a dynamic market. Let's listen in.
World over, if you look at it, exchanges are fixed cost game. So you incur a stringently large amount of fixed cost. And once your top line starts growing beyond threshold, its trace goes into the bottom line and stays there. India is no exception. In fact, in India, we have exchange which has 80% plus margin. So it depends on the product mix and how you take care of that. For us, what we are striving hard is not looking at protecting the margin, but in having a proper product mix. It should be well diversified. It should not be significant portion coming from a single area of our operation. We should have good amount of cash equity business, good mutual fund, good enhanced data dissemination, good amount of index business, good amount of money coming from our data centers. That's the way we would like to diversify it, and that's what we are working upon.
Now, meanwhile, Indian hotels are in focus after the company's recent acquisitions. Earlier today, we spoke with Puneet Chatwal, MD and CEO at IHCL, about the rationale behind the majority stake in Anchortels and Pride Hospitality. Let's listen in.
The rationale is in line with what we have been guiding under Accelerate 2030 of the growth coming mainly from our mid-market segment with Ginger and an upscale with gateway brands. Keeping Taj as pure as possible, keeping Taj as the crown jewel, yet stimulating the progress, addressing India's mid-market needs, and also making Ginger the strongest mid-market brand in the next 12 to 18 months with 250 plus hotels.
And speaking exclusively to NDTV Profit's Vishwanath Nair, KVS Manian, MD and CEO of Federal Bank, says the bank is targeting the mass affluent segment and aims for double-digit deposit growth. Let's listen in to an excerpt from that conversation.
One of the beliefs I have is there are three parts to the deposit, right? Ka, Sa, and term deposit. I think it is a term deposit which is an investment product.
Yes.
Ka and Sa are transactional products. Yes. So, yes, term deposit will face competition from other wealth products. I understand that. I do not agree that Ka and Sa are competition from wealth products because they are transactional. In fact, if a customer trades in the stock market, his Sa is better than a customer who does not, because transactions lead to Ka and Sa balances.
Better balances.
So I don't see a conflict with CASA, right? So term deposit, yes, but there my view is that as India, if India story has to play out in the next 10, 20, 30 years, then our $2,000 per capita hopefully has to go towards $10,000. So deposit will remain a product, and there is it is a early the person who first buys financial products.
Early introduction.
It's an early introductory product, right? So as people rise from this 2,000 to 10,000, I think there is a humongous opportunity.
Right.
And a small percentage of that 10,000, a smaller percentage of 10,000 will be bigger than a bigger percentage of the 2,000.
Sure.
Right? So I do believe that deposit will grow, may not grow at rates that are 15 and 20 or mid-teens and all that. But I think early double digits, it will continue to grow. So we have to remain there. And we as a small share of the market, I think we have to find our strategies to continue to grow, rest market share. On Ka and Sa, I do believe that, of course, there the pressure is coming out of efficiency of the system, right? System is getting more efficient, payment systems are better, and that's what leads to lower CASA, right? Pressure on CASA, not the investment product.
Got it.
So there, I think, like I said, for example, for us, if we focus on wealth and wealth products, which I said is a means to get fee, it also enhances our SA. Right, so I don't see a conflict with these, and we have to continue to do. So, for example, our corporate CA is quite low, and we have an upside opportunity because we just launched our cash management system last month. Right, new cash management system was launched last month. So we have to create products. Cash management, online trade, and things like that, which we will create to get a car. Coming to your minimum balance question, see, I think every bank to their own on the strategy of what they want to achieve. And all I would say is at our stage of growth and where we want to see, I think we have to play the mass affluent category, and we have said mass affluent is our focus area, and we will do products which continue to sell for mass affluent.
Even your wealth products.
Even our wealth product will be focused. Even our wealth strategy is not going to be private bank based strategy initially. We want to be focused on the mass affluent segment, and that's what our focus will be. And so we will continue to do products which are suitable for that.
Now, the Union Cabinet has approved 4 new semiconductor projects with an investment of over 4,500 crore rupees. Union Minister Ashwini Vaishnav has said that these 4 are in addition to the existing 6 projects under Semicon India. The previously approved projects have a capacity of producing 24 billion chips annually. So let's take a quick look at what the Union Minister had to say.
4 नए सेमीकंडक्टर प्रोजेक्ट्स, आप सब जानते हैं 6 प्रोजेक्ट्स ऑलरेडी अप्रूव्ड हैं, उसमें 4 और नए सेमीकंडक्टर प्रोजेक्ट्स आज जुड़े हैं उड़ीसा में, पंजाब में और आंध्र प्रदेश में। 4,594 4,594 करोड़ रुपीस के इन्वेस्टमेंट से।
Moving on, India's direct tax collections have so far seen a slowdown in the current financial year. Net collections are down 4% year-on-year, driven mainly by a dip in individual income tax receipts. My colleague Shrimi now joining us with more on this.
That's right, the India's direct tax collection have registered a decline in the first 8 months of the ongoing fiscal year, largely due to a fall in the individual, that is non-corporate tax receipts. The CBDT latest data showing that the gross direct tax collection between April 1st and August 11th stood at 7.99 lakh crore, which is down 1.9%, and net tax collection after adjusting refund is down by 4% to 6.64 lakh crore. Now, refunds, however, showing a significant increase to around 10% to 1.3 lakh crore, while if you go deeper in the numbers, the net corporate tax collection showing a marginal increase to 2.29 lakh crore versus 2.22 lakh crore a year ago. However, there is a clear dip in the individual tax collection. Up to August 11th, it's showing 4.12 lakh crore compared to 4.45 lakh crore during the same period last year. Now, as of August 11, direct tax mop-up account for 26.3% of the total budget estimates of FY26. STT is also one interesting number, recorded though a modest uptick at 22,362 crore, which is slightly up from what it was a year ago, which is 21.599 crore. Now, experts attributing the slowdown to the higher refunds. However, even gross collection receipts, that is just before adjusting refunds, also showing clear strain in the direct tax kitty.
Shrimi, thanks so much for that update. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है, आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है, आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Mahima Vajrajani, and no bets, frankly. It's going to be an FMCG consumption space that we're going to talk about. Yes. But you know what you want to know is whether alcohol and the beverage industry is going to see a strong tailwind. Premiumization is the middle word of that theme which is playing out, and which will likely mean that margins will likely have an upside surprise. I can't say will have an upside surprise, and will likely have an upside surprise, and therefore will be interesting to understand what Som Distilleries makes of all of this that's playing out, because the balance sheet doesn't look under pressure at all. There's a very, very strong tailwind in terms of growth, and one of those geographies that they are really targeting and going to target strongly is going to be UP. And what impact does UP have on their top line is what I'd want to first understand. And I'm sure that they're not going to give me a real answer to this question. So what I'm going to also do is going to ask them, and I hope they're not listening, but I'm going to ask them what mix is UP going to command, because they've given an FY27 guidance of 2,000 crore in terms of sales. So what is that mix which UP is going to command? Because they have select states, Mahima, in which they have very, very strong presence, and then thereafter they don't have much presence elsewhere. Okay. Globally also no real presence, and therefore that also is a risk that one needs to be mindful of when they are investing in something like a Som. So that's a risk, but this huge foray and the fact that there's a large tailwind in this space is obviously the big benefit. They're doing 600 crore of capex, and 350 crore of that is expected by end of FY26. So what is going to be the debt component? They've currently iterated and reiterated no debt, no fresh equity. But of course we will ask them one more time. We'll quiz them on that, because it's a large capex which they are undertaking. For a sub 3,000 crore company, that's certainly large. Now, new launches, and that's what they're focusing on. And contribution of premium. Currently, premium doesn't have a very large contribution. It's maybe sub 10%, if I recall right.
Correct. That's probably one of the reasons as to why foraying into UP will be beneficial from them, because there's more concentration of tier 2, tier 3 cities which don't per se consume premium brands.
Correct. So what does new launches bring to the table? What's going to be the breakup in terms of the mix, and are margins incrementally much better in premium versus their traditional? Karnataka concerns, those were concerns, of course, which cropped up. Q4 cash flow to a certain extent was subdued on the back of that, but are they firmly behind is what I'd want to know. And now FY26 is their only tailwind coming in with regard to that. Risks from barley, glass, that's the only commodity exposure they actually have. Currently, there is no concern. In fact, last 2 to 3 years, it's been clean in terms of tailwind, no problem at all. Last piece is with regard to margins. They've guided for 12 to 13% margin, but could that surprise on the upside? Because if it does, you could see very strong accretion to profitability, which could re-rate or make a case for a re-rating on the counter. But I'm going to allow Mahima to take it away with regard to what the company does.
Right. So, as Harsh rightly mentioned, it's one of the companies that's present in the alcobev space and majorly has exposure to the beer space, and then IMFL, of course, that's your Indian manufactured foreign liquor. It was incorporated in 1993 and is based in Bhopal and is engaged in manufacturing and sale of beer and IMFL. It sells beer, whiskey and vodka per se, and the kind of portfolio that it has, this is its beer portfolio. Hunter, Blackford, Powercool, Woodpecker as well as Legend are the brands that it has under the beer portfolio. In the whiskey portfolio, it's got brands like Mahawat, this is the recent one, and a slightly premium side of whiskey that premium side of IMFL that they have, and of course whiskey. The other one is Blackford, Sunny, Gypsy and Fox, which are the others in the entire portfolio. Rum and vodka is a very small, very small portion of their portfolio, but they also have ready to drink and mixers in terms of cocktails in their portfolio as well. In terms of where the manufacturing facility stands, they've got 3 manufacturing facilities in India. The total capacity as of their latest presentation, well, this is the breakup in terms of the Hassan plant, the Odisha plant as well as the Bhopal plant. So when you try to sum this entire thing up, overall beer is 38.9 million capacity and IMFL is roughly 4 million cases in terms of where the capacity stands, and they're also expanding, as Harsh mentioned earlier, in the UP, and that allows them a capex of around 600 odd crores. In terms of the raw material exposures, again, as Harsh said, barley and glass are the 2 main raw materials for the counter, and the fluctuation in the prices is something that will impact their margins overall. And it's difficult, in this kind of cutthroat competition to pass on the kind of inflation that takes place in barley as well as glass as a raw material. Lastly, in terms of the breakup of overall sales, as you rightly, as I mentioned earlier, this is the second largest beer manufacturer in India. So beer is around 95.5% of their overall volumes, and 4.5% right now is IMFL. Beer was earlier higher as a percentage, but that's now come down to 95.5. So the other question here also is whether they're actually planning to, give more exposure going forward to the IMFL side of things or not. So that's with regards to where, the entire whole and soul of the company stands.
Well, yes, one piece, Mahima, is the fact that 99% of their sales are focused on Madhya Pradesh, Karnataka, Odisha and Jharkhand, just 4 states. And therefore, UP could be that huge foray, just given the population size scale that UP commands. Largely, margins are stable across geographies. So, a hint into what UP will command on an existing mix, if the mix does not change substantially, you will likely see margins remain as is. Taxation, MRP caps can impact profitability state-wise, but broadly, that's the theme. So that just kind of caps off whatever Mahima, of course, had to start it off with. Let me start off also with now the metrics, and the metrics that we look at is income statement, balance sheet, cash flow, return ratios, shareholding, street cred, there's no street coverage, there's outlook, and thereafter there's valuations. And I'll allow Mahima to start with the income statement.
Right. So, I'll start with the income statement first from a broader perspective from FY22 to FY25, and then see how they've done this quarter. In terms of where the overall revenue stands, the 3-year CAGR has been a whooping 58%. EBITDA CAGR has been around 108%, and the company has gone from a loss of 10 crores in FY22 to profits of around 100 plus crores in FY25. Margins have also significantly improved from that 5% mark in FY22, but has remained in that range of 12 to 13% mark in the past 2 odd years. So that's with regards to where margin trajectory is into picture. So the question really here is that whether in FY26 they'll be able to do better margins, because the guided range is slightly higher, and they've always done at the lower end of what they've guided for. That's with regards to where the overall income statement is concerned. But in terms of where the Q1 performance stands, Q1 FY26 overall revenue saw growth of around 3% YOY basis, but good growth sequentially. EBITDA saw a growth of 9%, and majorly this particular quarter beer companies were impacted because of short summers, so that's also an important aspect to keep in mind. And overall net profit saw a growth of around 2% odd, but the numbers did not seem that bad, considering the other player in the industry also did post similar set of earnings. So overall this quarter is not a festive season, plus early monsoons has impacted beer sales overall, and that's with regards to where Q1 stands. But the overall picture in terms of where the CAGR is concerned, when it comes to their revenue, their EBITDA as well as their PAT growth, it's been a good considerable growth, and that's why we've given it a thumbs up when it comes to the income statement.
Perfect. Yes, the 3-year growth, very, very impressive, no doubt about that. Let me now talk about the balance sheet. And when you're looking at the equity shareholders funds overall, which kind of gets you that book value of 747 crore. It's currently trading at roughly 4 times book. And the borrowing number also doesn't look too substantial at 171 crore. In fact, the borrowing number has come down and has come down materially. The borrowing number in FY20 was around 200 to 220 odd crore, rose in FY23 as well, and thereafter has fallen down, and from 240 crore in FY23, the borrowing number currently sits at 170 crore. So you've seen elevated borrowings which have now been quickly repaid, which is a thumbs up, which is a positive. Plus you're seeing very strong tailwind with regard to the numbers itself. So the EBITDA is now well in line to cover that borrowing number. So no concern there. Cash balance of 20 crore is all right. And broadly, we've given this a thumbs up because the balance sheet clearly improving and the top line growing very, very quickly and without taking on considerable leverage. So all of those are positives. Mahima, cash flow.
Right. So when we take a look at the entire cash flow picture, the cash flow from operations, as compared to FY24 and FY25, it has come down. But with regards to where the overall growth is concerned, it's been a considerable growth. But the ratio that we always talk about here is the cash flow to EBITDA part, the operating cash flow to EBITDA part, and that's been declining, which is why we've taken a conservative approach here and given it a neutral rating. The net cash flow position, however, has improved from a 3 crore in FY23 to a 6.57 crore in FY25. But considering everything in place, the kind of capex that they're doing right now that's in place, plus considering how they'll be funding that capex, we'll have to see as to how that plays out on the cash flow side of things, and that's why we've given it a neutral rating as of now.
How that plays on cash flow, how that plays on return ratios.
Return ratios,
and
correct.
let's talk about that. And return ratios have improved significantly. They had a couple of tough years post-COVID. FY20 was okay, but FY21 was a year where there was considerable pain, FY22 as well. But FY23, 24, 25, we've seen mid to high teens in terms of ROCs, which is very healthy. So really, we'll give this one a thumbs up as well. Hopefully, it's sustainable. That's really the question one will have to ask management as well. But broadly, no concerns at all. 16 to 18% is quite a healthy ROC. Shareholding pattern, Mahima.
Right. So, if we take a look at the shareholding pattern, the promoters have been slightly increasing their stake. Of course, not a 50% plus stake here when promoters are concerned, but from a 33% to a 38, almost 39% in March 25. FIs hardly hold any stake in the company. It's been in that 1% mark in the past 3 odd years. DI is also, not a lot of interest there as well, but public shareholding is very large here. So it's come down from that 66% mark to a 59% mark, but it's a very high retail investor stock. But just because there is less FI interest here and the promoter holding is not beyond that 50% mark and plus a very high retail invest, we've just taken a conservative approach here and given it a neutral rating.
Perfect. So street cred, let's quickly move on. 1 month, the stock price is down 4%, but otherwise, 6 months up 37, year to date up 35, 1 year 36% up. So clearly doing very well for investors. The stock is a 16 bagger over the last 5 years. So it's done very, very, very well for the retail investor. So we've given this a thumbs up, no concerns there. Outlook, Mahima.
Right. So FY26, the revenue growth guidance is anywhere between 20 to 22%. Management expects a volume growth of around 18 odd %. The growth will be driven by expanded capacity is what they're saying. They've expected to, maintain the EBITDA margins at that 12.5% mark. They've gone out and said that no QIP or equity raise is something that is on the cards. And management has repeatedly emphasized that, the funding of capex will not be done via any equity raise. So this is with regards to where the overall outlook for FY26 is concerned.
Okay, I'll talk about valuations. 20% growth, 12.5% margin odd is what I have assumed as part of my valuation thesis. The top line therefore goes as is on your screen. FY27, I've assumed a 16% growth only from a perspective that management themselves are guided for a 2,000 crore aspiration in terms of revenue. Could there be an upside? Well, if new capacity were to come through, certainly could be. And therefore, you're seeing the kind of valuations that you are on your screen, 21 times price to earnings 1 year forward, or maybe 6 months forward now. And then thereafter, 17.5 times, if I look at it, the FY27 numbers broadly. Of course, not factoring in incremental depreciation, if that were to be booked broadly, this is the number that we're arriving at. And those are some of the assumptions on your screen. And mind you, the 5-year average price to earnings multiple that this one has clocked is around 25 times. So already trading at a discount. Despite that, we've been slightly more conservative on this count, given this one a neutral, because you have other players as well, which are trading maybe not at similar valuations, but have potential to obviously compete. And therefore, you want to wait and watch whether those growth forays actually play out or not. And therefore, let's stack up all of the rating parameters that there are, and that gives you no thumbs down across all the parameters, and it gives you a very healthy 6.5 out of 8 on our KYC rating for a soap distilleries. That is obviously impressive. It's been that kind of company that we've seen today. Let me bring in JK Arora, who's the managing director of Soam Distilleries, and to talk to us about, of course, what the future holds. Mr. Arora, great having you. Good morning. I'm Harsh, with me Mahima. Let me first start off by asking you, what is it that UP holds for you as an opportunity? Your expected growth is going to be 20% FY26, maybe 16 odd percent FY27. How much of that growth is going to come from UP? What's the mix looking like?
You see, UP is the most progressive state from my point of view in the country. The way the administration, the way the government is functioning is amazing. My experience with the UP government, if I tell you, is really a very, very comfortable, very, very supportive atmosphere. That's one, to put up the unit there. But this is not the sufficient. UP is you appreciate it, the 6th largest country in the world, alone UP. And if you see their revenue in just 5 years of time, from 10,000 crores they have reached to 40,000 crores. So they are not believing in, any kind of, Dakoslabaji, that this liquor is this, liquor is that, and this. And they simply say, if somebody wants to drink, we are nobody to decide what you want to drink, what you want to eat, what you want to wear. It's not our job. So if you are drinking, our job is to tax on the liquor, and we have to have the revenue. So this thing, if the consumer is available on the metro station, you put up a shop on the metro station. It's as simple as that. So this attitude brings in a lot of revenue growth, and market has become really, really big. So any liquor company in India, I would say, cannot do without UP. UP is one of the biggest market, most progressive market in these things. So UP, of course, UP, the players are already established there. It may take little time for us to penetrate the market, but since we are already there, and our acceptance of the brand is very, very good there. Right. So we hope that UP will be going to add a lot of value to us.
Got it. Mr. Arora, just want to try to understand. You've said that you'll do that 2,000 crore by the end of FY27 in terms of top line. How much of that are you expecting from UP in the early stages? And let's say going forward, 3 or 4 years down the line, what will the sales mix look like from UP versus other states?
UP, you see, we are expecting in first financial year, which is going to be the coming financial year. We are hoping to commence the production in the month of maybe January this year. So settling down, for all practical purposes, you take the next financial year. So we are hoping to add at least minimum 300 to 400 crores in the first year, and 500 to 600 crores in the second year from UP.
That is large. Do you believe that you can exceed that 2,000 crore growth number top line guidance by FY27?
You see, we have always been quoting a conservative figure. If you see our past interviews, whenever we have quoted some figure, so we have already surpassed that figure. We have already always done better than what we have quoted. So this is our little conservative estimate. But as of now, we want to stick to that that estimate. But I am quite hopeful. This thing, but the UP will take 2 to 3 years to be in the full potential, to exploit full potential from this thing. But UP is going to be definitely one of the most profitable and most progressive market for us. That I am sure.
Sir, then I want to understand that how does your mix change in terms of premium versus your popular segment? Because the trend right now in the Alcobev space is that premium products are picking up and they are aiding the margins as well. So do you think that the premium contribution will go up? If yes, what will the mix be like? And then how will the margins going forward look like, let's say 3 years down the line?
You see, you have put in a very, very relevant question. This is the most burning topic as of now, this thing. You see, when I started career, on that time, this liquor is called Indian-made foreign liquor. Means the liquor, which is a foreign drink, made in India. That's why the name terminology is Indian-made foreign liquor. So at that time, putting any Indian name was a stupidity. I recall when I started career in '87, we put up a new our first brand, Sunny Whiskey, and our competitor has put in a brand name Sholay. On that time, Sholay movie was on a very this thing. So that was a matter of laughing stock in the market. Okay, how you can put up an Indian name, but now you see the whole chemistry got changed. Now Indian name is being accepted worldwide, not only in India. So this thing is now altogether. So all premiumization is being happening on the name of the Indian names. We have recently launched a whiskey in Madhya Pradesh called name Mahavat. It's a beautiful packaging, beautiful product. So, and next week we are launching in Delhi also. It's a premium product, this thing. So that's it. And hopefully in next 2 months, we are launching a single malt whiskey. That's name is Bhimbetka. That Bhimbetka is a place which has got a 10,000 old civilization, which is a wall paintings exist there. Bhimbetka is a tourist place in Madhya Pradesh.
Right.
So that's what it is. So we are on to premiumization on the IMFL.
Right.
You see, we are the only company who are available in beer and liquor both.
Understood.
You see, last three years, there was a huge growth in the beer. So we have tapped that potential.
Right.
Now, since looking to that potential, all governments have started putting the lot of taxes. So beer growth is now a little slow. So we are on to now IMFL, which is doing full. So we are the only company which is playing in both liquor and beer.
Understood.
So that is the advantage with us. Yes.
Understood. So sorry for interjecting, but we just have a couple of minutes left with you. So I want to make the most of that time. In terms of the mix itself, currently you're sub 10% on Indian-made foreign liquor. Where does that go to when you do 2,000 crore of top line in FY27? Give us that number broadly. I understand you may not have a hard number there.
20%.
Excellent.
Yes.
Excellent. And so therefore, what does that do to your margins? Because tough to believe that margins will remain 12 to 13%.
The margins in liquor is always better than beer.
Yes.
So there is no doubt about it. So margins are going to be better. It's no way going to reduce. So
how much better? So would you inch towards 15%?
Not exactly 15%, but it is definitely better. If you see this quarter, our margins are better than the previous quarter.
Yes.
In our last quarter, March quarter, it's about 23 crores profit. This is more than 40 crores profit.
Got it.
So this thing, it is showing this thing. Our IMFL volume in the last quarter is IMFL sale is just double what we have sold in the same quarter last year. This year, in the same quarter, IMFL is the double.
Understood.
So you can clearly feel where the focus is now.
Understood. Thank you so much, sir, for coming and speaking with us. That was very, very insightful. Viewers, I believe we've got enough on our plate in terms of the guidance that Mr. Arora has given. Very clean, very clear. 400 crore in terms of the sales from UP and FY27. 400 crore in terms of IMFL, which will be 20% immediately off the bat by FY27 itself. And therefore margins likely on their way up. You might want to tweak those valuation numbers a little bit. Completely out of time on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
Brought to you by Syntex, Saaf, Safe, Sahi and Tata Capital. Count on us.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है
जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान जय हिंद जय हिंद।
हेलो बोलिए मैडम डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको हम और आप तो जन्म भी नहीं हुआ था हमारा
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ कौन सा गलत काम कर रहा हूँ मैं
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Let me lay out a scenario for you. On the one hand, you have the choice to go to a Diljit Dosanjh concert, and on the same day, you have the option to go to Kerala to enjoy the backwaters and everything that entails. If you choose one over the other, you're going to have to sacrifice something, and that is opportunity cost. And that same concept can be used to describe a lot of things in the financial world, particularly when it comes to investing in something over the other. That's what we're focusing on today with a few examples. Join me on this conversation is Kirtan Shah, the Managing Director of Credence Wealth. Thanks so much, Kirtan, for taking the time. I hope that I've laid the context well enough. And I want to focus on a social media post that you did recently where you talked about this concept in relation to an investment in insurance versus mutual funds. Can you give us the context though?
Alex, firstly, thank you so much for having me on the show. It's always a pleasure. Like you rightly said, and you laid it very beautifully to start with what opportunity cost is. And I'm sure that a lot of investors who hear us on this conversation would now realize how before 2020 COVID happened, FD was considered to be a great investment. And it's only after 2020 that a lot of investors have understood how a fixed deposit post-taxation does not even beat inflation, and hence a lot of retail investors have started moving investments to the capital markets. That's the prime example of opportunity cost, right? Because to try and avoid the risk that your capital may go down, a lot of investment would go to FD, right? But if you don't move that to the capital markets, you're missing out on the opportunity to be able to create wealth. So this is one example on the financial side versus the example that you gave on the leisure side. I'll come back to the post that we are talking about, Alex. And I think it's very important that the investor community understands this, because a lot of us who typically talk to the investor community, we know for a fact that the investors don't know about this. I'll give you an example. So somebody wrote to me on social media saying that I'm investing in an insurance product in which you invest 2 lakh rupees every year for 12 years. After that, for 5 years, nothing happens. And from the 6th year onwards, the insurance product pays you 1,15,000 each year for another 35 years. And not just this, at maturity post that, the product will pay you 48 lakh rupees more. Now, typically, when you tell this to anybody who's a retail investor and in general, not very financially educated, they will not really understand how good or bad this investment product is in terms of returns that it'll generate. They will only be appealed by how 1,15,000 is going to be received for 35 years. And after that also a 40 lakh rupees or lump sum payment is to be made out. But if I tell you that if you do a CAGR calculation on this particular investment that I spoke to you of, it is 3.7% XIRR, right? This is as good as what a savings account will pay you over such a long period of investment horizon.
I want to delve into that before we go ahead, because Kirtan, when we talk about 3.7%, and we've also used XIRR, which I think, and I've done a show on this as well to tell people, okay, understand this is what XIRR means, this is what CAGR is, this is what point to point is. Why don't you explain it while you're doing it as well? So 3.7%, which calculates the effective rate of return you would have for every installment, accounting for every installment over the course of the investment period, right? So explain that. And 3.7% is minuscule, isn't it?
Oh, absolutely, Alex. I mean, in very simple language, your XIRR or IIR or CAGR, whatever term that you are really using, it is nothing but the compounding return that you've made on your investment. So when I say 3.7% is the IRR or the XIRR, in very simple language, it means that the 100 that you invested in the first year became 103.7, and then you got 3.7 on 103.7, right? And so on and so forth. It's plain simple compounding interest. And like you rightly said, that 3.7 is nothing. And you are talking about an investment which is going to span for 50 years. And it is so complicated that you probably once start investing, you can't even come out of it, because there are 100 of charges that are going to be applied to you, and you would not even be able to calculate whether it makes sense for you to stay invested or come out. And this is exactly what opportunity cost loss means, right? That if you've invested in a particular product which is so long, right, and it does not allow you to get out of the product very easily, you are actually losing out on generational wealth creating opportunity. Because versus this, had I even done a small term insurance and invested the rest of the money in PPF, which is probably an apple to apple comparison because PPF is also fixed income and it gives you the same tax advantage, I would have still made easily 6.5%, 7% there. Or probably, let's say, if there is somebody who really understands that the product is only going to make 3.5% or 4%, those guys would have not done that and done probably a term insurance or a mutual fund SIP. The output would have been significantly higher. Of course, I understand mutual fund and term insurance is not an apple to apple, but I'm saying that if investors understand opportunity cost and how much are they letting go of, probably they'll be able to make much more prudent decisions. But unfortunately, in the insurance business, they don't talk about XIRR, or it's not even spoken about in any documents which are presented.
Yeah, it's a very important point. And also in this example, we're talking about the product that is being quoted. You're talking about 12 years where you're seeing nothing, right? No, actually, not just 12 years. You're investing for 12 years, 2 lakhs every year, and then you have to see nothing for 5 years after that. So 17 years where you're seeing absolutely not a naya paisa of what you put in. And then after that, you get 1 lakh. So you're signing away quite a few years of not receiving anything. But since you mentioned mutual funds, you've actually got the working of what would happen if you invest for that period, and it comes up to a whopping 21.3 crore rupees. And this is important to note because you've not even assumed a very high rate of interest, or not interest, but return. You've talked about 10%. And I'm not saying that what we've seen over the last several years is a benchmark for what happens going forward. But even if you say that nominal GDP growth, which is economic growth in our country, is expected to be around 10%, and you expect that for a benchmark Nifty 50 investment, if you're putting that 2 lakh rupees every year in the Nifty 50, you can expect 10%. Is that how you worked it out?
Yeah, so I was looking at a very simple situation where I'm saying that, there is going to be some tax component to this and some money will get towards the term insurance cover to make it a match to match product of what we are talking, and hence instead of 12, let me consider 10%. But even if you do this same calculation at 6%, Alex, in the worst case situation, you are still going to receive a maturity of 3.7 crore versus the 48 lakhs that the product is offering to you. Now, if you can manage to generate 6% return, which I don't really think is a big challenge at all, right? After adjusting for everything, you are still 4 or 5 times better off than what the product ends up paying. And that is the opportunity cost that you are paying because you don't know where are you investing.
And more than that, you're talking about 1.15 lakh rupees being paid to you at the start of the 18th year or in the 18th year. You're looking at 1.15 lakh and you're thinking, hey, that's a sizable amount of money today, but effectively in 17 years, that's not going to buy you very much because the money is not appreciated in line with inflation, right? And so what you could buy with that 1.15 per year is probably going to be consumed in max to max, maybe a couple of months, if not more. Would you agree?
Oh, in fact, the math is very simple, Alex. If you look at a 5-6% of inflation also, and you see that your product is paying you 3.5-4% of return, that's a clear loss of 1.5-2% on inflation adjusted basis, right? So your money is only growing on the paper, which you're not even realizing how much it is growing by, but you actually lost money by doing this investment on an inflation adjusted basis. But the problem with unfortunately this product recommendation or selling in general is it is typically sold in the disguise of guaranteed returns and tax-free returns, right? And that is what appeals the investor community.
Yeah. So unfortunately, it's a product that is pushed a lot. But a couple of things to bear in mind, therefore, and there is an element of opportunity cost if we're talking about what is the ideal investment, or not. I shouldn't even call it an investment because insurance is not meant to be an investment. It's supposed to be something that takes the risk of something happening to you and shifts it to the insurance company for which you pay a premium, and that in definition is called a term insurance product. For a period of time, you're paying the insurance company to transfer the risk of something happening to you to them. Why is this the most important product to look at in the insurance, or the only product to look at in the life insurance space? And is there an element of opportunity cost that comes into play here as well?
So Alex, thank you so much for firstly asking this question, because unfortunately when I talk to a lot of investors and I tell them that term insurance is actually the only product that you need, the first question that they come up with to tell me is that if I take a policy, I pay premium every year, and if nothing happens to me at the end of the policy, I don't receive anything back. So I always counter to them that, aren't you happy that you are alive? What do you want more money to come to you?
But another example, sorry Kirtan, just to cut you off here, apologies, I do want to say something, right? You have a beautiful car. It's something that you're very proud of, and they say that you spend more time in your car than you do in other places, so it's effectively your second home, and you have to get motor insurance for that car, right? And if you don't claim it at the end of the year, do you stop and say, hey, what happens to my money? No, you're happy that your beautiful car has not gotten damaged. And that's the same thing for your life, isn't it? If anything, it's more important with your life.
It's just funny, Alex. I mean, that's the way, all of us look at investing and money in general. But I think you asked a very interesting question, that while term insurance is the best product within the insurance gamut for you to really put your money in term insurance also, there are a lot of other variables that you might want to ignore, right? Because exactly the thing that I spoke to you of, that the investor community is concerned that if nothing happens to me, I don't receive anything back. To solve that problem for the investor community, there are multiple options within the term insurance space also that the insurance companies have come out with. And I really want to use this medium of our conversation to tell the investor community, please don't go for anything else except for plain vanilla term insurance, because there is opportunity cost there also. Let me explain. Let's say I'm 35 years old. I want a policy till 75. Let's say for the next 39, 40 years. At my age of 35, a plain vanilla term insurance is available at 22,500 rupees a year as premium for 1 crore of insurance, right? What this product is, every year I pay 22.5 for 39, 40 years. And if nothing happens to me, nothing is received back, right? But to solve this problem, the insurance company will come up with a product which says premium will be paid back to you if nothing happens to you. So what happens is, if you opt for that product, then your premium from 22.5 moves to 42.5, right? So you are paying 42.5 each year for another 39, 40 years. And if nothing happens to you, then you are expecting all the monies that you've paid to come back. Now I'll tell you some math. First thing is that they don't pay you the 42,500 entirely back. They will deduct GST. So what you get is roughly 36,000. Now, if you multiply 36,000 by 39, 40 years, you will roughly get 14.5 lakh rupees back. Now look at this. If I invest the difference, okay, the 22.5, which was plain term insurance, and this other product, which is 42.5, if I invest the 20,000 of difference, even at 6%, right, my maturity value is going to be roughly 23.5, 24 lakhs, which is 10 lakhs more than what the insurance company is paying. Or the other way of looking at it is, when insurance company pays you roughly 14 lakh rupees back, they've ideally paid you only 2.77% returns on that additional 20,000 rupees that you've paid. So I always keep saying that investing is extremely simple. People like us make it extremely difficult, right? In term insurance also, you ideally only want to go for the most simple vanilla product where you receive nothing back if nothing happens to you.
Yeah, because it is not an investment, it is an insurance product. It is a risk, a shifting from you to the insurance company. Remember that, and it's a cost that you bear in order to ensure that your financial dependents are taken care of. So it's very clear. It's like an automotive insurance policy. You're happy that nothing happens to your car. The same is true for you. But you can stretch that opportunity cost to another a very important conversation, which I think is the talk of the town now, Kirtan, where interest rates have been falling, right? So everybody's talking about either getting a loan or repricing their loan or bringing the interest cost lower. And again, this is an interesting point that you raised, where you have the option of reducing your EMI or increasing your increasing your EMI or increasing your tenor. You say that the tenor is more important because you can actually invest the surplus. This is also an element of opportunity cost, isn't it?
Oh, 100%. I mean, if I can share the math that
Please
we are
do.
discussing,
Yeah.
that give more clarity to the audience who's watching us. Let's say, and this is an actual data, right, that I'm quoting. Let's say you started a 50 lakh home insurance in 2010. Home loan, sorry, not insurance. You took a 50 lakh loan for a tenor of 15 years. The interest rate at that point in time was roughly 8.45%. That would have taken your EMIs to 49,091 rupee. So if it's a 15-year loan, 180 months into 49,991 will roughly be 88 lakhs 36,000 that you will pay to the bank at the end of the 15-year tenure. So if you've taken a 50 lakh rupee loan and you pay back 88 lakhs, you've typically paid 38 lakhs as interest more, right? Now versus this, if you actually, instead of a 15-year loan, take a 20-year loan, right? What will happen is, because your tenor has gone up, your EMI will come down. So now your EMI, instead of 49,000, will become roughly 43,233. And if you invest the difference of 5,857 every month as SIP, mind you, we are not asking anybody to invest new money. We are saying your original EMI was 49, now it's become 43, so you invest the remaining 6. This is not new investment. Now, if you invest this this remaining 6,000 rupees, then the math so beautifully works out in your favor, because at the end of the 15th year, you paid the bank roughly 78 lakhs, right? Which means you pay 28 lakhs of interest versus 38 lakhs that you had paid in case 1 that we were discussing. So your interest outflow went lower. What you have to pay to the bank, which is outstanding because it's a 20-year loan and we are talking at the 15th year, is roughly 21 lakhs. But the 6,000 SIP that you did in the last 15 years, actual data point has actually become roughly 33 lakhs. So from that 33 lakhs, even after paying some taxes, if I pay back the 21 lakhs that I owe to the bank and close the loan, I will still have 11 lakh rupees roughly left with me. My loan is also closed. And that is the power of making sure that you are investing correctly and probably the opportunity cost. Of course, here the argument is whether or not what happened in the last 15 years will happen in the future or not, but and also whether you will be able to continuously be able to pay the cash flow in terms of EMI or not, and whether you want to be debt free or not. But I'm saying from a mathematical standpoint, if you're a disciplined investor, you have the risk appetite and you're confident on the cash flow, this is a much better way than trying to prepay your home loan, because probably the investment that you are doing will end up doing much better over a longer period of time than the rate at which you got the loan.
So, I love the way that you illustrated this, Kirtan, because the numbers do bear out. I just want to ask, when you've talked about this SIP on a monthly basis, 5,857, you've looked at the Nifty total return index. So therefore, the returns would be roughly what, between 12 and 13% over that period, roughly?
Yeah, so it's an actual Nifty 50 PRI number of the SIP started in 2010 up to 2025, and the actual number is 13.91%. That's an actual number for the last 15 years.
Right. Okay. So, and we're not talking about very large figures here. We're simply talking about a 6,000 rupee SIP. And as you said, this is not new money. This is what you might have paid anyway if you were taking a 15-year loan. And effectively, both of those loans are closing in 15 years. So there are a few nuances, though, to this that I want to discuss with you, Kirtan. I'm not finding fault. I'm just discussing possibilities. And these are things that people talk about, right? So when we're talking about a 15-year or a 20-year loan or a home loan, because these are the large loans that we're talking about, effectively what you're saying is that the way that these are constructed is that you're paying your interest at the start, and over the course of the loan period your principal gets repaid, right? And most of the principal payment is concentrated towards the end of it, which is why people say that even if you pay one extra EMI every year, that is going towards principal repayment and you're dramatically reducing your interest cost. Does this improve the odds even on that kind of a calculation?
So I'll give you another interesting data point that might help the viewers understand. Let's say if you've taken a 1 crore rupee loan for the current interest rate that prevails in the market over a 25-year loan, your EMI will roughly turn out to be 80,000 rupees a month. right? Now, in the first year, when you pay the bank 80,000 into 12, which is 9,60,000, close to 8.5 lakhs of 9,60,000 that you are actually paying is going towards interest, right? Now, if let's say you are extremely disciplined and you keep paying this EMI for the next 15 years continuously without missing anything, right? You've still paid back the bank only 35% principal. And in spite of paying your EMIs for 15 years, you still have a 65% principal repayment yet to be done, which is happening in the last 10 years. Another thing that you have to understand, let's say I talk about the last year, 25th year. In 25th year, when you pay 80,000 into 12, which is 9,60,000, the interest on that 9,60,000 is only 50,000 rupees. Now, what am I trying to tell you? In a 25-year home loan period, if you are in the first 15 years, you might as well want to pay as much as you can back to the bank, because that is the time where you are actually paying most of your principal. But if you are in the last 10 years of the 25-year own loan, please understand, when you are returning money, it is not making a lot of difference because your EMI is only paying the principal.
Yes.
The interest that you are paying is very little.
Yes, yes. And that's exactly the point that I was making. So it depends on where you are and here in the context of what we're seeing right now. So assuming, Kirtan, that you took a loan maybe 2 years back or 3 years back, maybe 2 years back. You're in a situation now where the interest cost is significantly lower in the system and you're within the first 5 years of your repayment cycle. So you have the option of reducing your either reducing your EMI or reducing the tenor. So the question that I have for you in this situation is that between the two, generally they say don't reduce your tenor if at all possible, because your interest cost goes up. But what you're suggesting is that if you reduce your EMI, the amount that you can invest on an ongoing basis goes up, and you can take advantage of that to bolster your saving over a period of time and use that lump sum that you can at some point of time in the next 5, 7, 10 years to knock off a good chunk of your loan. This is effectively the concept that you're talking about, isn't it?
100%. So there are two things. I mean, to sum this up, either if you are somebody who believes that, I want to live debt free, right? Then my suggestion is that if interest rates are going down, do not try and increase your tenor, right? Keep the tenor same and try and pay the same EMI so that your loan gets done very quickly. So don't reduce your EMI, keep the EMI same so that your tenor reduces, right? But if you're somebody who's going to invest, then definitely this is a great opportunity, like the example that I gave you the last time, that you might just want to increase the tenor, reduce your EMI and invest the difference, which is going to be far better off at the end of the 15th or the 20th year than just trying to continue to prepay your EMIs.
Okay. And we haven't even talked about incremental increases in earning potential, because this is something, Kirtan, that a lot of people experience when they do take home loans. They stretch a little bit in the first couple of years and then it becomes more comfortable. It's like maybe new shoes that you buy. Once you start using it a little bit, you get more comfortable. I don't know if that's the best example, but effectively you have more money to pay, and so therefore you can contribute more rather than prepaying your loan. You say invest more, and I know that it's not a blanket way to approach this, but if you are to invest that surplus or that difference, what is the way to do it? Because people often gravitate to the most risky investments, which is, in this case, you're talking about small caps or you're talking about thematic sectoral funds. Is a simple index strategy the best approach here?
Oh, 100%. I mean, look, the basic funda here is very simple, right? That if you're paying 8.5% on your loans, then you might want to invest it at a place which is going to make you more than 8.5 after taxes, right? So if you're not going to prepay but invest that money in an FD, you might as well prepay. So the only objective way of doing this is, if you're not going to prepay, right, you might as well want to invest this in the equities market. And the best way to go about it is to do a large cap, flexi cap or an index, unless you are extremely confident that your cash flow is not going to become a problem over a period of time to be able to make the EMI payments, and you can take risk on this investment and want to generate higher returns, right? If that's not the case, so flexi cap or an index or a large cap fund will really solve the problem.
The last question that I had is, we've spoken about mortgages or home loans, but people often go for car loans, 6-year, 7-year or whatever, 5-year car loans, right? Is this valid on something like that as well, or would you knock off these loans very quickly if you have the option?
See, actually here what will happen is, because the tenor is so small, the compound is not really kicking, right? So whatever we are trying to discuss, it looks beautiful because it actually has the tenor where the investment gets the opportunity to compound, which may not happen in a car loan.
Yeah, that's a fair point and an important clarification. Kirtan, as always, absolute pleasure having you on the program. Thanks so much for joining in.
Thank you so much for having me.
All right, well, that brings us to the end of this edition of Your Money Matters. It's been an absolute pleasure bringing it to you. Let us know what you think in the comment section and do stay tuned. This is NDTV Profit.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है, आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
हेलो बोलिए मैडम, डब्बा टेलिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. I'm here actually in Alua, which is very close to Kochi, right next to the airport actually. And we are here at Federal Bank's head office. And I have with me the pleasure of talking to Mr. KVS Manian, the MD and CEO of Federal Bank. I wanted to call you a newly minted, but then I realized from your team that it's been a year.
Almost.
I've not quite realized that it's been a year now. But I just wanted to, start this conversation off with a slightly...
Thanks, Rishi. Thanks for coming.
Thank you so much for having us, sir. I just want to start this conversation off with a very simple, easy question because I have come to this room to interview your predecessor. At that time, there was a very prominent Rahul Dravid bat that he did not want to move.
Right.
And I was in your conference room a little earlier and I saw there's a Sachin Tendulkar bat now. I'm just trying to understand, one of the core ideologies of Federal Bank was to be a staid, very competent, very yes, regional, but also national sort of a bank, right? How are you viewing Federal Bank now that you've taken over, now that you're running things at the bank? How are you viewing the future?
I would say that my stint is taking forward the journey that the bank had commenced a few years back. I think under my predecessor, Shyam, he did try to take the bank relatively more national than it was when, compared to when he joined. And I think that journey is not yet complete. That journey is still half done, and we need to do more of that for sure. So the way I look at it is, it's Federal Bank is a unique franchise in that sense. If you see, there are very strong points in the franchise. For example, if I take you through some of the uniqueness of this franchise, there is no bank which can claim, other than if you keep SBI aside, there is no bank which can claim any territory where they have 18-20% market share in deposits, right? No bank can claim in India. Federal can claim that for Kerala as a state, right? And Kerala is not a small state, it is a medium-sized state in the country. On non-resident, I think there is a significant franchise that the bank has, easily among the best franchises in India for non-resident. In fact, even the inward remittances, we hold almost 20% market share in inward remittances. Federal Bank is the largest gold loan bank, private bank in India. If I keep the PSUs aside, among the private sector banks, it is the largest gold loan bank. Also, the franchise is not built on rates as a proposition, pricing as a proposition. The CASA franchise, the term deposit franchise, the liability franchise largely is built on a solid footing of the brand being accepted for its service, for what it delivers, and relationships and things like that, and not price driven, right? So these are significant strengths of the bank as I come into the this. So the way I look at my role here is leverage these, build on these further, but also leverage this to take it beyond Kerala. Sure. We have dominating market share in Kerala. We need to build relevant market shares outside Kerala, in other states, right? So that's the journey. I think, so I would say it's a continuum, and I have to build on various things. There are also many more things to do. So that's again the beauty of the franchise. It is strong in many ways, and there are many more things to do. For example, I think our small business current account franchise is not as strong as what it should be, or our wealth franchise is not as big as it should be, or our trade and forex kind of offerings are not what they should be. So I see a great opportunity where the strengths can be leveraged and new things can be done to take the brand to newer heights.
Okay. February this year, you announced the Federal Bank 4.0 strategy to the analysts, right? And in that, you had some very aggressive sort of plans for the next 5 years as to where the bank should be, will be. I'm trying to understand from you what were some of the key areas that you thought would happen a little later, but maybe happen sooner. Maybe like, for example, the fact that you've broken into the top 6 when you were 9th earlier, right? Yeah. So what else has happened under this 4.0 strategy?
So I wouldn't call that aggressive, the strategy. Yes, there is stretch in it and there is ambition in it, yes. So I would call it ambitious or with a stretch and not aggressive.
Sure.
Because why I use that carefully, because by aggressive you might get an thought process that we are going to take on more risks and do more aggressive lending and things like that. That's not, if you see the plan, it is not based on that.
Yes.
It is based on a clear. So, if I oversimplify that plan, it has three key elements to it. One is building the CASA franchise stronger, especially CA, and SA, maybe take it the upper end of SA, focus on upper end of SA, because we have a good franchise on SA. If you look at our overall CASA of about 30%, we were 24.6. In fact, 6 is already 7 today, right, in current account. So I think one important thing is to build the CASA franchise and of course the deposit franchise overall. So the idea was to, first pillar of that strategy was that. Second pillar of that strategy was what I called the middle yielding assets. Improve the mix of the assets. We were far too weighted on the asset side on corporate and home loan as products. Almost 45% of our balance sheet was focused on these two segments, and that meant our NIMs were generally always under pressure because those are relatively lower yield products. So we needed to change the mix on the asset side, and when we change the mix, we are not getting into I also said that we don't want to do very high yielding assets, 15-20% of the balance sheet, and therefore get the yields up and therefore build a barbell kind of a strategy. We don't want to do that. So what I said is, let us focus on the middle yielding assets where marginal uptick. For example, we were doing home loans. Can we do a bit more of LAP? We were doing commercial vehicles. Can we do a bit more of used commercial vehicles? So things which are not significant change in risk parameter, because there is a DNA of the firm which is relatively well managed. Risk, I won't say risk averse, it has a certain appetite for risk. I don't want to dramatically move that appetite up. I want to operate broadly within that, maybe a marginal uptick to that where the risk return trade-offs are better. Move it inch it up a bit more, the risk appetite. So that's the strategy. That's why I was saying not aggressive, right? So on the asset side, marginal improvement in the mix will also give us some important uptick in the performance of the bank. That is the second. And third key pillar of that strategy was how to enhance our fee to assets ratio. And fee broadly, we are focused on cards as a business is a fee-oriented business, and therefore we want to grow our card business. I mentioned a while back about the wealth proposition. Our wealth proposition has relatively been not exploited that much. Just to give you a sense, on NR, we have 90,000 crores of banking AUM of NRs, right? They're CASA and term deposits with us. But we have very little of their wealth AUM. We do not have a strong enough offering on that side. So I see that as a big upside. And then, of course, we also said that we want to focus the bank into small businesses, and therefore products like cash management, trade, forex, these are important. So build fees through these. So these are the three key pillars of the strategy, the February strategy that we are making good progress on all of them. If you look at the last 2 quarters, our CA has progressed. Our CA has, from 6 has already moved to 7. I had said we want to be at 10 in the medium term. So we are making good progress on CA. On the mix of the assets, there is clearly visible our documents that we publish give you clear indication that our mix is beginning to change, and our fee performance has been quite strong in the last quarter. Again, if you look at our fee performance, it has been quite strong. So there is visible impact of some of these initiatives that is showing. Of course, we have just begun the journey. It's a medium term journey. It's not a so we want to position the bank to a place in the next 3 to 5 years, at a place where it can be top 5 in many parameters. Of course, like you said, we are 6th in the size of business now, asset liability together. 6th to 5th is still a long journey, but more importantly, I think it's not about the number 5th or 6th. It is about how we can improve the quality of earnings, how we can improve the presence, how we can improve the brand presence across the country, make it relatively more nationally acceptable brand. All those qualitative things go into that journey. When we say fifth is just a kind of a pole there to watch out for. Yes.
I wanted to ask you a bit about what the future course of business looks like. When you're talking about cost optimization, that was something that was core to your plan. I'm trying to understand, what does cost optimization look like for a private bank that is functioning in 2025, is looking at a slightly more ambitious, as you said, plan to grow, because one would expect cost is part of ambition.
Yes. So, it's interesting you call out cost optimization. But, the way we have looked at it is, yes, we need cost optimization, but I have not built in any benefits out of cost to income over the next 3 years. That is not my key criteria to grow. While we'll optimize costs, we will reinvest during this period and probably keep the cost to income around the levels that we have today. There is a reason for that, because my belief is that there are enough revenue levers that we can pull, which can improve the cost to income, and therefore we will do that. And as we grow the franchise in, let's say, metro cities, for example, our metro penetration is lower than what I would like it to be. So if we add metro network, it's costly, right? But I have to therefore add costs. So the way I am looking at it, we'll have to play a very calibrated game where we build upsides in revenues and therefore build costs according to that, so that we can overall keep the cost to income where it is broadly, give or take, but broadly at the same place. If benefit comes, it is bonus. But right now, I have not baked in benefits out of cost to income ratio, while we will cost optimize. Now, coming to cost optimization, there are multiple ways we can do that. For example, I believe that our branch operating model, we are already in a journey where we are trying to change the branch operating model from being overly branch centric to centralizing or regionalizing some of the activities and leaving the branch to do more sales, customer engagement and service, right? So I want the branches to do only 3 things: acquire new customers, engage existing customers, and serve customers wherever branch service is required. Today we do a lot of other work at the branch. So we are already on a journey where we are trying to take out some of those operational activities out of the branches, and I believe this will lead to cost optimizations in the medium term, right? Because you will make them more efficient as you centralize. You will do it at lower cost. Branches are the most expensive real estate you are sitting on. Your staff at the back end can be lower cost. All the operating costs are lower when you centralize, right? So I think there are cost optimizations possible by changing operating models on many businesses, particularly branch banking and many other businesses as well. So we will optimize costs, but we are not saying that we will dramatically reduce cost to income ratio, at least in the next 2 to 3 year time frame.
I'm glad you brought up the branch point. I want to come to that, but before that, the cost also has a net interest margin impact. I'm just trying to understand, Q1 you've dropped below 3%. Understandable, across the industry it has happened to all banks because of the monetary policy stance at this point in time. How are you planning to push it up, considering that monetary policy itself is very uncertain in the current global framework?
Right. Of course, our base case just now is no rate cuts from here. But who knows? I mean, I know several polls are 50-50 on that. But I am in the camp, let's say, so let's start with the assumption that there is no further base cut, and we have seen for at least next 12 to 18 months more stable interest rate policy, let's say. If that is the case, I think, we have a T+1 repo rate adjustment to our loans. We drop the rates the day after the repo rate changes. Some banks go up to 90 days, right? Banks go up to 90 days to change it. So in that sense, we take an accelerated hit at when it is downward. So in that sense, last quarter we took an accelerated impact of repo rate cut. So we expect the balanced impact on repo rate cut to be much lesser in the second quarter. So we think we are close to the bottom. Maybe we have guided 5 to 10 basis points further drop in NIMs, but not more than that. So we think we are close to the bottom, and from here we can grow. And all the three initiatives, at least two of the three initiatives I talked about, three pillars that I talked about, two of the three pillars are NIM enhancing, right? As we grow our CASA and the proportion of CA more, it is NIM accretive, so we will add NIM. And as I move to medium yield assets from lower yield assets, it improves the yield on the assets, and therefore again it is NIM accretive. So the two are designed to be NIM accretive over a period of time, and that's the plan. So we believe that, like I said, we are already seeing signs of execution resulting in those changes, but we have to do it consistently over the next several quarters to really see the upside in NIM happen. As you also know, we will get benefits as we go forward on the savings rate cut that we made in June, right? That impact was not baked into the last quarter. So that impact will flow into the second quarter. That's the reason I said that some benefits will come out of our costs as well. And we have dropped our term deposit rates as well. So we have managed costs quite well. Even in the last quarter, if you notice, we have managed our cost of funds reasonably in an agile manner. We will continue to do that, and we hope to get the NIMs back to the 3 plus levels and 310, 320. The trajectory will start following.
Okay. Branch banking, I wanted to talk about that. You called it free the branch. I'm just trying to understand from you, what is free the branch for Federal Bank? Because I read the presentation where you talked about how the branches are structured right now and the kind of changes that you want to bring in. But just for our viewers to make them understand, what exactly do you mean by that?
Right. So like I said a while back, our model was a branch-centric model where branch used to do a lot of activities which otherwise can be centralized or regionalized. For example, a car loan disbursement, should the branch be making, or a central or regional setup can disburse, right? Should the mortgages be created by the branch, or you can have a mortgage center of excellence which can take care of that. So there are lots of such activities where we feel our branches are doing a lot of things. And like I said, branch is the most expensive real estate that banks own, right? And therefore efficiency of that premise is very important, and all our front office people sit in the branch. So branch ideally should be a storefront which focuses on getting new customers, cross-selling to existing customers, and whatever little service cash transactions that have to be done at the branch. And unless they have to be done at the branch, we should not be doing them at the branch, because we should give the frontline teams enough time to acquire new customers and cross-sell to existing customers. So the free the branch is meant as an initiative to do that. So when we did our time and motion studies for our branch, we found that the branches are spending very low percentage of their time on sales and cross sales.
Got it.
And we needed to increase that. So we have already embarked on a model where we are trying to move. So we are following all the aspects of that. There are activities which can be eliminated. There are activities which can be moved digital. There can be activities which can be moved to central. There can be activities which can be made more efficient. We can change the process. So it's a combination of multiple things. It's a large project. Of course, it will span over a year or year and a half to get to where we want to. But we are already on that journey, and I believe that this will make our branches available to customers, the branches, time available to acquire new customers, all of that. I think the brand will benefit from such a process.
I've got three questions now. The first one is about the way you're talking about the mid-yielding assets, right? I mean, except credit cards, which is the only high-yield product that you specifically pointed out.
Yes.
I'm trying to understand, does it bode well for ambition to have a mid-yielding ambition? Or do you think that maybe for now you move from the low-yielding to the mid, and then eventually you would look at the faster yielding or higher yielding products?
So the way I look at high yield is we are currently about 4% of our assets are in what we can call high yield, which is essentially three products: microfinance, personal loans, and credit cards are the three products. You might already have noticed that we are already growing our credit cards business quite fast,
Yes.
right? And in fact, the book is showing that it is one of the faster growing. It's small in base. We are still early players in that. But interestingly, in the last quarter, if you had looked at the net card issued, we ranked fourth in that in the new cards issue.
Yes.
So we are trying to, of course, that's because our cancelled cards are very low. Our base is small, so I'm not as much on the fourth rank. It's not important, but basically we want to grow.
It's an upward momentum that you want to focus on.
And that will add high yield asset. On personal loans, again, I think we are comfortable now with the asset quality or the cycle that we have seen. We do want to grow that faster. MFI is one where I would wait for a quarter or two to get better comfort before I start growing. But having said all that, from our current 4% over a midterm, can we be in the late single digit 8-9%? Maybe yes, and that will add NIM to us. But I am not a big fan, as I told you, of building a barbell strategy where you build 20% of your assets in high yield. That's not my intended strategy. Yes, we need high yielding assets, but we would like to keep it in the sub 10%, which gives us some uptick on the NIM, but doesn't add too much risk to the book and volatility to our earnings. Because these high yield assets also add high volatility to your earnings, and so the proportion is very critical. And so I would say we will follow that. Like they say, खाने में थोड़ा अचार अच्छा है, but अचार के साथ खाना नहीं. So I think high yield assets are the achars.
Okay, let me also bring to my second question, which is about your NR strategy, the non-resident cohort of the customers. I mean, Federal Bank is widely recognized as a non-resident focused bank. Of course, the Gulf countries are your primary source of the NR remittances, but US is also a large participant.
Yes.
In the current environment where the US political landscape is toward penalizing any money going out of the US, especially remittances, they levied 2.5%, if I'm not wrong, tax on that.
It's not yet levied. I think it's a proposal. Yeah, it's a proposal.
I'm trying to understand, does that hurt you, or is that something that you're like, okay, this is part of business, we'll see what other geographies we can grow in?
Yeah. No, so I think some of these keep happening with business. Some geography goes out of action sometimes. So I think we'll have to just ride this. To give you a sense, of course, we have a very strong presence in the Middle East, and even in Middle East, there are countries where we can grow.
Yeah.
Right. Even in Middle East, there is opportunity to grow. That is one. Second, I think also the nature of non-residents business is also changing. Good old days, the large part of NR was focused on either the Middle East or US, but of late we are seeing it diversify into many other European states, Canada, Australia, New Zealand. So I think the NR characteristics of that market is also changing. So I think there is enough opportunity in. We will of course remain focused on US. US is a good market, and hopefully this. Let's see how this pans out. This proposal, whether it gets applied or not. But I think even if US is our second largest territory after GCC, so will US grow lesser if this were to come true? Probably yes. But I think there are enough markets to grow. And last year we have seen NR grow very well and grow well across the geographies. Interestingly, we also have a different opportunity. We also have an opportunity as Federal Bank. We were always good at GCC, of course, but also we were strong in Kerala, right? Non-Kerala GCC is also an opportunity for us, right?
Okay.
So I think there are enough opportunities to offset some setbacks that can happen in some markets. So we remain optimistic about our growth in the NR business.
Final question is around the liabilities portfolio, for the sector as such. I wanted to get a sense from you, some of the private banks out there. are sharply hiking the minimum average balance because they believe that that's the way to A, retain a higher CASA ratio, but also B, to better cross-sell products because you want high-value partnerships with your customers. Previously, bankers have pointed out that the nature of CASA has changed entirely. People are no longer interested in keeping money in their savings account for very long because there are high-yielding products now. If it's not the bank, they will go to the market and they'll make the money there. I am trying to understand from you, where do you stand in this camp? Are you somebody who believes that I need to retain maximum relationship with the customer, so I want your high-value customer base only? Or do you think that banks are an essential service and let people keep money however they want to keep?
So just first to address the macro on the deposit side, one of the beliefs I have is there are three parts to the deposit, right? CASA and term deposit. I think it is a term deposit which is an investment product.
Yes.
CA and SA are transactional products. Yes. So yes, term deposit will face competition from other wealth products. I understand that. I do not agree that CA and SA are competition from wealth products.
Mr. Manian, thank you so much for joining us on this conversation.
It was such a pleasure talking.
Such a pleasure talking to you as well.
Thank you.
Thank you.
Thank you.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है
जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान जय हिंद जय हिंद।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Powered.
Good evening, you're watching The Big Question. I'm Sanjana. For nearly 8 decades, the US dollar has been the anchor of global trade and finance. It's the currency in which oil is priced, reserves are held, and debts are settled. But shifting geopolitics recently, rising regional blocs and growing alternative payment systems are prompting a question that was once unthinkable. Can the dollar's dominance actually shake? If it can, what would replace it? A basket of currencies, regional settlement systems, digital platforms, and what would that mean for exporters the world over, the Indian currency and the markets? To discuss this evening, I have Ajay Sahai, Director General and CEO of the Federation of Indian Export Organizations with the exporter's perspective, Badri Narayanan Gopalakrishnan, trade and geopolitical expert, fellow and former trade head at Niti Aayog on the global shifts at play, and Jayesh Mehta, Vice Chairman and CEO of DSP Finance, a currency veteran who's seen the market cycles up and close. So let's start by understanding why the dollar's grip has been so strong for so long and whether the ground under it is really shifting. Badri, the dollar has survived wars, oil shocks, rival currency pushes before. What's different about today's geopolitical and economic environment that is making some believe that its dominance could be challenged at all?
Thank you very much for bringing me in the program. Definitely, there is an unprecedented situation for US dollar in the recent times. There has been a slight movement over the decades of reduced dominance of dollar, but there is very, very minor movement over several decades. And that is more because of the rise of China, rise of other economies over time. But right now, what is happening is because of all this, tariff uncertainty, the trade restrictions, and so on, many countries have already started, reducing their dependence on the US. And also, there has been increased initiatives by the BRICS countries, even apart from the BRICS currency, which is going to take some time. Even apart from that, there has been a lot of steps taken by various governments to reduce dependence on dollar, and ultimately any currency is just the value is just a reflection of supply demand dynamics. So if the demand for dollar goes down over time, it's going to definitely create a dent on the dollar. So I see that given all these trade situations going on and the rise of new emerging economies, the dollar will continue to kind of depreciate over time. But maybe the depreciation rate may be faster from in the near future. But at the same time, the US government is also taking some steps on this. The recent initiative by the Trump administration on stable coin, promoting the cryptos for backed by the dollar. So those kind of things also may try to salvage the
Okay. So you spoke about the trade perspective. Then Ajay Sahai, does the reliance on the dollar then still serve Indian exporters well, or do you think it's increasingly a cost and a vulnerability? Ajay sir, you're on mute.
I'm sorry.
No problem.
In fact,
Please
so
go
far
ahead.
as exports are concerned, and the depreciation of rupee against the dollar helps the exporters also. In fact, the dominance of dollar comes from the fact that it's a safe currency, it's a stable currency, and that liquid currency. probably definitely countries are toying with the ideas of different currencies, that there is increasing influence with regards to the trading in local currencies also. And I'm pretty sure that these kinds of initiatives will gradually evolve, but I don't think in the short term there is any alternative currency which may replace or come as close to the dollar. Even though US accounts for less than 10% of the global trade, the invoicing in dollar is accounting for over 70% of international trade. And when it comes to the forex reserve, probably the dollar is dominant into that. Of course, the euro has also gained to the extent of 20%. When we are talking about the alternative currency, probably we have to look for a currency which can come as a replacement of dollar. And when I'm looking into the options which are available, I don't foresee any currency which may come as close to the dollar. If we are talking about a new currency, then we have to wait for time. We have to build trust. We have to look for the alternative system also for that to work. So I'm, of course, of the view that probably countries may start trading in local currency, and to some extent, that is an arrangement which will definitely gradually will move forward. So far as BRICS are concerned, I'm not sure there will be any consonance on a single currency which is currently in vogue. We may look into developing a new currency.
But are you seeing that? Are you seeing that at the moment? Is there any kind of settlement or any kind of discussion like that on the cards that you're seeing?
I don't think so, because if you look into the grouping of BRICS also, there are countries who are staunch opponent of US. There are countries who are managing with the US very well. There are countries which have a strategic interest. So I don't foresee any currency which may be emerging. And probably the kind of stance that the US is taking, there's no point in showing red flag to the US at this given point of time.
Correct. All right. So, Jayesh, in pure currency terms, then what core advantages does the dollar still hold over any competitor? The yuan, the euro, or even, your gold-backed settlement systems?
I think, of course, everybody wants a change, as you said in the beginning. I think the Ukraine war and the freezing of the reserves of Russia, and then of course followed by this tariff situation which is being forced on people. Of course, people want now a shift away from dollars. Now, unfortunately, there's nothing readily available, right? US, such a large economy, they have been also issuing so much of bonds, and therefore it has become a global reserve currency. Even if somebody wants to diversify his reserves, any central bank, whether it be India or anybody else, there is not enough large countries who can actually absorb that kind of flaws, right? Today, we have $700 billion approx of kind of reserves, and if we want to do it without dollars, it's just not possible. Maybe over the last 2-3 years, people have increased some euro. People have increased gold, but gold also has limitation as to how much you can increase if you want the physical gold to be with you. So I think at some point of time, we need something to change. People's intention, especially in last 3-4 years, two shocks which has happened, people don't now trust. Of course, nobody says in the open, but people don't trust and they want an alternative, but there is no alternative. It doesn't look like coming for another 8 years, 10 years or so. So we don't know how it will come out. Of course, one of the things is as China is growing, if China's GDP starts growing much faster, but then again, there is a trust factor there too. So I think while people are trying to settle in the local currency and all that, but at the end of the day, the dollar dominates. Your pricing is still being done in dollars. As long as the pricing happens in dollars, whether it is gold, whether it's petrol, whether it is bilateral trade, right? And you may settle it in rupee and AED or whatever it is, but it is still priced in dollar. Therefore, dollar is in dominance, and it will continue for some more years to come. We don't know.
Okay, so while the dollar still enjoys deep trust and network reach, I think cracks are appearing in the system is something that I think all of us are agreeing, which brings us to the practical question, because if the shift begins, how would it impact global trade and India's exporters in particular? Ajay sir, if alternative settlement systems gain traction, do you see exporters seeing immediate savings on transaction costs, or would would the added currency risk and the lack of liquidity offset those benefits?
In fact, of course, if we start trading in local currency, both sides will be adequately hedged. So the cost of hedging will be minimized.
Sure.
And to that extent, it will definitely help the export sector. But then probably the central bank of the two countries have to constantly work on an exchange rate, because with the most of the currency, there will be no direct exchange rate with rupee vis-a-vis the local currency of my partner country. So in a way, dollar will come into effect. It will be very difficult to do away with the dollar. Though, of course, over a period of time, if we develop some mechanism and the central bank of the two countries comes to conclusion that over a period of trend, this is the trend, and therefore we can adopt some kind of non-market driven exchange rate, that may work. So in short, definitely it will help the export sector because they will be insulated from the cost of hedging. How the system will operate, to what extent it will help the export sector, probably only when we actually adopt that, we will come to know about that.
Right. So, Badri, then which global trade corridors are most likely to move away from the dollar first? Let's just say that this actually happens. And how would that affect India's strategic positioning?
Actually, as the esteemed Prime Minister also mentioned, the BRICS coordination has been very lukewarm. There has been some announcements, but then India has already clarified that there is no major initiative towards this new currency and so on. But having said that, if there is any set of countries where this de-dollarization that can happen, it would be mostly Russia and China, right? And then of course other countries which are already deprived of access to dollars, like Iran and North Korea and so on, Cuba and so on. So apart from this, I don't see any other major economies in the world single-handedly dominating. And also there is no concerted efforts by all these countries. BRICS is the closest we have got, but that's also not as considered as we would imagine. And you can see, Euro making some way, but they're also struggling there. So I don't see any major corridor being affected by this, apart from maybe Russia and China to some extent. But China also, apart from we're talking in the context of BRICS, they also, a few years ago, they came up with the sovereign national digital currency, which also has been used to increase the dominance of yuan. But even after that, the yuan's contribution to the global transactions is barely 2-3%. So it's very difficult to do anything against it. What I said earlier was that the dollar's depreciation and participation in the global transactions may come down slide a little bit, but it won't be enough to change the status quo.
Okay, so Jayesh, then could more local currency trade settlements actually destabilize smaller economies if their currencies are not globally trusted?
Won't really make any difference, right? As Ajayji said, even if there is bilateral between country A and country B in their local currency, because of no benchmark, it is then converted into, say, if it is, I'm just giving an example, INR AED, INR, it will be USD INR and then USD AED, and therefore you will derive a price for INR AED. So as long as, dollar dominance in everything, right, is there, every pricing is happening in dollars, it's very difficult to move away from dollars. Yeah, you can do a bilateral, but it's like a barter, right? But you are pricing it off the dollars. So therefore, getting it away from the dollars, it doesn't make any difference unless you have very bilateral match trade transactions. But again, you will still price matched on what, right? So how do you know my export and your import is matching completely? For that, you still price in some currency, and therefore it is all being done in dollars. And therefore, at this juncture, difficult. Everybody wants something else, but it doesn't look like anything available, at least in next 8-10 years, right? Maybe if some new methodology way comes in, but or some country becomes very large enough to absorb that kind of currencies by central bank investing into that. But otherwise, it's very difficult to think at this juncture.
So that's the trade picture, or whatever we can glean of it. But even if there's willingness, the ability to actually move away from the dollar depends on whether alternative currencies can actually handle that load. So Jayesh, a follow-up. To rival the dollar, a currency needs liquidity. It needs convertibility. It needs this trust. Which of today's contenders comes closest, and where do you think that they fall short?
Nobody actually, because there is euro which is there, but again the size is not that large, right? And the size will come actually from the GDP growth, right? So you have US as number one, then you have China, which is the very next after US, but then I think there is because of whatever history or something, people not gonna trust China that easily, right? So that is a challenge. And then rest of the another 20 economic countries, if you add up, it's still some total is not even adding to US, right? So how do you have fragmented? I'm talking about every country, including euro, right? So some other mechanism like Euro brick, people are talking about, like something of that sort may come through, but as of right now, it is more on an innovation stage, and nobody knows whether it will really work out or not. So I think till the time pricing happens, some people talk about crypto, but at the end of the day, you are still pricing the crypto in dollars, right? So as long as you are pricing things in dollars, you may settle in whatever currency, but as long as you're pricing in dollars, it doesn't make sense, right? Therefore, the dominance will continue. Just to give you a layman's example, I and you can settle in gold, but as long as if we are pricing our gold in dollars, right? Directly or indirectly, global gold price and then rupee gold price, and then okay, I said this is a service I gave you. So effectively, we are trading in dollars, right? So that's the issue.
So, Ajay ji, from a business execution perspective, would exporters adapt easily to settlements in multiple currencies, or does that complicate invoicing, hedging, cash flow management, all of those things, if we really need to come down to the practicals?
Absolutely, if you have to deal in multiple currency, accordingly your cost and transactions, everything takes more time and more money also. It will not be possible. I think let us not look into de-dollarization of the trade. Let us look into how increasingly we can use the local settlement mechanism or some other currency, because as other speakers have pointed out, the only country which is growing, which already have a currency, is China. But whether Chinese currency is managed, whether it's market driven, is an issue, and people are not having trust in that. Chinese yuan has been launched as an international currency roughly 15 years back, and they still only account for less than 5% of the global trade, and there too where China is doing it, and China is promoting with Iran or with that matter Russia. So I don't foresee any other currency. If the world agrees for a new currency, that's a different issue. But amongst the existing currency, I'm not seeing any currency which can come even as close as US dollar.
Okay, so then Badri, could technology like central bank digital currencies, blockchain settlements, could this accelerate the shift away from any currency and solving some of these trust and settlement issues?
The US has already taken a major step in the recent months. Right? As I mentioned earlier, a stable coin is going to be backed by dollar.
Right.
And so that way they have kind of taken out the whole blockchain digital currency landscape. China made that attempt a few years ago, but like Ajay mentioned, that has not created any dent because of the trust issues. Because in blockchain, the thing is, it's commoditization of trust. The trust is taken over by technology, but people are not that, I would say, naive or whatever you want to say, to place so much trust on a technology. So ultimately, it depends on who is behind that system, right? So now when US does that, that's going to have much greater traction compared to others. So I would say that the systems are there, the technology is there, but ultimately we are not moving on from the traditional notions of trust. So we, that is only strengthening the position of dollar than anything else.
Okay, so even if the mechanics work, I think the bigger question is, will the world actually trust and adopt a new system? And I think all of us here don't seem to agree with that, or rather that I think we're saying there is no need for that just as yet. So that's where the perception and market confidence come in. Because Jayesh, let's just actually, put ourselves in that scenario. In the event of a sudden move away from the dollar, what kind of market turbulence should businesses and governments actually prepare for?
Well, I'll break this in two parts, right? So one is the settlement part, right? So settlement crypto or gold, barter or local currency can do the settlement part of it. But in terms of pricing, so my biggest question is even stable coin, right? If it is stable coin linked to gold, right, or USD, it is going to get priced out of US dollars, right? And therefore, to get away from US dollars at this juncture is not possible. Yeah, you can, you can have better settlement system. Global settlement system was SWIFT based. Now you have Asia, BRICS, other settlement systems can come, blockchain systems can come, but they are all settlement system. It just eases your settlement side of it. As long as the pricing still happens in dollars, I think that my view is it's still far away, even if you say Bitcoin or whatever technology you say.
Okay, so do you then, Ajay, see Indian exporters proactively pushing for diversification in settlement currencies, or will they wait until that shift is unavoidable?
I think Indian exporters are only looking into two options. Either they are dealing with the existing currency dominated by dollar, or they are looking into local settlement or rupee payment settlement, because these are the two options which are providing them much comfort, as they are completely insulated from the exchange rate so far as exports are concerned. Though, of course, when you are talking about the rupee mechanism, the importer is exposed to those, though, of course, in the local currency, both are being taken care of. So at the moment, exporters are either looking into the existing option or they are looking into trading in the local currencies.
All right. Okay, I think we seem to have lost you there for just a brief moment. But Badri, big picture, does breaking or shaking this dominance ultimately create a more balanced and fair global trade order, or then are we just replacing one hegemon with another?